June 10th. Is it the 10th? I didn't even have to look.
July 10th,
July 10th. Oh my gosh. I'm so bad at the date.
That's all right. It's
Forex
summertime.
focus. That's all you need to know.
Yeah.
Summertime
June,
Forex
July.
focus. And that means pretty decent vibes. People walking into the office 5, 6 a.m. with the sun up.
Big difference.
Sun is here
Monumental.
when we leave.
Huge. That's the biggest.
Big tennis match here today. It's been a couple weeks since you, me, and Clink have gotten on the court. Is there any, what's like a fun nickname for a tennis court? Because there's like the pitch in soccer.
Yeah, the court.
Court,
That's the same
it?
thing. That's the same thing as
Okay.
saying the pitch. The field.
All right.
Yes, yeah. You can call it an arena. There's not really stadium seating.
And Wimbledon is going on right now?
Oh, yeah. Big time. We still have an American hero in it. Taylor Fritz. He plays
Oh, good for him.
tomorrow. Semifinals tomorrow.
Semifinals tomorrow. He's playing
Alcaraz.
Alcatraz.
Yep. So, not looking too good for our American king.
That guy's he's the best. Alcaraz.
He's ranked second, but he's my personal favorite.
Okay, who's ranked first? Djokovic?
No, your boy Yannick Sinner.
Oh,
Who's playing Djokovic.
redhead Italian.
Yep.
That's
Dang.
that is my guy.
Ding ding ding.
Have not seen him play a single point. What do they do?
Correct.
What do they do in
Yeah.
points?
Correct.
But they're 15. Each point is 15.
Well,
it's like a touchdown.
Except when it's 10. It
Okay.
goes from 30 to 40.
15, 15, 10. And then no more points awarded.
And then we're done. And then it's 1.
But it's win by 2.
Correct.
Okay. Who came up with this?
Some Englishman way back when.
That
But you
tracks.
also you went to All You Can Eat Sushi yesterday. Give me some stats there.
Probably put down like, I would say 25 to 30 pieces of nigiri,
Personally.
personally. No?
Keep going.
And then we shared, I think, 3 regular, like, maki rolls. So we went very roll light.
Okay. Yeah.
And
That's
very
the value play.
nigiri heavy.
A lot of
And then,
fish.
of course, if you're going to go to All You Can Eat Sushi, and if they have mochi and tempura Oreos on the menu, little life hack. It's like going to Jamba Juice and ordering the pink Starburst. You put the mochi on top of the tempura Oreo.
Here's a life hack for you. You can take all the desserts they offer, and you can just eat them all
Make
at
them
once.
into a sandwich. You go to an Italian place, cannoli tiramisu.
You load the cannoli, extra stuffed.
That's right. You put the tiramisu on top of the cannoli. The cannoli becomes a vehicle for
Right.
further Italian sweets.
I'm actually on board with that.
But yeah, of course, as is Japanese tradition, a tempura Oreo becomes the vehicle for any other sweets you want to pack on there.
Tempura Oreo, they did kind of nail it with that one.
The only
Pretty
thing
good.
is, the Sushi Taku has to get their tempura technology in line, because the Oreo, I feel like, should be crisp. Like it, and if
You want really?
shouldn't it be?
I don't know. I
It
kind of like that.
if you pick it up with your hand at the edges, it like kind of folds like a pizza slice almost.
See, I think it's genius how they transform an Oreo into more of a baked dessert.
Yeah, I guess you don't want the Oreo itself before being any kind of transformation.
Because if I was
is already like pretty harsh.
right, if
And
I was
so,
just
like, you use
served an Oreo,
Yeah.
then like that's already crunchy.
It's crunchy. And so yeah, you use the milk or the tempura does soften it. Okay. This is why you're here.
No, you have to say it. Say you're right. Because you didn't even say it.
You've raised some good points. I'll rethink my tempura Oreo assessment, and I will get back to you all next time. What do you want to do today? You wanted to. I think. Did you want to change it up? Didn't you want to do like this study first?
do the
Summertime
study
Glenn has
first.
been doing a lot of studies.
Yeah, a lot of research.
Summer
I've been in the
school.
lab.
Yeah.
I need to get my glasses back on. Back when I was on with Crypto Ryan, he would call me his quant.
Oh,
for
yeah.
for no good reason. I did no good research for him.
If you have glasses and you look like you haven't gone outside,
Right.
you're a quant.
Too bad I'm super tan right now. Yeah, let's get into the study first because we want to take our findings from the study, then hop in the platform.
Sweet.
So let's hop over to the slides. Today we're looking at timing mean reversion strategies in low volatility environments.
This is what we're talking about.
This is good stuff. I still have to work on making my titles perhaps a little less wordy, but this
is the best one you've ever
this
had.
packs a punch.
You're learning like I learned, and like how my father learned before me, that what the people really want is like some of the most specific stuff that you could give them, because in this day and age, people are digesting content constantly.
All the time.
And so, like, if you can give me a mean reversion strategy in Forex for low volatility environments, and then you can also give me a mean reversion strategy for high vol environments, trend following, all these different things, my brain at some point digests the information and I can go, okay, that market's low vol and it's at an extreme. What do I do? That market's high vol and it's moving through to a new range. What do I do? I love the specificity of it, as opposed to like, here are the returns of this market compared to this other market. So this is great. I'm excited. You are really cooking now.
All right, let's get into it. Background here is it's summertime, and we've seen some pretty boring dollar markets as of late. So went and crunched the numbers on what the realized volatility is, annualized using a rolling 20-day window. And here we've got also the percentile based on, the past year of those realized volatilities to kind of give you a gauge of where these dollar pairs sit historically to themselves. And that low vol column is the currency pair in the bottom 30 percentile of its historic range. So we're seeing some really extreme volatility compressions in those Australasian pairs. I mean, the 6th percentile for Australian dollar and for New Zealand dollar.
Very sad.
All the same.
Very sad vol numbers on the whole. 5 to 6% volatility. It is not like absurdly low.
Right.
We're not talking about like VIX trading in like the 7 or 8 handle. But like it's pretty low. We've seen all of these pairs hit double digits in the last year of trading.
Yeah.
In terms of the realized volatility, that percentile I think is helpful. We'll probably do some work to make that even easier to digest, just because, I mean, what you're actually looking at here with like a 13% there at the top is just to say that the range of volatility for Eurodollar for the last, I'm guessing you did it for the last year, for the last year is like probably 5 to 12%. It's 13% above its lowest volatility reading.
So 87% of the time, the past year,
it's been more volatile than this.
Volatile.
Yeah. And also what's sad is none of these are even above 50. I mean, not a lot of markets with huge swings aside from, I'm not surprised to see that Swiss franc and Canadian dollar are two of the more volatile ones in here, given that they've been bouncing around historic extremes recently. But all right, good backdrop. So mostly low vol, even the high vol ones not above 50th percentile in volatility, and nothing sniffing 10% plus volatility.
And anecdotally, what this calls out to myself and probably a lot of Forex traders is that in low volatility environments, you tend to think anecdotally that this would lead to higher success in mean reversion strategies because you're seeing similar price levels and not much going on. But we wanted to get into the numbers and see if this is actually true, how often, what pairs, and over what time frame. So what we did is we used the past 6 years of price data for 7 major US dollar pairs. We measured the realized volatility, as you saw in the last slide, and broke up this analysis into a low volatility environment, less than that 30th percentile, and the rest high volatility, so above that 30th percentile. And what we did was simulate trade performance using contrarian trade strategies. So if the pair hits an extreme to the upside, then entering a short position, and likewise on the other side. And what we did was we used the Bollinger Bands, and we'll get in the platform and show you how easy this is, because we use the default settings for this Bollinger Band. And why we did that is because that indicator reacts to volatility. So those bands, it uses a moving average and then 2 standard deviation bands, and that will actually respond to low volatility environments. Those bands will tighten and likewise expand. So a pretty reactive measure when we're cutting up the volatility environments.
I don't understand how how Bollinger got his name on that.
That's a pretty good deal.
Because he definitely didn't invent standard deviations. And it's
No,
not
that was
like
Stan.
It's not like moving averages are called like the Johnson metric.
No, that guy nailed it.
Standard deviations, pretty well understood in the math community for, I have to imagine, at least a couple hundred years at this point. They've been measuring like, okay, like this is what the thing tends to be, and like this is how far it can kind of move around that current average or mean price. But yeah, I mean, the Bollinger Band there is just a quick way and an adaptive way for you to look at what's a big move in this market. And so, yeah, getting above that Bollinger Band is essentially saying, okay, we're outside of either 1 or 2 standard deviations, which is the equivalent of 68% of the data or 95% of the data. So now we're in rare territory. If you're outside of that band, you're in 32% or 2 standard deviations, 5% territory. So rare territory. And you looked at when we got below the lower band, taking a long position, when we got above the higher band, taking a short position. And this is in low vol environments specifically.
Yeah, actually did it for both because I thought it was interesting. But we used that 30th percentile cutoff, and then we calculated the win rate on any positive P&L over 1 to 10 days. So we broke that out and we averaged it. No stops or take profits here, just directional P&L. So what we saw first is I tested whether this low volatility mean reversion thesis even holds across dollar pairs. And what we see is dollar pairs are actually split. It isn't necessarily across the board that low volatility leads to higher success in mean reversion strategies. But I mean, the clear winner here for that thesis would be this Australian dollar, with the average win rate in low volatility environments a full almost 12% higher than when in high volatility environments.
It's pretty wild. The more these studies that we do, the common theme that we're seeing is that commodity currencies, specifically, Aussie and Kiwi, have been very mean reverting the last several years. You just I forget the other study that you did, but it was essentially, what was it like, looking for like reversals,
right? And
then what was the one before that?
When to get long U.S. dollar?
Yeah. When U.S. dollar's getting hit like it has been this year, which pairs could you have gotten long U.S. dollar in the last handful of years? And it showed a good reversal. And it's been these commodity currencies, as Aussie and this Kiwi. Surprising to see that the dollar-yen pair has shown a good amount of mean reversion in both environments.
Right. Agreed. And especially interesting that the euro, Swiss franc, and Canadian dollar have not only higher win rates in high volatility environments, but that's pushing all 3 of those above 50%.
Yeah.
When they weren't in low volatility environments.
So better. Okay, so euro Canada and Swiss franc, better high vol contrarian trades, and yen is also in there above 50%. But in low vol contrarian trades, you're looking better with the Aussie, the Kiwi, and the yen there.
Yeah.
Okay.
So let's break this out. Let's keep that in the back of our minds as to which is better for low and high.
Yeah, this is only like 15 to 20 numbers. I can keep those in the back of my head for sure.
Okay. So good thing I've done some color coding. So when I hit you with more numbers, bang.
You love numbers. This is.
But this is hopefully you don't have to read all of this. Seriously, you only have to read one per line, and I've even highlighted which pair this is the optimal environment for. So this is low volatility, looking at contrarian plays with those criteria, and which day, how long it would take for you to get out of this position with the most success. And so
this is amazing.
Look,
you have truly gone too far.
You don't have to read it. All you have to do is see 1 to 10, and all the green numbers, the highest probability, are centered in the 1 to 5 day range.
All you have to do is look at this for 20 seconds.
Not even.
Let it stop hurting your head, because it hurt
Okay.
my head for 15 to 20 seconds. And now I do understand what you're saying, that, okay, we're in a low volatility environment in this study.
Yes.
We are also currently in most of these major U.S. dollar pairings. I'm looking at contrarian strategy, which is what's the criteria for this contrarian strategy? I already forgot. There's so many variables that I can't remember with this friggin' study.
If it touches one of the Bollinger Bands,
Okay.
so
Low,
standard deviation.
low vol.
Low vol.
I got my Bollinger Bands on my chart.
Yep.
Or I'm just thinking about standard. It's the same thing as
Correct.
like euro dollar standard deviation right now is probably like 40 points. And so like when it gets out of, is it one standard deviation or two? Okay.
2.
So when euro dollar breaks out of like a 70 or 80 point move right now in a low vol environment, I'm entering into a reversal position, a contrarian position. I'm shorting it if it's up 80 points. I'm buying it if it's down 80 points. That euro dollar metric here is telling me, okay, there's a positive win rate to that contrarian trade in the first few days.
Right.
And you highlighted the first day, even though the third day has the same win rate. But I guess it is probably better to, if you've got the same win rate, same strategy or whatever, take the profits a little earlier. But it is, the way you can look at that is, okay, you've seen a reversal in this low vol contrarian trade the first couple of days. Whereas you're looking at some of these commodity currencies, and I'm looking at you, Aussie, on the top row, and Kiwi on the fourth row, the middle row there, and you're seeing some of the best win rates actually in the middle. And then actually there's a little bit of a tail with both of those, where the win rates 7 to 10 days out are also pretty positive, so can be a little bit more of a longer term contrarian play in those. Whereas, yeah, the European currencies, that euro and that pound, although I don't know if the UK, that was an awkward thing when I was in London. It's like, are they European or not? It's always like UK and euro area, and it's like, all right, I get it, everybody. A little bit quicker maybe on the trigger for taking profits for those. And again, yeah, that yen, I'm surprised to see in low vol how mean reverting that pair has tended to be.
Yeah, you nailed it. That maybe the most actionable takeaway here is if you do put on one of those contrarian plays in a euro dollar market and you have or haven't seen success, the study shows less favorable for you to just keep holding on to that.
Yeah.
And it's interesting because when we flip over to high volatility environments, that trend goes kind of out the window here. And so here highlighted in green, the pairs highlighted in green, where this is the optimal mean reverting environment. So that euro, that CAD, that Swiss franc, it could still take longer here, longer than 5 days for those to mean revert. So if you aren't seeing a pop right away, perhaps there is rationale to hold on.
Yeah, my takeaway
longer.
for this would be, one, the pound has been an awful mean reversion trade in general. The stats have been bad for both environments. Two, in low vol environments, you've been able to get some mean reversion relatively quickly in a few of those pairs. In the commodity currencies and that yen, you can wait a little bit longer. It seems like you've been able to. That is not indicative of future results. There you go, TJ. But in high vol environments, it is interesting to see that those time horizons can kind of get kicked out. You probably have to have, and it makes sense, you have to be able to take a little bit more heat in high vol environments. You have to be able to take a little bit more time to probably see that mean reversion that you want, whereas it could be a little quicker in low vol, and the pound is just not a great mean reversion trade the last 6 years, no matter how you look at it.
Agreed. So your key takeaways here is that underlying thesis, low volatility does not mean across the board U.S. dollar pairs are always more likely to mean revert, but we do see Australian dollar, U.S. dollar is the most mean reverting pair by far when volatility is low. Similarly, you're seeing win rates in Euro, CAD, and Swiss franc only above 50% when volatility is high. In low vol environments, that less than 5-day trade exit generally holds up better, whereas in high volatility environments might take a little longer.
Do you want to pull up the platform and show people how to put on? Why don't we just pull up Aussie, put a Bollinger Band on it, and kind of show people what the heck we're even talking about?
Yeah, that'll do it for
numbers.
the slides, and we'll hop into the platform here. Taking a look at our mover of the day is the Australian dollar. Here looking at the hourly chart, coming off of
so classic, just
some new highs.
Just got up close to a new high and just getting annihilated as we speak. The most classic Aussie thing that we could have seen.
So yeah, here flipping over to the daily chart, what we can do is you can add Bollinger Band right here from the indicators. Does this require any more setup? No, because we're already looking at 20-day periods with 2 standard deviation. So play with it if you'd like, but for the study's purposes, this is what we went with. And you're seeing a couple times here would be an example of trade entry right here. Took 1, maybe 2 days to get back into that range, but did.
Pretty quick, yeah.
It's over the past, since this, here's where these bands tend to widen out in reaction to this huge move. But since May, really pretty tight bands and not straying far from this range. Pretty sticky to this Bollinger Band.
Yeah.
So that would be your validation for that study, at least historically.
Cool. Well, yeah, let's see if we get a move up to 66 or down close to 64, because that's what the bands are showing us right now. Hopefully we get some kind of move and we can try to test it in the future. Nice study.
Thank you. Economic calendar today.
Oh.
Not much, but we've got some Fed speakers. That's sure to rile some people in the office up.
Of course.
Maybe they'll say something notable.
That guy's name looks like Mausoleum. Maybe there's a joke there, or like Museum.
Waller, Wall Street.
Yeah. John Daly's speaking at 1:30. You're too young for, you don't know John Daly?
I know John Daly.
Okay.
Late night.
Let's get out of here on that. Wait, late night?
Just kidding. Golfer.
All right, that's it.
All right, that'll do it here for us today on Forex Focus, but a lot ahead on Tasty Live, so stay tuned for Tom, Tony, and Vanetta up next.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Hola, Thomas. How are you today?
Hola, hola, hola.
Tom, why are you at home?
You know what?
And why is it winter?
Because my house is so damn cold now. They fixed the air conditioning this year. Now I can't even, it's too cold.
Oh, that's not good for a girl your age. That's not good.
I know.
You are a delicate little flower.
Yes.
I know.
So
I
tell
know.
us. Did you hit something on the way to work today?
What do you mean?
What are you doing at home?
Oh, you know what? Because I decided that I'm going to. I got a bunch of errands to run and stuff like that tonight. So.
Oh, sure,
So
sure.
you
It's good to be king.
appreciate flexibility within your workday to still be productive and get things done, but also take care of some other issues should they arise?
Not at all. I wouldn't do that. I wouldn't even consider that until 3:30, until after everything. But
Okay.
yes. Plus, I got somebody coming to fix my
To pipe.
Yeah, exactly. It's an irrigation thing.
Yeah.
The irrigation thing. He is unbelievable. Your use of the vocabulary is amazing, Sosnoff.
You know, I got these irrigation things. You wouldn't know about this stuff.
I know. No, I know. It's too
man
complex.
stuff. Yeah.
Yeah, but today in the office, it was like an elite lunch. Pleasant House. I love Pleasant House.
I also love Pleasant House.
I know.
But, I didn't realize that.
That would have changed the calculus of your decision.
Oh, 100% it would have, I'm sure.
Most definitely.
You could still swing by, for, at 10:30 for lunch, breakfast.
No. Nope. I've actually already prepared my lunch today. It's beautiful. I've already told Beth. It's this is a little outside of your guys' kind of range of lunch options, but
because we don't keep expired food.
Scope of understanding is what you're trying to get to. But go ahead.
Scope of understanding. This is pork schnitzel.
Wunderbar.
You know why you're having that? You know why you're having that, right? Because I put that in your brain. I put that in your brain from when I went to Culver's.
Pork schnitzel?
Yeah, I told you. That's what they had. They had like a breaded pork sandwich.
Oh, I didn't know. No, actually, I thought I don't remember that, but no.
Don't sleep on the fish sandwich and don't sleep on the breaded pork sandwich if it's there. I'm telling you, it's really good.
Breaded pork tenderloin is a hallmark of the Midwest as like a whole.
That's true. But
we get it from our German immigrant, so the two are, related, so it's fine.
They are. I will give you that.
So wait, how are you going to cook it, Tom?
I'm going to bake it.
You're going to bake it?
Oh my God, you become one of those?
Yeah.
Where did you get your schnitzel from?
It's a good question. I don't remember the source, the origins, but I don't think it was snipered.
It's just... Well, normally you get everything from Costco. I didn't know if Costco had pallets of schnitzel.
No, I definitely don't. It's definitely not from Costco. Never had Costco schnitzel. If they have it, I don't know. I might make a Costco run this weekend, though.
I was there yesterday.
Oh, really?
Yeah. But at the good Costco, your Costco sucks.
I might make a Costco run this weekend, but I have to see.
Come down to my Costco. My Costco's good.
Not going down the south side. Get shot.
All right. No way. No, it's all just like tiny little Asian grandmas that will push you out of the way.
Push you out of the way real good too.
Yeah, but they have good Asian food though at mine.
I do want to go to that H Mart.
H Mart, yeah.
Never been there. It's on my list.
There's a good
pass one when you
store.
come out to the suburbs this weekend, Saz.
I've never been there. I've heard really good things.
But you're going to pass one. You don't even have to go to the south side, is my point.
So wait, Tom, what are your plans for the weekend? Are you playing golf or are you?
Yeah, I'm playing golf on Sunday.
Oh.
Sunday I have a very important day. I have golf early in the morning, at a very hard golf course, and then I'm going to play, and then I'm going to have lunch at Carson's with the boys and take Tony out for his birthday.
Wow.
I feel like such the wanted date. I mean, I got Tucci taking me out now. I got my wife taking me out on Saturday and Sunday. I got you taking me for lunch. I'm gonna have to put a salad in between there a little bit.
He's gonna have a big giant pork chop, whether he likes it or not.
Whoa, hey, we don't judge, man. However you want to celebrate your birthday, you celebrate your birthday.
I'm getting pork for my birthday.
So Sunday I got a full day, and then we got the show Sunday, and I'll be home in time for the show. And then Saturday, good question. There's a huge street festival right in my neighborhood, and
celebrating my birthday.
Of course.
Which street festival?
Like it's an art festival on Southport. They shut down all Southport.
Oh yeah.
It's not as good as Old Town, but it's a nice one. Mm-hmm. So go there, and then they have something in Ravenswood near where around the coffee shop. So I'll be there.
Okay.
And then I have to do a little. I've been summoned to do a little assistant to the babysitter.
Oh, assistant to the branch manager. So your daughter called your wife, which was the right call, and then you are just in charge of ordering the food.
I'm in charge of ordering the food and walking the dogs.
There you go. That you can handle.
Oh, yeah. And that was a stretch.
Yeah. I can order the food. Yeah.
You can still.
So wait, how is little baby Cohen? Is he's 7 months now, kind of?
6.5.
Okay, I'm so sorry. I did not get it to the. I'm sorry. I don't know exactly when.
Now
he
you know
popped
how I
out.
feel on the show when I say stock's up, $3. He goes $2.97.
No, he's good. He's walking.
I'm sorry, I do not have his pediatric
He's walking.
chart in front of me.
He's walking,
talking, just like I was.
He's walking down Michigan Avenue. Yeah,
just like I was at 6 months, walking and talking.
Right. He's working
he's
on his
potty trained already, like Tony was at 6 months.
Yeah, he's working on his first algorithm. Yeah.
Yeah. He's making we're hoping he makes his first trade by the time he's 9 months.
Yep.
You're on the clock, baby Cohen.
Yeah, you're on the clock.
See, that's funny. Nice. You get to do pawpaw stuff. So what do you want him to call you? What do you want to be?
Tom.
Mr. Sosnoff.
I'm no.
You're no. Oh,
yeah.
no.
Yeah.
It's a little early right now, so I'm not going to worry about that. But
okay.
I still haven't passed all my certifications to have solo
and you never will. And that you should not be solely responsible because you can barely take care of yourself.
Also true.
Right. So I have to be supervised.
Yeah. That's good. I feel good about that.
Yeah.
Well, Bat, it is your birthday eve. You are on the precipice of what, turning 70?
63. Happy
wow.
To get there.
God, you look old for 63. God, I really did think you were closer to 70.
I knew I could count on you, my man. I knew I could count on you.
No, so what are your plans for your birthday extravaganza, eleganza?
Well, like I said, I got Tucci. Tonight. Graciously said he was going to take me out, which is good. I got my.
Do you also only eat food with your hands with Tucci? You guys feed each other with your hands?
Yes, my wife used to do that for Ethiopian food, but we haven't done that in a while. Still up in the air whether we go to Sophia Steak or crepes. I don't know. Help me.
I don't know.
French, yes, you do. The French.
Le Colonial?
Le Colonial, thank you. Or Le Colonial.
It's okay, I speak boomer.
Oh, don't do Le Colonial.
I'm going for my favorite pizza place with the family on Saturday.
What is your favorite pizza place up there?
I like this place called Country Time Saloon in Des Plaines. I got to take you. I said I got to take you. I
actually never heard of it.
I got to take you. It's been around forever. It's great tavern pizza.
Oh,
really good.
Countryside or country style?
Countryside Saloon Des Plaines. You'll like it.
He's trying to Google something by himself. Aww. Aww.
How cute is that?
Enhance.
Enhance. Countryside Saloon. I'll have to read the reviews. I've never even heard of this place. Actually, I don't even know where Des Plaines is.
Been around since the 60s. You've been in the area. It's not too far up the expressway. You'll love it. It's excellent. Great outdoor area to sit at. Food's food. The pizza's phenomenal.
Oh, that sounds great with the family.
Yep.
I love these places where you can get everything from ribs.
Well, it's a bar. It's big screens for watching games and stuff like that. It's a great place to go with a bunch of guys or, family, kids, it could be loud kind of thing because we got the little baby with us. So it's easy.
You go, girl.
That seems wonderful. Happy birthday to you, Bat.
Thank you. I already started drinking. I put a little bit of Irish coffee in here. I'm all good.
That's fun. I'm not mad at that. I think that's wonderful. Well, all right. Well, anything else going on?
That's it.
You guys don't care. You guys don't care about my weekend plans.
Oh, come on, tell us. I care. Don't be like that.
No, you guys don't care. Okay, it's fine.
I care a little.
No, you don't. Not even a little bit, but that's fine.
A tiny bit I do. Don't be like that.
Anyway, all right. Well, we got a great show for you today. How about that? I'm going to just minimize some screens here. A lot of really good content. We made it to Friday. It is always more difficult to do a full week after you've had some time off. But we're powering through on this fantastic Friday here on Tasty Live. We are headed your way at 8 a.m. The weekend stocks, Jamal in the house. Quietest week of the year. If you have any friends or family that are first responders, you know that you never say the Q word because that will jinx whatever situation you have during your shift or your on-call or whatever. But Jamal's just throwing it out there. He says quietest week of the year, so we're going to be lock limit down today. No, I'm just kidding.
Well, we're starting. Even the S&P is down 32. That's the biggest. We had some of the biggest moves last night that we've had all week, to be quite honest with you.
Yeah, that is true. That is true. Well, Jamal's going to recap everything. Had some Fed minutes, had NVIDIA being the most valuable company of all time, have some geopolitical shenanigans. Jamal's going to break everything down. That's at 8 a.m. 8:40. It is hashtag Fan Friday. That means fast market headed your way. So where viewers submit their trade ideas and Tom and Bat try to do as many trades as possible. Maybe there will be some birthday trades in there for Bat. We'll see. I don't know. And then 9 o'clock, our market measures today. Capital efficiency through portfolio margin. What does that entail?
That's an interesting one. I mean, it's for a limited audience, but I think it's something different. So.
You mean like it's rated R? What do you mean it's for a limited audience?
Well, some people don't know we offer portfolio margin, and some people don't know that some people don't have enough capital for portfolio margin. But it's good to discuss, we're trying to get the research team to talk about things that they're a little different and different parts of the business. So that's what this is.
Interesting. Oh, that's very helpful. That is a good clarification. And then my personal favorite, live from the trade desk, big boy Scotty S. Scott Sheridan, counting down the top trending tickers over at Easy Trade.
With his food review of Katz's yesterday.
Ooh, I am actually looking forward to that. When he was on and he was talking to you about pizza places, I've been to that new hip tavern place, Zarella. It's when my friend came in from New York. I went with a couple of girlfriends of mine. It was really good. It's in the old GT Fish and Oyster spot.
Oh, I did not know that.
They revamped it. It looks really good in there. Like you would never know that it was something else, but they did a really good job with the decor and the tavern style offerings. Like we ordered like 4 pizzas for 3 girls.
Nice.
But it's good.
I have not been there yet. But Scott did the pop-up Katz's yesterday. And
is it one day only, or is it going on for a while?
I don't know if it was 1 or 2 days, but he said they were here for the Windy City Smokeout.
Oh, that makes sense. Okay.
And so they were doing a pop-up for 2 days. His review is going to be that it was good, good, but not New York.
Oh, he's coming on today. We're taking questions from him. He can speak for himself.
That's fair.
I am very curious what his review is. And Bat, I hope he got you your mustard.
Me too.
Oh, he did not. There was nothing for sale, he said.
What kind of capitalism?
Now, I mean, at least I had something to look forward to 9:30. Now you ruined everything.
Yeah, what kind of capitalist society are we in that they don't like route you through a gift shop at the end? Missed opportunity. Everything has a gift shop. I just got a mammogram and I went through a gift shop.
Yeah, I do not like that, by the way, when they route you.
You don't like mammograms? No.
I don't like when places route you through gift shops and duty-free stores. Drives me crazy.
That's the Disney model.
Yeah, you're right. It's capitalism.
Every store you go
baby.
through in Disney, you got to go through every ride you go through in Disney. You got to go through the gift shop. You have to. It's the way to do it.
Exit through the gift shop. Yep, there you go.
Yep.
Anyway, well, Scott's going to be on, and that is our run of show. Hey, what do you say? Dr. Jim is in Boston this weekend, yes?
Yes, Dr. Jim will be heading out today, or I'm sorry, I think tomorrow. Heading out tomorrow for a show Sunday night.
Mm-hmm. Yes. And then next week, you guys are going to be in Denver.
No, 2 weeks.
Are you sure? My bad. Okay,
2 weeks. 2 weeks from today.
Okay, good.
Looking forward to it.
Yeah, we're excited. Yeah.
Are you going to hike a 14er?
Yes. We're gonna.
Do you even know what that is?
Yeah, 14 Peaks or whatever it's called.
14,000 feet. There's a bunch of 14ers. 14,000 feet. Okay.
Oh yeah, we're gonna do 14,000 feet in the morning, and then the afternoon. Yeah.
You're gonna set a new trail record.
Yeah, we're gonna do it before the show. Show's at 8. We have to be at the facility by 8, so we'll probably go up at 6.
Yeah, most people are at the trailhead by like 5 a.m., honey. You got to get those gains in early.
Yeah. We'll be there.
Gains.
Yeah. We'll go as far as we can, and so we can still make the show.
You can go to our tastylive.com/events to see when we might be coming to a town near you. But hey, in the meantime, in a between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire.
This just in.
Top story. This just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's July the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Also, so excited. Best day of the year because it is 7/11. It is Free Slurpee Day. Pew, pew, pew. When we were at the old office, me and my girl Tracy, who's the Tasty Live marketing manager, we would go to the 7-Eleven and then we would put on disguises and then we would go back because we could walk to it from the old office. There's a 7-Eleven on Monroe and free Slurpees, baby.
It's good stuff. You can get it.
When's the last time you guys had a Slurpee?
Ooh.
Oh, it's been forever.
It's been forever.
Like on a hot day, it hits.
I like a Slurpee, but I just haven't had one.
I don't know if I like them or don't like them. They're kind of, I can take them or leave them.
I don't like the sweet ones. I like the.
Oh, they have
you like
non-sweet
the savory ones? You like the chicken broth flavor? What are you talking about, you weirdo?
Right, thank you, Vanetta. Thank you.
I like the ones, the Diet Coke ones.
Oh, okay.
Diet Coke ones.
That's sweet, but okay.
Unbelievable.
Well, there's 7-Elevens up by you. I've seen them.
There are 7-Elevens.
Yeah, so you're home today. It's in your shuffle zone. You go to 7-Eleven today. Oh, he's thinking about it now. He's looking outside.
I'm trying to think of where there is a 7-Eleven.
And probably like on Foster or Montrose, somewhere up. I don't know. They're up there. You have 7-Elevens near. I know I've driven past one.
Yeah.
Now he's looking it up.
Yeah, I'm not sure where they are.
Hey, well, it's not till Sunday, but you could pass one on your way to lunch.
No, but they're free today. They should be free.
Yeah,
Anyway.
I know that's the difference. I get it.
Anyway, this is a part of the show we talk about today's financial news and headlines. First headline of the day, nice little move in the extended trading hours last night as Wall Street and European futures skid as there was a surprise announcement about new tariffs on Canada and the EU. That sent the dollar higher. European stock futures slid in Asia after President Trump stepped up tariff threats against Europe and Canada. Canada is being pounded against the dollar right now. What are you doing? Let's talk Euro and Canada.
Euro's basically unchanged.
Canada is not being pounded against the dollar. It's only down.
Small. Everything's small.
Yeah, 100. It's nothing. It's only 150 pips after the rally. It's had its monster. I mean, there's nothing to talk about. I have this visual of like Trump sitting there with the two other idiots, Besant and who's the Treasury, who's the Commerce Secretary?
Lutnick.
And I have those three guys sitting around just going like, should we do 45? Yesterday, Bitcoin opened up like almost 3,000 higher right at 3:00. So that had nothing to do with the tariff stuff. And
right.
Gold's the only thing that really moved. Gold and crude oil moved a little bit on the news. Crude oil jumped maybe 50 cents and gold jumped maybe $20.
Well, in other news, conversely, we closed at new highs yesterday in the S&P and in the NASDAQ. And this headline says the stock market now is clearly overbought, but overbought does not mean sell. What are your thoughts on this when SPX is at all-time highs?
I agree with that headline. It's overbought, but overbought does not mean sell.
What?
So,
you have to take back every snarky thing you've ever said about MarketWatch.
Well, I mean, because they get 1 out of 100 headlines right. I mean, overbought to me means there's really good pot odds to the downside, but it doesn't mean that we're rolling over tomorrow. And, like we talked about this yesterday. All of us on last call thought the market was overbought, but we're all like, it's overbought, but,
volatility still remains pretty low.
Right. How short do you want to get here? If you're going to get short
going into the weekend, yeah,
we're all leaning short. So it's not like there's. I mean, I'm short today, but doesn't mean anything. Like I want to see some follow through. Like there hasn't been any kind of follow through. Like we talked yesterday afternoon, 63.30 new highs, whatever. Yeah, we all thought we were overbought, but. Again, I agree with the headline. Overbought does not mean they're going to roll over and go down big.
Okay. Oh, wow. I should just quit while I am ahead. Have a good weekend, everybody. I've been Vanetta.
Thank you and good night. Thank you and good night.
Thank you and good night. Tip your waitress. No, that's fine. Bond ETF inflows surge as demand returns for treasuries. Demand for bonds has surged in the past week in the ETF market as U.S. government debt reversed outflows. Net inflows into fixed income ETFs soared 70% through just Wednesday to 5.3 billion as investor appetite for treasuries returned. Let's talk about how bonds are going to finish the week.
They look a little bit weaker right now. They're down 19 ticks because they can inflow them with a little bit more at a lower price.
And what are your thoughts on bond ETFs?
Well, first, a couple of thoughts about this. Number one, the headline's a little bit ahead of itself because bonds really haven't gone anywhere at all. And
it didn't say that they'd gone anywhere. It just said that people were putting money into bond ETFs.
That's fine. But let's be realistic about, you're talking about, almost a $50 trillion marketplace, and you're talking about $5.8 billion of inflows.
In 3 days.
And let me put some context around this for you, okay?
All right, you drop some knowledge.
That's less than a fraction of 1%.
Okay.
So it's like 1/100th of 1%. So to be fair, that number, 5.8 billion, may sound like a lot, but given the size of the bond market, it's really nothing.
Yeah, but given that there was previously lots of outflows, it's just indicative of.
Okay, let me rephrase this. Let me rephrase this a different way. Bond ETFs are not how most people trade bonds.
How do most people trade bonds?
They actually use the cash market or the futures market. They don't. Nobody.
Are you sure? Because I'm pretty sure most people are just in like their Vanguard bond funds.
Oh, that's something different. Those are money funds.
Okay.
That's different. But when you talk about bond ETFs,
yes,
those are not mutual funds. Bond ETFs.
Yeah.
They're very small relative to the market. They're tiny little instruments.
Okay. Well, what are you doing in bonds to finish the week?
I'm long them. I've been buying bonds, and I'm still long them. And I didn't buy any today, but I'm on the cusp of.
You didn't buy $5.3 billion worth of bonds today?
No. But I've been buying them all week, and I'm probably going to buy some ZBs if they get back down to, like, let's say 113, 16, 17. I just wanted to see where they kind of formed a little bit of a bottom first.
Okay.
He's being patient.
In other news, I thought that they had been talking about this since like 2012. I don't know what's taking so long, but trading and market making firm Virtu Financial threw their support behind a proposal by IEX to launch a new U.S. options exchange. IEX has proposed, again, I'd heard about this like a long time ago, but they want an options exchange that would introduce a 350 microsecond delay on trades, sort of a speed bump that they say would curb advantages held by high frequency traders and would level the playing field for market participants. Again, their words, not mine. What are your thoughts on this?
My thoughts are that my thoughts have never changed about IEX. It's an idiotic concept. It's never caught on. That's why people don't use that exchange. Why would anybody want to slow down anything?
Right. That's what doesn't make sense to me.
It never made sense to me. The idea, I mean, they're trying to imply that high frequency traders can somehow hurt you. Nothing could hurt you more than a 350 millisecond delay. So, I mean, you're going to have Virtu's, Virtu, I don't know why Virtu's behind this, except to think that maybe they can't break into the traditional world because they can't compete with the other high frequency firms. That's all I can think of. Mm-hmm. But IEX has never made any sense to us in any level, why anybody would use that exchange.
Okay.
I mean, I don't understand why anybody wants slower fills. It just doesn't make sense to me. Speed bumps for slower fills.
And it's never caught on. I mean,
it's never caught on.
The street knows it. The traders know it. The public knows it. The people who represent the public know it.
I mean, they should have, if they really wanted to launch an option exchange, they should have done it 15 years ago. The whole concept of a speed bump just means you don't have the technology to compete with the other exchanges.
Right. Yeah. I just thought it was interesting. I was like, oh, this old chestnut again. Okay.
Exactly.
Hey, let's talk some grains here for a little bit. Corn, trying to put together a midweek bounce. Corn in the middle of this week was trading with some small gains in an attempt by September to claw its way back above $4. Let's look at all the softs: corn, wheat, soybeans.
Well, corn's still under $4. I mean, it's down $1.75. It did touch $4 last night. I mean, but it's a skosh off of its lows. Wheat's a little more mid-price for its recent range, but it's still near its lows. And
all the softs are heavy.
Soybeans are doing the same.
Yeah, all of them are heavy.
What are your existing positions in there?
We have positions in corn, wheat, and soybeans. Wheat, we're a little bit long. Corn, we're, I guess, a couple deltas long, and soybeans, we're a couple deltas long. We're short premium, but we're just short bigger puts than calls.
Okay. That makes sense. Hey, the SEC commissioner, Hester Pierce, just sending out a clear message to anyone hoping that blockchain is going to free them from financial regulation. She says, not so fast. She acknowledged that the promise of tokenization, the process of turning real world assets like stocks into blockchain-based digital tokens, while that is a fad and seems futuristic, she says the same old rules still apply. Tokenized securities are still securities. The same legal requirements apply to on and off-chain versions of these instruments. Are we getting a little over our skis here in the race to tokenization?
Well, we can't be over our skis because it doesn't currently exist in the U.S. So,
but they're kind of champing at the bit, though, like to waiting for the gun to go off to be, unleash the hounds here.
The correct use of champing versus chomping.
Yes.
I like that.
I am the resident grammarian, so.
The resident grammarian has it correct, champing at the bit.
Yeah.
Listen, we have been talking about it, and we have obviously we are supportive of tokenization.
Sure.
As a global firm, it can only help us and help our customers. That said, we have a lot of regulatory battles we're fighting right now. I mean, among some domestic battles like pattern day trading rules and, and overnight requirements and lots of things like that. Tokenization is just another one where, we're kind of got to get into line with everybody else, but we are clearly supporting digital asset firms that are in front of the SEC, trying to push for some. We need better regulations around better. I shouldn't say regulations. We need a better understanding of where the SEC is going with respect to tokenization, because it takes a long time to build that infrastructure.
Okay. Got it. But as we all mentioned, Bitcoin keeps hitting new highs, massive, like you said, move in Bitcoin 3 o'clock yesterday.
Bitcoin is very different.
I know. I wanted to talk about Bitcoin.
Yeah. Tokenization is very different than Bitcoin.
I know, but I just wanted to talk about Bitcoin because I didn't have a Bitcoin-specific
Bitcoin started with 120, Vanetta. I'll help you out.
Thank you very much. Oh, my God.
119,450 on the futures. They're 118.3. They're about $1,000 off their highs, but that's a 4% move, up $4,400 on the Bitcoin futures.
What do you guys do now in Bitcoin at these astronomical levels?
Probably should lighten up a little bit. I haven't done a thing.
We have not sold one penny in Bitcoin or ETH or any other digital asset that we own. I guess we're just like any other passive digital asset holder. We're just sitting there with it, and I mean, I don't have enough to warrant like even thinking about it. I'm just going to hold my position and hold. I mean. That our position in Bitcoin and Litecoin and ETH and whatever else we have.
Fartcoin.
No, I got some Solana and some Solana, and I forgot what else. I forgot. I got a bunch of them, but whatever it is, we haven't touched anything.
What about Coinbase?
We have no position on Coinbase.
Okay.
Coinbase was coming in with a decent IV rank of 37, obviously making highs following it the way Bitcoin is. 392 and change on the opening. If it opens here, up around $3 or so. Coin has earnings coming at the end of July.
This is interesting. The Defense Department is buying $400 million of preferred stock in a company called MP Materials. They own the only operational rare earth mine in the U.S. In Mountain Pass, California. The shares then surged 50%. Rare earths are a key component in a range of military weapons systems. Can you name another time where the actual federal government took a massive stake in a public company?
Well, usually if they, well, it's hard to say because there's a lot of, U.S. government pension funds and things like that that have plenty of stakes in stocks, but direct like this, I mean, I don't follow that much, so I can't name another time, but it's not something.
I wasn't sure. I just didn't know if this is like happened before or something, but.
I think if it has to do with national security or like in this case, I think that's what it's under.
Yeah.
I think that there have been situations like that, but I just can't name one offhand.
Bat, the ticker is just MP.
MP, I was wondering if you're going to help me there. I couldn't find it. MP, that's okay. IV rank of 53. Earnings are in August. I look at the August options with 35 days to go, and they seem to be untradeable.
Okay. Womp womp.
But it did make a monster move, as you were talking about, from 31 to about 45. So maybe there's something there if you're looking to get a hunch.
Hey, major U.S. banks are on the clock. They are set to report stronger profits next week, driven by buoyant trading and a modest rebound in investment banking. J.P. Morgan, Citigroup, and Wells Fargo are going to kick off their second quarter earnings on Tuesday. What are you doing and what is your plan? Because, again, we are now in an earnings environment with low volatility, and that is a recipe for disaster. What are you doing in the big banks? Because that's Tuesday.
I have no position on in any of them right now, so we will have to take a look. I mean, my fear is that in the current regulatory environment, they have been gone unchecked, and so therefore they're, other than price, they're all fully priced.
Sure.
They haven't had.
They did stress tests on all the banks. The banks passed with flying colors. Remember?
Of course, they do stress tests on banks, but when there's nobody to actually stress test them, it's self-administered.
They're like, you guys good? They're like, yeah, we good, fam.
Yeah,
like, all right, keep it moving.
How's your heart?
Come on. You're both talking about things you don't know about right now, but sure.
It's good. It's the least amount.
Don't lump me in with this. I know exactly what the bleep I'm talking about.
It's a very
okay?
interesting. It's the least amount of bank regulations since 2008 right now. So It's interesting. Okay, I'll make it simpler. So it's the least amount of banking regulations. So they've essentially gone unchecked. Now, whether or not, my guess is their numbers are going to be great, but whether or not that translates given where the current price is, I don't know how that'll work.
Because it seems like it's just like free money. Like, just why not just buy calls and call it a day?
Well, because the price of these stocks could already be built in.
I mean, the stock's gone, which doesn't typically move, from 34 to 46, really without a downtick since April. So that's the reason why.
Exactly my point. I think it's all priced in already, so you got to be careful here. Even if they have great numbers, it might not be enough to maintain the stock price.
Mm-hmm. Mm-hmm.
Indeed and Glassdoor announced they're cutting 1,300 jobs in light of AI integration. It represents around 6% of the HR technology segment workforce. The jobs are mostly in the U.S. It's fun little bit of lore. The Tasty studios and offices occupy the space of what was formerly Glassdoor.
Yeah,
they never came back after the pandemic.
No, they never moved in.
Oh, okay. Well, it was Glassdoor. No, they did, because their stuff was like written on the wall, like it was all over. So they were there.
They built it and they never moved the team in there.
Oh, okay. Well, AI is coming for everyone's job. So, okay, thanks.
Yeah,
Bye.
no, it's interesting. In that particular space, I just saw that Jobs.com filed for bankruptcy, and then a Monster filed for bankruptcy.
Too, yeah.
And one other firm just filed for bankruptcy, and then these guys are cutting all the jobs. It's a tough job market right now.
Yeah. Mm-hmm. Hey, this is interesting. Vlad Tenev, maybe you've heard of him. He's the CEO of Robinhood. Well, he founded a company called Harmonic, and that company has raised $100 million at a $900 million valuation to scale AI for formal mathematical reasoning. Huh? What do you think of Vlad making a mathematical AI company, and then it's already worth almost $1 billion?
They can make it worth whatever they say it's worth.
Yeah, I guess.
I have no clue.
It uses the Lean4 proof assistant and allows users to write mathematical definitions, theorems, and proofs in a way that can be checked for correctness by a computer, and it can translate natural language math problems into formally verifiable proofs. Okay. It's very interesting. Hey, Tesla is moving to expand its robo-taxi to Phoenix following rival Waymo. I think that's where you guys took your Waymo, right? Was it in Phoenix?
Yes.
Yeah, so the effort to expand to Arizona comes after Tesla in June began its pilot test of robo-taxis in Austin, Texas. Tesla having a little bit of a roller coaster of a week. Where's it going to finish, Bat?
Oof. Where's it going to finish? I do not know. I can tell you where it is right now. Tesla closed at just under 310. It's going to open just under 39. Earnings are July 23rd. IV rank of 18 is actually going a little bit lower. Caught a bid yesterday. Surprising that volatility stayed low, but it is still only 18 on the IV rank.
In other news, though, Uber's stock is up more than 60% year to date as they continue to lean into autonomous vehicle partnerships. Tom, do you have an Uber position?
No. Hold on.
Sure, you're okay.
I can't remember if I put one on yesterday. We didn't get filled. No.
Okay. So to say you were looking at it.
We had an order in yesterday, but we never got filled.
Okay. I was just curious, but that's a good move in Uber for the year.
Huge move.
Yes.
But we have a rule. We never short Uber.
Uber's $96 where it closed. Looks like it's going to open around $95.70. It's only down around 30 cents, which are basically highs.
I've stuck with that rule for the last 5 years. Never short Uber.
It's a good rule. Hey, this is probably one of my favorite post-earnings call headlines. Levi, the jeans maker, had earnings yesterday, and this headline just says, jorts and quiet Western wear are helping Levi's stave off the impact of tariffs. 90s and Y2K fashion is in full swing, so longer and looser style shorts are in high demand, the CEO says. Shout out to jorts.
Wow, that usually when the shorts get a little bit longer, the market goes down. Interesting.
Oh, what? Like, Levi, girl, what are you doing? They anticipate their sales and profits will grow more than they had expected this year as long as tariffs don't get any higher. Levi is the ticker symbol. Stock is up around 8%, around $1.60, let's just say.
Yeah. It had earnings, 21.30. Yeah. Yep, is where it looks like it's opening. Closed at 1974. 21.30 would get it close to its highs that it made back in September.
Now,
so Levi,
be honest
good
with
stuff,
me.
Huh?
Have you guys ever made like Daisy Dukes? Have you ever made cutoffs?
No, but if you read through the CEO's speech there, he thanked Tom Sosnoff for no longer wearing the Levi's ripped jeans, and he thought that too was a reason why the stock had gone higher. So he appreciates Tom's kindness.
That's funny. Hey, Disney is partnering with the UK's main commercial public service broadcaster, ITV, in a streaming-focused content partnership that will see each brand distribute a sampling of the other's film and TV library. So Disney is partnering with ITV. Not sure what Disney's doing.
Ooh, I don't know. We don't have a Disney position on.
Disney is trading, looks like around 121, down around 50 cents. I mean, like everything, it's just off of its highs following the market.
Okay. Hey, snack wraps are back after months of teasing it. The McDonald's snack wrap has officially returned to restaurants nationwide. The beloved menu item, which was phased out nationally in 2016, is available in 2 flavors, spicy and ranch. But I have the macros for you if you want to know how it breaks down. You want to know?
I like how they say beloved. They say
they were a fan favorite. Like, the nostalgia hits hard. People are like, yeah, these don't seem to hit like I remember them hitting back in the day.
My boy Wayne Dang, in his review, said they were disgusting, and he never.
Yeah, the reviews are coming in. They are mixed, girl.
He did not like them.
If you're gonna get the ranch chicken snack wrap with crispy chicken, it's 320 calories, 16 grams of fat, and 17 grams of protein. But you can also get it with grilled chicken, and then the spicy buffalo chicken snack wrap with crispy chicken is 310 calories and 15 grams of fat and 650 milligrams of sodium. Yikes. But will this help McDonald's turn it around?
Doesn't look like it. Like, McDonald's is not one of those stocks on its highs, trading 297 and change. Looks like it's down around 50 cents, but closer to its lows, under 290-ish. Recent lows, that is, recent highs of 320.
Hey, talk about jumping the shark. Tom always just picking the bottom here. Lindt is now releasing a Dubai chocolate bar. Ooh. The internet famous chocolate bar is now coming to a Kroger near you. You can buy it in Walmart, Target, and Kroger. Starting this week, the milk chocolate bar is filled with pistachio paste, phyllo dough, and sugar-coated pistachios and hazelnuts. The original 6-pack bar from Fix Dessert Chocolatier in Dubai costs $120 for a 6-pack. This will cost you substantially less.
They are absolutely delicious.
What brand did you have? Was it this Lindt one?
He doesn't know.
No. Okay.
No, it wasn't that brand. I don't know. I could go. I'll look. I still have some, but I don't know what it was. What brand?
Well, they have it at Walmart now, so there you go. Hey, this is crazy. Before we put up the slide, Beth, the original Birkin, so the very first Hermes Birkin bag, literally made for Jane Birkin, who it was named after, sold at auction at Sotheby's Paris. Do you guys want to guess how much it sold for? So the very first Birkin bag, the original Birkin.
I'm going to say
$500,000.
I'm going to say 1.1 million.
You guys have lost your touch. Put it up. You can put it on the board. Yes, $10 million. $10.1 million. What are we doing?
I don't know what to say.
That's crazy.
You know, you can't walk into the store and buy one.
No, you cannot. It's because it's forced scarcity.
Yeah. You have to be asked to buy one.
Yes.
What do you mean asked to buy one?
That's exactly what I mean. You got to be asked to buy one, Sosnoff. You have to be asked to buy one. You have to, like, go in and then they'll put you on a list, or if you deem you, they check you out, deem you worthy.
I
of
mean,
the
it's their
sponge.
brand. They can do whatever they want to do.
Yeah. They'll make you
brand.
sponge worthy or not. That is
Hey,
correct.
real fast, I want to get to this because there is nothing better than watching billionaire hedge fund manager Bill Ackman get straight up smoked after paying his way into a pro tennis tournament. Tom, have you been following any of this?
I hate Ackman. I wouldn't follow.
So he's 59 years old. So I guess he always wanted to be like, he is good at tennis, but he's good at like club tennis where he's just playing like a private equity guy. And then he's like, yeah, he's good at like club tennis. But he's like, no, I could play on the circuit. So he bought his way in and they played a double match. And then he just got annihilated in straight sets. and that delights me. So that's it. That's the story. He lost.
Well, if you watch any of the Wimbledon, the guys there, their serve is so fast now, it's insane.
Yeah, no, he was playing with like the former like number 8 ranked player too. Like his partner was like legit, but again, you can't fake it till you make it. So
no,
Anyway.
It's insane how good these guys are. Insane.
I just got a good chuckle out of it. Hey, finally today for my viral video of the day, it's Friday, so I like to do a little segment called Will Tom Eat It? Earlier this week, Tom said he's not really a big mac and cheese guy, but I think maybe this could change his mind. Summer's
I
not
thought you were
over.
going to have a picture of Sadloff eating mac and cheese or something.
No,
That would've been
summer's
good.
not over. Would you eat this? Check this out. Oh, we don't have sound.
Bad for you, because this might be the best bite you have this summer. The first step is starting off with these amazing spicy hot links from Evergood. They're packed with flavor, have a great snap, and are perfect for the grill or the griddle. I picked up mine from Safeway, but you can check the website for locations, or you can have them delivered cold right to your front door. Once my sweet rolls are toasted, it's time to make the crawfish mac and cheese. As always, I'll have the full recipe breakdown in the description below the video. And if you don't have crawfish, you can substitute crab or lobster. So make sure to get your Evergood hot links today and enjoy.
So crawfish mac and cheese hot links.
I mean, I'd
So
eat
funny. So I love crawfish.
Okay,
I just
girl.
bought.
You love
I
crawfish,
just-
but you hate lobster mac.
No, I never had crawfish mac and cheese, but I just bought crawfish cakes.
Oh, okay.
Yeah. I
I love that for you. I love
crawfish.
this adventure for you. Anyway, hey, I don't want to go too much over on Jamal's time.
You
so
never
let's
went to like a crawfish boil or anything?
No, I've never been to
I
a
mean, I
crawfish
saw
boil.
you back in the day. I mean, you gave Bobby
I never
Jakes a
been to
run
a
for his money.
crawfish-
You never went to a crawfish boil, please.
I've never been to a crawfish boil, but I've had Wishbone used to make crawfish cakes. And
I know, but crab cakes and crawfish
No,
cakes.
their crawfish cakes were
that's
great.
like children's food. I mean, that's not real.
I know, but I've never been to a crawfish boil. What do you want from me?
Hey, can we
Get
go
a
to
life
break,
is
please?
what I want. All right, well, would you eat it?
Oh, yeah.
I knew it. We'll take a quick 90-second break and come back. We got more Tasty Live after this. You know what's coming up next, Sadnoff? Confirm and send as it has for the last 14 years. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
I got a long shot, cup, sugar for me. I got a long shot, cup, sugar for me. Look at me, I'm walking my legs, do all the talking, got to watch yourself, keep your head straight. Find me on the runway, sleeping on a Sunday, I'm on the track, but yeah, I'm running late. Got my head in the clouds, my feet on the ground, the pavement's hitting back, yeah, I'm under attack, but I got round. Wrong way on the one way, tune in on a Monday, love the song, but baby, I'm the sound. I'm taking over, just take a look at me. I'm breaking rules, got it under control, got 'em all shook up for me.
Tomas, we are back, my friend. And you know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a quick look at the market. More movement last night than we've had, basically all week, enough. You take here and look at the last 4 or 5 days of the market. We've had a full day movement already, down to 62.76. We're 62.89. Up to 63.30. We're down 34 now. We've been down a little bit more in the middle of the night. We rallied back to down only into the teens, and then we've sold back off to down 33 or so. NASDAQ down 101 in step with the E-mini S&Ps. Russell's the weakest, down 17, and the Dow down 263. They're all down a little more than half a percentage point, or wrapped right around there. Volatility up 22 cents. Off its highs of 1960 to 1937, a little bit of a 1% move here. You can see volatility not percolating as much as the market has had its movement over the last night or so. So far, we'll see what happens there. Bonds down 19 ticks, 113.21. You can see here over the last couple of days they were catching a bid. They're giving it back now to the mid-range for the week. The big talk on the street, Bitcoin flirted with 120,000, 118,400 right now, up around $4,500. You can see that big gap higher. We see if that can hold. Same thing with Ethereum. Ethereum made itself a nice little move higher too, although it is off of its all-time highs, closer to 4,000 at just under 3,000. It was over 3,000 last night to 3,041. Oil up 70 cents. Gold up $41, making a decent-sized move after the last couple of days of trying to get its feet underneath it. It's really making a move now, about a 1.25% move. Silver doing the same thing, but to a larger magnitude of the move and at highs. Silver outperforming gold the last 2 weeks.
All right, Chatty, we're way over our time here. We got to go.
And that's all I have to say. Thank you very much for your time.
It's almost 8 o'clock. We got to go. Emails.
Hey, I wasn't long-winded. That's your girl.
Is the purpose of a strangle to find less volatile stocks and collect similar premium as you would with just a short put in more volatile stocks because you're playing both sides? Is there a beta range you try to stay in?
Well, the difference between a strangle and a short put is I'm just bullish, and that would be the type of strategy, or one of the types of strategy I would look for if I was bullish on a stock with high implied volatility. Same thing applies for a strangle. I'm looking for high implied volatility too. It's not about being less volatile at all. I mean, the pricing I feel that the pricing is warranted for the volatility, and I hope that volatility contracts. So even if the stock doesn't move as much as it would be expected for the day, I make money on both sides of the market. So no, I'm not looking for less volatile stocks. One's a delta neutral strategy, the other one's a bull strategy.
Yeah, that's exactly right. We're never in the hunt for less volatile stocks. Collect similar premium. We don't base it on the premium. We'd rather have more volatile stocks and collect more premium. But these are two very different trades, just like the bets.
Yeah.
Let's go to the next slide. I have a hard time selecting strategies besides shorting cash secured puts. I have had good results and I'm comfortable with them, but I want to branch out and diversify, but I'm not sure how to use a specific strategy. Are there market conditions that dictate which strategy is best? Or is it just whatever you feel like putting on as long as it's liquid and IV and IVR are right?
I mean, yes, for all the factors at the end there, liquidity, IV fits the strategy. And then I'm looking at probability of success and what I think the stock's going to do for the strategy I'm doing. So, I mean, typically if I think the stock is going to go down big, I'm not going to put on a downside calendar spread because it's a strategy that doesn't, make as much money on a larger move. I would look for a different type strategy with the same probability of success for that. I mean, I think you've got it here. Am I missing it?
No.
I mean, he's just cash secured puts is just a bullish strategy at all-time highs. There was no other strategy to play. I mean, unless you wanted to do a stupid.
I mean, based on your timing here, you're right. Being short puts, whether they're cash secured or not, has been the best strategy possible. I mean, you've taken no heat. It's worked. It makes trading seem easy, but long term, you're going to need to develop more than just one approach. And yes, it is just as simple as finding what's liquid, what has high implied volatility and high IVR, all of the above. But one of the reasons we diversify strategies is just because it reduces our overall portfolio risk. So you do want to branch out and diversify, but you don't have to do it in some crazy way. I mean, you could do it slowly. You could stick with your, short cash secured puts or short puts, and you can just add a few other things to it and just try things out. You don't have to go crazy, but it is that straightforward and it is that simple. Let's go to the next slide. But the reason you're doing it is for diversification purposes. Reduce portfolio risk. I noticed a big chunk of your daily trades, they're talking about me, not including initiating new trades, is rolling up and down the sides of the market that moved away. For example, even if the other side has not been tested. Does this mean then that your trading approach essentially amounts to incrementally realizing small profits rather than waiting for the 25 to 50% profit? Trade small, trade often. Not just in initiating small trades, but often in realizing small profits as well.
I mean, I think that's fair in this market that we've had of limited movement, but implied volatility contracting, that we've been taking some profits a lot quicker than when market has a higher volatility with more opportunity where we get that beta decay and expansion on a daily basis. I mean, I think this is okay. I think it's fairly accurate in a very high view.
I think that when volatility is low, no question about it, we are much more, it will seem like we're more on the defensive. When you have a lot of low IVR stocks and you have low implied volatility across the board and the market's at all-time highs, we're going to take profits faster and we're going to adjust trades faster because, again, it's when you have technically have the most amount of risk,
Mm-hmm.
and it's probably the least interesting time for us if we're going to take risk. We're going to take risk when we get paid the most, not when we get paid the least.
Right.
So right now, yeah, sure, I would agree with this, but you'll see a very different approach to trading when volatility is higher and there's a lot more opportunity. We will take a lot more risk.
Yeah. Strategy risk also, not just, the amount of time in the trade.
Let's go next slide. I'm trading a $100,000 account, and I almost exclusively trade the Tasty way. I like to keep long SPY deltas in my account. What is the best way to do this? Sell out of the money puts in the SPY, rolling up as the market moves up, buying shares of SPY, or holding futures and rolling them as they expire?
I mean, $100,000 put significant size, $100,000 account, significant size. One put notionally is going to be a lot more than that on SPY, and the buying power reduction going to be in line. I have no problem with that. I think one versus all the other, in conjunction with all the other positions you're going to have on, is good. But one put's only going to get you 30-ish long delta. It's not going to get you what you're looking for. So you might want to do a little bit of a wider spread instead of the naked option and up the contracts a little bit, because you want to lean a little bit long in SPY is the only reason I say that. And yes, rolling up as the market goes, probably rolling up just the untested side in your situation, not the whole spread. Sure, I would be okay with that. I wouldn't be looking to hold futures and rolling them as they expire. I think in a $100,000 account, it's too large. I mean, one future is like 500 shares of stock.
In a $100,000 account, and you want to keep some long deltas, I mean, in my opinion, the best way to do this is selling an out of the money put in the SPY. You can sell one or two puts, and that'll be, notionally close to 100,000. To me, that's the easiest way to do it. You could buy future if you want, but I feel like there's a little bit more, the micro futures, 50 shares. So that would be the equivalent of, let's say, $30,000 per micro. So you could do 3 micros if you want, $100,000, or you could be one micro if you want $30,000. But you know what? I kind of like the out of the money put better myself. It's up to you, but I like rolling the out of the money put.
Yeah, I agree with you.
That would be our preferred
same
way.
page. Yep.
Let's go to the next slide. This person writes, I'm short a position in the QQQ that expires soon. I seem to remember a piece that you did about rolling out further in time when volatility is low, and it creates a synthetically higher vol. Is this something you guys actually do, or do you close positions when the IVR is low?
No, I mean, I don't typically go further than the following month on anything. Like right now, July with 7 days, I've been out of for 2 weeks. August with 35 days would be my sweet spot. September with 70 days in your scenario, if you were looking to roll your Q position, I wouldn't have a problem with it. I wouldn't probably go much further out in time than that. I hope that answers your question. I typically stay in August with 35 days right now.
The answer.
Hey, the answer is if you had done it over the last 2 or 3 weeks, you would be in a better place than I am.
Our research supports everything that you just said in this piece. If you roll out further in time when volatility is low, it does create a synthetically higher vol. Jacob and the research team have done multiple pieces on this topic, and if you go out further in time, it does synthetically create a higher vol. Is this something we do? It depends. The answer is yes, we tend to keep kind of like our core positions on a little bit. And so we do roll those out in time. We wouldn't do this for every stock or every ETF, but in the Qs and the SPY, we have a tendency to roll those out in time. So it really depends on the underlying, but you are 100% right. If you roll out in time, you are synthetically picking up a higher vol, and it's something that we absolutely do. Let's go to the next slide. And the last one. What is the minimum amount you think someone needs in order to trade full-time as a business?
I mean, one full-time trader floor is another full-time trader's ceiling. This is such a hard, question to answer. But you can try to get a back of the envelope way on what your monthly expenses are, and look at the amount of premium that you can create, and then figure out you're only going to take it, best case scenario, 25% of that EXT number. So if you know your monthly expenses and you know how much you're creating per, I'll just use a round number, $100,000 in buying power for the strategies that you're comfortable doing, you can come up with the number. I don't think I can give it to you.
So, this is something that people have been asking us for years, and it is difficult because, who knows what somebody actually ultimately needs to trade as a business. I have some people that, that are retired that want a couple $1,000s a month, and other people that are, raising families and are much more aggressive that want to make up to $50,000 a month,
and might be taking more risks too. I mean,
and taking significantly more risk.
Yeah.
We like to say, because we're doing a piece on portfolio margin today, that we would love to see you over the $150,000, $175,000 level to give yourself portfolio margin if you're going to trade as a business. But generally speaking, if you're going to trade as a business, it's tough on anything less than $50,000. You really need plus 100. But again, I'm not going to say to somebody you can't do it. I've seen people, turn $50,000 to $100,000.
It gets harder the smaller the number gets, right?
Yeah, exactly. It gets harder the smaller the number. But I have seen people do amazing things with $5,000, $10,000, $20,000, and I've seen people do amazing things with $100,000. I've also seen the opposite. I've seen people blow through, millions of dollars. So it could be, this is such a wide range here. But I'm going to say, 100 to 200,000 in that range.
Yeah, I would say over portfolio margin is a good.
Okay, that's
to get
totally fair. Totally,
I agree. Well, you mentioned it. I agree with you. Hey, listen, let's take a quick 90-second break. We'll come back. We got This Week in Stocks with Jamal next. Back in 90 seconds. It's Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. And you know what that means? Time for This Week in Stocks with my man, Jamal. What's up, Jamal?
Hey, what's happening, guys? What's going on?
Jamal, you bring the first down day we've seen this week, my man. I mean, you're the dark cloud on the market. What do you have to say about yourself?
I have to say I'm not sure I believe it yet. I would have to see it hold up because that's not true. We had a down day on Monday, remember?
We did. We did.
I don't remember where we closed though. I think we closed off the lows, of course, but it's been fairly quiet this week, man. This really was the quietest week of the year for sure.
Yes, it has been. It really has been. Agreed.
Happy birthdays are in order. Is it tomorrow? Tomorrow's your birthday?
Thank you. Yeah, I appreciate it. Yep. Saznoff is taking me out for lunch. It's going to be a wonderful day.
What?
Yeah, I know, right? You didn't get no lunch.
Jamal, don't say anything, Tony. Don't say anything. Jamal, do you know how old he is?
I mean, I do happen to know. I think I've seen the numbers before. I think he's because I think he's got. Let me see.
I was going to give you three choices. I'm going to give you three choices just to guess, okay?
I think he's born in I think he's 12 years older than me. I think he's born in 64.
Oh, you ruined it.
He was going to give you three choices. He was going to give you 65,
numbers,
70, and 75 is what he was going to give you.
I'm good with numbers, dude.
I'm 63.
I see a number one time. I remember it. That's not true.
Yeah, 62.
Congrats, man.
Yeah.
It's awesome.
2 more years and the 65 puts will expire worthless.
Yeah, that's right. I know, right?
Yeah, God willing.
Let's pull up some slides. Let's talk about the quietest week of the year. I'm not gonna lie. I contemplated whether or not it was even deemed worthwhile some slides, but there were. You know what? There were some things that happened this year, and that's kind of been like a theme throughout the year. So. Quietest week of the year because I mean I double checked this like 5 times to be sure, but through Thursday at least, again we'll see what today happens, what holds up, but through Thursday the SP had a range of 89.25 points. That's the smallest range since December 9th of last year. The goalpost for the tariffs, was July 9th. Obviously, that was the thing that people were waiting on this week. Although I feel like if you looked at SPX options, it's not like it was pricing a huge move on July 9th. Mm-hmm. And I think the idea was that it was going to get moved anyway. And sure enough, it did. It's moved out to August 1st. There's been renewed threats with other nations, including Canada, as of last night. Although so far, you really haven't seen crazy moves. Like, for example, we talked about Monday. We were already down like 20, 30 points, and then the talk of more tariffs for other countries came out. I think we dropped down to as much as like 75 points or so. So you could say there's probably about a 40-point move for tariffs when they get mentioned these days, I would say. It's kind of like what we're seeing now, at least just my quick math. Treasuries are down for the second week in a row. Bonds are amidst this 59-month drawdown. It's the longest in history, of course. Dollar staged a bounce. So dollar was up like 6 days in a row. I'm not sure we finished yesterday or what the deal is today, but 6 days up until yesterday.
Got a little bit of a bid.
Yeah,
right?
it has bounced, but it's been very small.
Right.
Yeah.
It's not what I was expecting for a bounce. I was expecting when we do get a bounce, it's going to be like some 3-day, big move off of an unwind. I still kind of believe that could end up happening. Bitcoin, of course, made new highs this week, and a lot of the other altcoins were, of course, following it throughout the week. So as of yesterday's close, VIX was 1578, lowest close since February, and VVIX is still hanging around 90, 91-ish. So I would say up until this week, it feels like a lot of times volatility is somewhere between 16 and 17, while low, things are still moving around a good bit,
Mm-hmm. Agreed. Although it seems like it wasn't moving too much this week.
Yeah, no.
Welcome to summer. This week could really be welcome to summer. The second half of the year, it was a low week. But go ahead.
For sure, yeah, and the one thing too was like there was a big difference that occurred throughout the week between front month and second month. There's about $2 and change as of yesterday, which is a big gap between front month VIX futures. Copper. This is probably one of the stories of the week. Huge move that day. What are your thoughts? Biggest move since 1988. What are your thoughts when you see a big move like this out of a commodity like copper?
Well, the first thing that went through my head is because we had no position on was we sold a strangle in there. It was very hard to get filled at a decent price because the markets were on the day of the huge move, the markets were too wide to trade. The next day, the markets were still wide, but they were better. And we gave up too much of an edge putting a position on. I gave up on each one lot. We gave up almost, I think, Tony, 250, 200 to 250.
Yeah, it was bad.
Just to get the trade on. So to be fair, it wasn't really worth trading because you can't make money when you give up $250.
Right.
But I did take it off yesterday because it came in, just to give you an idea, a strangle with nothing, no delta. It came in 700 yesterday. So net for each one lot, it came in $450, which is not bad for one lot, but it probably wasn't worth the execution risk or the trade risk. It just probably wasn't worth it.
Mm-hmm. Yeah, I think that was
and
one of the more
if you had an existing position, you were kind of
dead. If you had an existing position, you were dead. There was nothing you could do.
Yeah, exactly. It's a good point. How wide the markets were. I think people aren't used to seeing things like that, but markets absolutely went wide. Nobody wants to make a market in those type of situations. Crazy move, man. I like a lot of people wonder if we're going to see a retreat. We've seen this in a couple of different assets this year, right? We've seen things move around. We've seen bonds go big time and then fall within a week time. We saw the same thing with oil when it touched 78. So it'll be interesting to see if that happens here.
Yeah.
I'm disappointed in the CME market makers that they did not come to play. That was a really pathetic display on. Was it Wednesday? It was It was pathetic. They refused to make markets, which I haven't seen that in a while. We have not seen that on the security side since 2000 and when was the flash crash? 2010?
2010, yeah.
Yeah, we have not seen that since March of 2010. That was the last time I've seen equity market makers not make markets.
That's right. I'm glad you said that because I think that's something people should understand. Like these are things that happen sometimes. That's a real thing.
Did you guys see yesterday that Morgan Stanley sold their market making operation
business, right? Yeah.
to Citadel because because they couldn't compete with Citadel. You know, like people wonder why we route orders to Citadel just because they're too damn good.
Yeah. I did see that. Yeah. Let's move to the next slide. Good points. This rolling correlation between the S&P 500 and the 10-year yield, we've seen at times throughout the year where it didn't really matter if we went to 4.5%, and then now it seems to it seemed that was an issue again earlier this year. The correlation has just been moving around a whole lot. It seems to be moving once again. It seems to be turning the corner, such that if we go higher levels, 4.5% or 4.75% 10-year, markets get scared. Seems like that's heading there again. I don't know. Any thoughts on that? Like yields scaring markets?
I mean, we're long 10-year here. We're short the 10 puts and the 9.5 puts. No, I'm sorry. We're short let me take that back. Let me just check. We're short the 10.5 puts and the 10 puts, and it's right around 10.5. Let's just say right now. I think you got to be leaning long, but it looks like crap. I mean, the 10-year looks like crap. I mean, it just can't get out of its own way. And so I'm short the at-the-money puts in there right now. I mean, so far the trade's working, not by a huge amount, but it's working just on the short premium side. IV rank in there is very, very low. In the 10-year, it's 1.
Yeah.
So you're doing this spread? Are you short markets against those short puts in 10-year?
No, I'm just naked short puts. I have no long. No, I'm just naked short puts, no calls.
Gotcha. Let's move to the next slide. So bunch of stuff starting to come up. It was a boring week this week, but don't fret. We got some things. Not only do we have some events, CPI and PPI inflation reports next week, retail sales, which most of the time you don't care about, but again, people are paying attention to GDP these days because of tariffs and all that. Well, retail sales is consumers right there, and consumer sentiment is 2/3 of GDP. You got OPEX next week. You got JP Morgan starting earnings, among others in there. I just put a few on the earnings side. You can see on the bottom, Netflix is next week. The week after, Texan, Tesla, Intel. It's mostly an earnings week, not really any macro stuff next week. The week after that is the big week. You got jobs reports kicking off. You got Fed meeting, which they're not expected to do anything, but still. And then you got the Microsoft and the Metas and the Apple earnings, and then the new tariff date. So it's really not that far off from here. I mean, basically it's 2 weeks. And then after that, a few other things to sort of get to the middle of August. So that's where we are. Let's move to the last slide. Amazon Prime Day was this week, and it's not really Prime Day anymore. It's like 3 days now, right? 4 days. They lengthened it out. But then they also had to compete against Walmart, who had their, whatever they call it, Walmart Deal Days and then Target Circle Days. Italian-based confectionery company Ferrero is taking advantage of the depressed dollar, it seems to me, and cocoa prices. They make Nutella and some other chocolate stuff, and they're buying Kellogg. So that's a really interesting one to me. They're buying, Kellogg, they split off companies last year. They had the cereals or whatever, and then like the snack stuff, and the snack stuff got snatched up by M&M, and then now this is getting taken private by this company. So lots going on there. I saw you guys talking about this morning too with Vanetta, but this was a huge thing, man. Pentagon taking a 15% stake in the rare earth miner MP metals. Obviously, China holds the corners of the market on rare earth metals, but this is a rare public-private partnership. We did have auctions this week in 10-year note, 30-year bond, and it seems like not a whole lot going on with these auctions anymore. 20-year auction took down the market a few weeks back, but these seem to be just fine. And I forgot to update the research, but check out all the research, man. Check it out.
Very good, sir. Hey, let's take a quick 90-second break so we can catch the opening in less than 3 minutes. Let's Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never trust.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. And you know what that means? The opening bell is just seconds away with even the S&Ps down 33. They've been hanging out in about a $5 range, down around 32-ish to about 37-ish. They're down 34 right now. NASDAQ's down 101. Russell is the weakest of the group, down 18 on a percentage basis, same as it's been most of the evening, and Dow down 304. Sadaf, the bell is imminent. So I'll wait for that. Volatility catching a little bit of a bid, up 35 cents, 19.50, 10 cents off of its highs. There it is, Sosnoff. There's your opening bell. They come spinning out of the turn. Bonds remain weak. They're down 27 tick.
Yeah, I bought my first bond. I made my first bond purchase of the day at 113.18.
You are correct. I'm going to save the people a little bit of money and push that through now so they can buy them a little bit better than you, Sas.
Yeah, you can buy them at 12. I would put a 12 bid in right now, maybe. They're trading 12s. Yeah, about 6 ticks lower than where I just bought them. But I'm already long too much, so I can't really buy any more.
Your wife cut you off. Bitcoin 118 up.
Hold on. She's texting me right now. She said, I just saw that bond trade come through on the follow page.
Why didn't you wait like that said for 12 or 13? Why would you pay 18? What's wrong with you, Tom?
She texts me, that's enough for you right now.
I don't blame her. I would say the same thing. Let's see what's moving this market lower, Sadnov. The top of the food chain, it looks like AppLovin down 3 and change, Lilly down 3 and change, Oracle down 3 and change, CRW down 3 and change, Tesla down a 3 and change. Let's see what's bringing us to the upside, Sadnov, or at least trying to. MSTR makes sense with the Bitcoin doing so well, making new highs, up $8.
Wouldn't you think it's weird with Bitcoin up 4,000 that Coinbase is unchanged?
I do. I was totally going to get there. Coinbase was making highs as yesterday, as Bitcoin was catching a small bid, but this morning just hanging out there, up $1 and change.
No, I agree with you. It doesn't seem like a lot. Maybe it's time to
get a little heavy in coin. Coin IB rank of 40 is very good. Earnings are July 31st.
Maybe it's time to
maybe Dunn did something. Maybe if not, maybe
it's time to Dunn do something in Coinbase.
Maybe if not, maybe
Bitcoin up a lot and. I think Tom's going to put a little. I think it's time.
It's time. It's going to have call skew too. So you got some strategy options here, Sadnov. Maybe you can lean short with the strangle. Going to use a lot of buying power. Maybe a little broken wing butterfly to the upside. You know, a little defined risk.
Well, it just I was about to sell stock and it just sold off $3 in one tick.
Yeah, that is true. Now,
I mean, I missed it literally by 1 second.
Usually within 1 second you're pretty good. So I don't know if it's the lasting that has you at a quandary.
Yeah, the 390 level is where I'm at, and where are they? Nope, we missed it.
Oh man.
Let's see what else we got here.
Foiled again.
With respect to our positions, what do we got going on here today? That doesn't make.
I haven't heard many dings from you, Sazov. Actually, we haven't had any since the market opened.
Coinbase steady. That's weird. Let's take a look here. Where are our problem children today? Gold?
Where do you have any? Yesterday's problem child was UAL, right? UAL is down $2.15 this morning.
Definitely not a problem child today.
Mm-hmm. After making that big $10 move yesterday.
Yeah. Not a problem child today. We got a little issue in gold, but it's not much. Gold is always
Gold's always a problem. We've done the research with it.
Let's see, what else do we got? No, I need some trades today for sure.
Oh, do you now? What are you looking to do?
It's a good question. I don't know. I'm looking to put some stuff on. I'm looking to get some money to use. SPOO's down 34. That's just flattening out my gold position. But
okie dokie. You're entitled.
Yeah, I mean, the only problem, children, we have today are bonds, and that's self-inflicted.
You wanted that position. You needed it. You had to have it.
100%. 100%. I don't know. What do you think here so far in the opening? I mean, some stocks are, a couple stocks are higher, but generally the market's lower.
Generally market's low. Like I just went through that list of stocks that are bringing us lower here. Let me see if it's updated here real quickly because it seemed like every stock was down around $3. It was quickly right after the opening. Now when you look, you got Meta down 10, CRWV down 4, App down 4.5, it was down 3 and change. Oracle, Tesla down 3 and change. I'm encouraged by the down move only because I want volatility to percolate a little bit. It's only up 25 or 30 cents right now. Hasn't made new highs yet. I don't know. Maybe we could see it down 50 on the E-mini S&P. It doesn't seem like it has a lot of velocity to it. Yesterday's volume was quite low.
Doesn't seem like there's a lot of sellers jumping in. That's for sure.
No, it doesn't. It doesn't. Now, I mean, we both talked about, like, I thought we would maybe sell up maybe Monday late Tuesday, maybe not before the weekend. I'll stay with that and think that the down move is going to be muted. That's my thinking.
I don't hate it. I'm looking for stuff to do.
That's my thinking side enough, but I don't know because remember, nobody knows nothing.
I'm so desperate to put on trades. I'm actually looking at a silver play right now.
I know, but don't kill yourself to find something. Let it come to you, Thomas. Be the ball.
Be the ball, Danny.
Be the ball.
Yeah, there's some decent volatility in silver, and there's some decent volume in there. I may have to go strangle in silver as much as I hate that. Underlying
/SI over SLV.
Yeah, I can't trade SLV.
Yeah.
I might go 16 delta strangle.
Mm-hmm.
All right, let's see. Or we can go to the next segment, and I'll come back.
Well, we got fast market where you're going to look for 10 trades, Sadov, so you might find something there. We'll take a quick 90-second break and come back with fast market right after these messages from our sponsors.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tomas, you know what that music means. It's time for a little bit of fast market. That's right, Sadnoff, as even the S&Ps make their session lows for when we've been on the show, down 41. Now, there have been a little bit lower than this, about 10 handles lower than this, but right now they're down about 40.
I'm really working hard to sell some premium in silver. Oh, I had to give it a...
Man, all you have to do is ask, and thou shalt receive. Sadnoff, how is it to live in a charmed world like you do?
I had to give it away is the bottom line.
Volatility /VX up 27 cents. Hasn't moved. Interesting.
All right. I'm Tom Sosnoff. He's Tony Batista. This is a segment we do called Fast Market, where people from all over the south side of Chicago send us trades. We only take trades from the south side of Chicago. So everything else, we throw it out.
Definitely makes sense.
Have you ever been to the Windy City Smokeout?
No.
No, I have not either. I think your son has been there. I think my daughter has been there, but I have never been to it. I heard it's great.
Yeah, I'm sure he has, and I'm sure it is great.
It's awesome.
Yeah. Oh, you've been there?
Oh yeah.
Oh, I've heard great things. I can't believe I've never gone.
Yeah, do you want to go?
No.
Oh.
I mean, I did want to go, but I don't want to go now.
Why not? You got plans this weekend?
Yeah, you got plans this weekend? What are you doing?
Yeah, I'm busy.
Oh,
busy with what?
Okay.
I'm busy. All
You're
right.
a businessman.
I'm a bit. Hey, this is a true story. When I was in Milan.
Oh yes, on your way to where from Milano?
Said no one ever.
I know he's such a no. Dylan Radigan would say it too. The Saz and Dylan Radigan are interchangeable, just different wallets and different charisma.
So when I'm in Milan recently with Dylan, we were doing the show in Milan, and there was a guy that flew in from. I want to say he flew in from. I think Austria, but I'm not 100% sure. But there was a bunch of people that flew in from places. So anyway, really nice guy. flies in and he gives me a thing that he brought with him. And he said, I bought this for you. I want you to put it in your office. And so I got stopped twice at security with it. And it is and I brought it home, and it is a ceramic thing that says, with a holder that says, I'm a businessman.
I'm a businessman. There you go. That's right.
It says, I am a businessman. And it's a handmade thing. It's really nice. And I have it on my desk. And anyway, just since you said I'm a businessman, I'm telling you, I now have a thing on my desk that says I'm a businessman.
And rightfully so. You should have it. You deserve it.
There you go. All right. Let's see what we got here. Trades from the south side of Chicago and parts unknown.
Beautiful.
John from St. Louis. Look at this thing. Up and to the right like an airplane, Tony. Diagonal call spread as a 2K debit. What does he want to do? He wants to buy the July 560s and the August he obviously wants to buy the August 540s and sell the July 560s. Are you finding more success on the debit side of the trades with the VIX below 20? I mean, I would argue, sure, in this move, but I don't even know what stock this is, to be honest with you.
It's just GV Veranova. I've never heard of it myself. It's a stock that's parabolic. Sosnoff, in April, it was around 250. Now it's 536. It is down $3 and change this morning. Earnings are July 23rd, and Ivy rank is only 20. When I look at the AUG markets, they're untradeable, Sosnoff. They're $3 wide.
Do you think this guy wants to get shorted or long it? Based on what he wrote, he wants to get shorted.
He doesn't have anything here. Look at this thing. Yeah, up and to the right near. I think he wants to get shorted, but I don't know.
I do too, but the markets are $3 wide.
Welcome to the program. That is correct.
Yeah. So the 560s, just so you know, are 22.24, $2 wide, and that's August 540s. August 540s are 30. Yeah, everything's $2 wide. John,
it was a spinoff from GE. My Taiwanese sources in New Jersey tell me goes by the nickname Mama.
Got it. Well, I completely understand, but right now the stock is traded 125,000 shares. It's got $2 wide markets. It's a $500 stock. I think you're trying to get shorted by.
You can't do anything here.
But you can't do anything. Wide. Yeah, you can't do anything. I got to pass this one, John. Thank you.
Yep.
Next, from the south side of Chicago, Mikey or Amigos from the YouTube chat. All right, I like this. ZN with an IVR of 0. Okay. I just mentioned that this morning. Agreed. With the IVR this low, let's use it to go long for minimal buying power. Leap or zebra trade /ZN. Super low buying power. I agree. I'm short a lot of puts in here. I mean, super low IVR.
Yeah.
So we are currently in August, but Mikos wants to do something further, longer term. So let's just actually do this. We don't usually do this. We're going to go out to October. And there's not a hell of a lot of volume in there, but the markets are still tight.
Yep.
And I would consider 105 days to be leapish for me.
Okay.
Yep. And I'll go to the 110 calls because I'm bullish in there. And the market is 145, 148. We're going to try 146. Let's see. Where are these things? They're trading on their lows of the day. We have a 146 bid in. We're nothing done yet. We're going to go up to 147. And we're going to get a fill. That is the first leap, Mikos, that we've done on live on this show for Fast Market since we started. So good job out of you.
You popped that cherry. Thanks.
Absolutely. Let's go next slide. Fred from Naples, Florida, another south side of Chicago boy. Looking at hymns, we currently have on in hymns a very wide strangle, the 3670, a company Tony will never need. Are you kidding me? he's got a
don't overestimate me there, kind.
He's got a layaway plan. He's got 6 different hymns accounts. Okay, you don't even have any idea. He
Because
uses
if
it for
they
every.
find the first one, they'll never look for the second or third one, Sadnov. You gotta be strategical.
Company Tony always needs. Sell the August 4070 for 360 credit. I'm currently in the 3670. Let's go to August.
You know what, Fred? I got to give you some credit here. Earnings are August 4th, so a little late in the earnings, a little late in the August cycle, which is nice. Good IV rank of 47 here. Markets are good, 10 cents wide. Plenty of open interest. Stock's gone sideways. Place your bets. I think you got a good one.
Yeah, it's pretty thin. We're gonna do. I did the 3870. Because I'm already in the 36.
Well, you got filled 1 penny off a mid price. I mean, you can't argue.
No problem. All right, Fred. Thanks. All right, let's go. MU. Justin from Idaho on the south side of Chicago. MU call diagonal. I did the 135 short call with 22 days to expiration and the 125 long call with 36 days. Stock's at an all-time high, low IV. Why not bet on it going higher? Certainly could. It's down to what did he do? He sold. Oh,
he wants to test your ability to do what the audience asks you to. So I don't know if that's what.
Okay, well, there's the IV ranking here is basically 0.
Yeah. So the diagonal spread works in a low implied volatility.
Yeah, so he sold the one. What did he sell? He sold the 135. So I'm going to sell the 130. And then, oh no, I did the wrong. This is wrong. He did this in
he's doing 22 days versus 36 days.
So
he's doing AUG1 options versus the monthly options.
Oh, I see.
Actually, he's doing a 1 week one. So I don't know if he's doing. He's doing.
Which one's he selling?
22 versus 36. No, he's doing AUG1 of 2025 with 21 days right now. Yeah. He's buying the monthly AUG 15s with 35 days. Now, there's almost a 4-point vol differential between the two, which would kind of at the high end of my range. I prefer it to be 2 points or less. So maybe an AUG SEP might be in
all right. I just did what he wanted to do because I can't.
Man, you are amazing, Sadnov. The older you get, the easier you get. You just lay there and put those trades on. Good work out of you.
Justin, I'm going to take a shot with you, brother. Let's see. Let's go.
Now this is a stock that hasn't it's gone sideways, but it's
I know
the high end of it.
Yeah, down a little bit today. We'll take a shot. All right, let's go. Next slide.
Okay.
Ryan from San Mateo on the south side of Chicago. Let's see. LYFT. We haven't traded Lyft in a while. Where the hell is Lyft trading? LYFT.
Lyft is trading $15.28, down the last 3 days, down 4 cents right now.
What does he want to do here? 13.19.
Mm-hmm.
You're going cheapy, brother. Cheapy strangle in August and take it off before earnings. When are earnings?
Earnings in Lyft are August 6th.
Not a lot of volume in there. Very small strangle, 75 cents. Take a fill. Let's move on to the next slide.
Wow, man. Fill them and bill them.
Fill them and bill them.
If take a fill gets the fill, who gets the partial fill?
Oh, good question.
That's what I thought too. Viewers asked me that. I didn't have the answer.
From Chicago. Ajit, literally from the south side of Chicago. PLTR, 130, 145, 155. I am assuming this is a call spread, right?
with the neutral stance here, I would assume that he's doing out of the money options, or
both.
Right at the money. It wouldn't make a difference, Sosnoff. I would do the calls just because, but
no, it could be a put. It could be a put spread.
It could be. It's neutral, Sosnoff. 145 is at the money. You could do either one that you like. That's what I said to you. PLTR is not a hard to borrow stock or anything like that. It doesn't pay a dividend. So the world is your oyster, Sosnoff. The call and put spreads should trade at about the same price.
Well, because
that comes with 40 plus years of experience, Sosnoff. Those would be the things I would look at. But
okay,
I would,
because we don't know whether you wanted to do a put spread or a call spread, because I could do the 130, 145, 155 call broken wing, but I think that this is the 155, 45, 30 put. I'm doing the put. Filled, 50-cent credit. And
very good. Very good.
I don't know, 50-cent credit. Done. Put it on the board.
You got it, my friend. You got it.
The Oklahoma Thunder champions, Chev. What do we got here? Limited. No, this is not limited.
LMT is Lockheed Martin. God, please help me. Limited. You going shopping this weekend, huh? You got the limited brands on your mind, don't you?
Well, I'm not going shopping at Lockheed Martin.
That's for sure. Limited brands, maybe.
I like the 435. What does ST mean? 45 SG put to sell 37 IVR with rising. I like the up.
I think that's short put.
Oh.
I mean, that would be my guess. I don't know.
Lockheed Martin.
It's a bullish strategy, and he's mentioning, one strike, and it's a put. So I'm going to assume he's selling it because that would get you bullish delta. I mean, you can't read between the lines at all. Like, you got to take the facts. That's why I should have been an attorney. I could have been a frustrated attorney or maybe a really good cop. You take the information they give you, and then you figure out what the solution is to the problem, Sosnoff. The tip-off here was bullish. Next time, take a look.
Well, first I got to do a little price discovery.
And you have to know what a short put does. Like, does it give you long delta or short delta? A short put would give you...
I got to do a little price discovery here because there's no options trading and the markets are wide. But I think that the 435 put at 490-ish is kind of what we want. Let's take a look. So let's hope we get filled. Let's go to the next slide.
Beautiful.
Adam from Johnson City. Let's take a look. Amazon, AMZN. Amazon. Strangle for earnings. One of the Amazon earnings in August. Sell the 200 put and the 245 call. Augie. Sell the 200 put. It's $2. Sell the 245 call. It's a little bit more. Okay, stock's up big today. I'll give him that. Looks like it's trading for around 490-ish. I don't have a position on an Amazon. Do you?
I do not.
490-ish. Here we go. Let's hope. It's going to be easier to fill this than it will be to fill Lockheed Martin. Nothing done yet. As I say, it's easier, much easier, Tony, much easier. Working it, boss. 489, a penny lower than I wanted. All right, thanks, Adam. Let's go next slide. Goldie from Israel. Spot. We have not traded Spot. Oh my God, in so long. I can't believe where the stock is trading.
Why don't you tell everybody, Sosnoff?
I cannot believe this stock is $700. I mean, I really can't.
I agree with you. I haven't looked at it in forever. It's 709, Sosnoff. It got all the way up to 780 at the end of June.
I haven't traded this stock in 100 years. Filled. Lockheed Martin. 840.
Mm-hmm.
And what's the other side here? 620. Oh, you're a big boy. Who's this? Goldie. These are big options. We're going to move them down a little bit. Too rich for my blood. We're going to go, man, none of these things trade in spot.
Mm-hmm.
What the hell happened here? I mean, do you know what's going on in here? Nothing trades. Let's try 570. It's around $7. I'm trying to line things up by price.
Yeah, I mean, markets are $2 wide here, maybe $1.50 to $2 wide here, Sosnoff. There's some volume. I'm trying to look at the open interest for you right now. Open interest is light at the best.
Yeah, I mean, this is a tough one because Goldie, this is one I don't know how to price anything.
Mm-hmm. Mm-hmm.
I mean, I put it in above the market and got filled
Well, the market's 1330, 1445. You got filled at 1391. I'm looking at mid price at 1387. I haven't seen it move that much. You probably got a fair fill here. Your calls are about 50 cents wide, and your puts are about 50 cents wide. Those options, I think your mid price is represented well.
Yeah, we put it in above mid price, got filled. So we'll take it. Okay, Goldie, we'll try it. We did it small. We'll just see what happens. Yep. Let's go next slide. You know, I was thinking about this stock, EWZ, with all the Brazil tariffs and stuff. I forgot to check and see what it's been doing lately.
EWZ has had an IV rank of 37. It's been going lower the last 4 days. It's at the low end of its most recent range of 27. It got all the way down to around 22 or 23 at the end of April, and it got up to 29. So let's call it mid-range-ish, lower to mid-range. Volatility has definitely upticked over the last 4 or 5 days, Sadma. That is an absolute.
Well, he wants to sell at 26.30. That's too cheap. That's only 50 cents, Mike.
Yeah.
Yeah, I can't do that. I can do the 27.30. Sell the at the money put and an out of the money call. I'll do that. But the calls are only 17 cents. That's not kind of my thing.
Yeah.
Just sell naked puts in here.
Okay.
But there is no, like, I won't sell an in the money put. So the nearest out of the money put is 27. Market is, I don't know, 65, 67. It's a pretty tight market.
Yep.
Fill it at 66, right at mid price. I mean, I kind of wanted to do this yesterday, so I like fading the tariff story, so I think it's a pretty good trade here. All right, Mike. So we got to fill. So, yeah, let's take a look. GEV, the GE trade. Yeah, we passed on that because the markets were too high. 10-year notes, we bought a leap. The HIM strangle, we sold to strangle. MU, we sold to strangle. Lift, we sold kind of a wide strangle. Palantir, we did a broken wing put butterfly. Lockheed Martin, we sold an out of the money put. We actually got filled in there, Beth. Lockheed Martin is a fill. We sold an out of the money put.
Yeah, 490. I have it through there.
Yeah, short put. Amazon, we sold the strangle in there. We got filled. That's an earning strangle. So yeah, you want to. So you can say sold put in Lockheed Martin, Beth, and you can say put broken wing butterfly in PLTR.
Yeah, get it, Beth.
Yeah, John would have been all over those things.
John would have gotten it right for sure.
And in EWZ, we just sold a put. We did not do a strangle.
Ugh, unbelievable.
We will make those changes.
Okay, so EWZ is a short put. Limited is a short. I'm not limited. Lockheed Martin's a short put. And PLTR is a put broken butterfly. We did 9 out of 10 trades. Not bad. I needed some opening trades. We got some on.
Beautiful. Beautiful. Good job out of you, Sadov. You know what? We're going to take a quick 90-second break. We're going to come back. We got a market measure next. Even the S&P's down 28, Sadov. They've rallied about 15 handles or so off of their lows from the show when they're down around 42 or 43. Volatility kind of upticking a little bit here, only up 16 cents. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Sadov, what comes up next?
The market measure, but I don't like these bonds trading 09.
We'll be back in 90 seconds. Let's Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready to move?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like, we drive like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
I got round. Runway on the one way. Tune in on a Monday. Love the song, baby, and the sound. I'm taking over. Just take a look at me. I'm breaking loose. Got it under control. Got 'em all shook up for me. Look at me, I'm working. I'm never ever hurting. 'Cause I love the body. Yeah, I love the frame.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live with a market measure. Even the S&P is down 28. Yes, do not resuscitate.
Hey, we're trying, as they say. It is Friday. Some Friday in July.
Friday the 11th, Sosnoff.
Friday the 11th. That's right. Tomorrow's the big day.
I wasn't going to say it again, but yeah, that's right.
Yeah, tomorrow's the big day. Oof, day. Breakfast in bed. You don't have to clean the garage. No honey-do list. You know.
I'm just going to sit back and eat my breakfast, if you know what I'm talking about. It's great.
Omaha.
So let's see. What else do we got? So this Sunday, don't want to forget, I'm going to give him all his plugs. Don't forget Dr. Jim Schultz will be in Cambridge, Boston, Massachusetts, at a place called the Sinclair, right in Harvard Square. If you have a chance and you're anywhere close, please go see Dr. Jim. Britt and the whole rest of the team will be out there helping Jim, getting them to the right spots, setting up the space. Doors open at 5, show starts at 6. You need to sign up in advance. It's free, but you need to sign up in advance because they have a certain number of giveaways and all this other stuff and a certain number of chairs. So tastylive.com/events. Please sign up online if you're going to go to it, if you can get to it. And if you can't make it, just cancel so somebody else can take your spot. But we'll see you, or those guys will see you at the Sinclair in Boston Sunday night. Doors open at 5. Show starts promptly at 6. And if Jim has time afterwards, he will answer questions. So, we've been, we hope everybody gets a chance to go out and see Dr. Jim's great live. So, he's taller than he looks on air, right, Tony?
Oh, absolutely. Absolutely. He definitely wears those lifters on stage. You're going to be so surprised. I don't know if it's the lifters or he just wears shorter pants, so he seems taller. I don't know.
Anyway, Dr. Jim, all 6'4" of him, will be out there on Sunday night. Enjoy the show. Also, if you can't make Dr. Jim on Sunday night, Victor, myself, Ilya, we will be doing First Call on Sunday night from Chicago, Singapore, and San Francisco. So we're going to hit you up from all over the world. Anyway, First Call Sunday night, 4:55, 5 minutes before the futures open. And let's kick the week off to a good start. 4:55 Sunday night, First Call, right wherever you're watching right now. All right, and then 2 weeks from today is our show in Denver. Bat and I. We will be at the Summit in Denver, Colorado, Friday, July 25th. 2 weeks from today. In fact, the show would be pretty much halfway done right now.
Yeah. You'd be getting ready to pack it up and go back to work. Yep.
So it's fast, it's fun, it's a lot of trades, it's nonstop, and we hope to see you there on Friday, July 25th, in Denver at Summit. Plenty of room. tastylive.com/events to sign up. Can't wait to see everybody there. And we'll be back at work by 11 or wherever you got to go by 11.
Awesome. All
right, let's do it. This is our market measure for today. I have challenged our research team to mix things up a bit for the rest of the summer and talk about some of the things that we don't normally talk about. One of those things is portfolio margin. Not everybody has enough capital for portfolio margin, but it's important to know that it exists. And it's also a reason to try to build up your account to a certain level. Or if you have an account that size, you might want the additional leverage. It's not something that will make you more money or any of that kind of stuff, but it is something that gives you some additional leverage. And additional leverage just levels the playing field more. That's really what it's about.
Yep.
So capital efficiency through portfolio margin.
Let's do it.
So I trade in a portfolio margin account. it's something that just, again, it gives you more leverage. Portfolio margin is an alternative system of calculating the capital required for a trade on accounts that have at least 150,000 in net lick or more. The system of margining uses a live risk-based calculation to determine the buying power of a trade, as opposed to a single static percentage to determine buying power. What that means is, rather than looking at it on a trade-by-trade basis, we look at it as a portfolio. Tasty has had portfolio margin since we launched. We actually built our first portfolio margining system back when we built Thinkorswim in the early 2000s. And even to this day, the portfolio margining system that Tom Preston and Pete Klink use is the standard in the industry. I mean, what we built 20 some odd years ago is still used today by Schwab, by TD Ameritrade, and obviously we've upgraded, all those calculations here at Tasty. And the people that built that, Tom Preston, Pete Klink, they are all at Tasty now, just so you know. So our portfolio margining system is, we believe, the best the best of any online brokerage firm. Nobody has the technology and the risk monitoring tools that we have. Nobody. Let's go on to the next slide. And also, we have a dedicated portfolio margin team. So if you want portfolio margin and you want to ever reach out directly to the team, you can email the trade desk and ask to be connected to the portfolio margin team, and they will answer any questions you have. And they will also help you, do whatever you need to do to set things up. 20 years ago, you used to have to take a test for this. Right. Now it's just, you just sign up. And so it's cool. On average, go back. On average, portfolio margin would allow you to take on the same position for less capital. It basically, portfolio margin, Tony, is very similar to span margining. It doesn't work the same way as span, because span is on an individual position basis, but the amount of capital required is very similar. So if you like the futures margin that you have, portfolio margin is similar, but it looks at the entire portfolio rather than an individual piece with less margin. In this segment, we're going to adjust our volatility-based capital requirement guidelines that we use for standard margin accounts and tweak it for PM users. We have a general rule of thumb. If you send me or Tony an email and you say, hey, I'm just using futures options, and by the way, in the U.S., for U.S. futures, we have reduced the price of our futures commissions and futures options commissions on all products by about 20 or 25% in the last 2 weeks, just so everybody knows. We did that just to help all our customers, to benefit them if they're trading futures, to give them lower commissions. So just as a FYI. So we have one of the lowest futures commission rates in the industry now. But portfolio margin looks at your entire position. Tony and I have a rule. If you send us an email and you say, how much capital should I work with if I'm using just futures options or portfolio margin, we would tell you about 30% less.
That's correct.
Right? Okay.
That's correct.
Yep. Let's take a look at the next slide. So by default, we never try to let our portfolios have more buying power usage than 50% of the portfolio net lick, since there's an inherent leverage present when trading options. Now again, I want to preface this. This is something we've published for years, but we have 3 levels. We have conservative, moderate, and aggressive. This is the most conservative case. So right now you'd be VIX between 15 and 20, let's say 30% max allocation. When you go to the moderate case, you take it up by about 30%. When you go to the most aggressive case, you take it up by about another 30%. So this is just the most conservative case for display purposes, but there is a moderate case, 30% higher, and there is an aggressive case, 30% higher than that. All right, let's go to the next slide, Beth. Now, for PM accounts, Okay, even though the leverage can be higher, it's designed for traders with bigger accounts because they have more positions that could be uncorrelated and just it's more diversification, strategic diversification, things like that. So the guidelines are similar to the Reg T based, but for those who don't have as many positions, you're going to see these are about 30-ish% less. But again, this is the most conservative guidelines. Moderate, about 30% higher. Aggressive, about 30% higher than that. We, Tony and I, generally fall into the moderate case. We're never on the conservative side. It would be really rare for us. Right now, I guess we might be conservative because the vol's so low and we're underutilizing our capital. That right now we might be a little bit closer to the conservative side. But like in April, we would be on the aggressive side. Yep. So we will move back and forth, but our default is always the moderate, which is about 30% higher than here. In times like the April sell-off, we'll go to aggressive, which is 30% higher than moderate, and which is 30% higher than moderate, and again, like 60% higher than here. Now, that said, right now we are very conservative because there's just not much there. Let's go next slide. So some additional notes on portfolio margin. Earnings plays and high IV stocks will still have higher BPR. Uncorrelated positions will have more BPR relief than correlated positions. And BPR is determined based on existing positions, so each individual may have different capital requirements for the same trade. Now, also, so you know, portfolio margin is not set by Tasty. It's actually set by the regulators. It's set by OCC and the regulators, and they give us the minimums, and we pass those through to the customers. So it's not like we set the margin requirement. It's actually set by the regulatory bodies and the clearing bodies. Okay, we have the opportunity to raise it, but we keep it pretty close to the minimum. Let's go to the next slide and some of the takeaways. Portfolio margin, if you have the capital, is a great alternative to standard margin for those with larger accounts who want margin relief for positions that are uncorrelated or act as hedges. It just gives you more leverage, so the ability to do more things, and you can have more undefined risk trades, things like that. Just frees up a lot of capital. Keep in mind that the trade you put on with Reg T or portfolio margin has the same risk and opportunity, but portfolio margin calculations generally have lower BPR, and it'll be different every trade depending on the composition of your account. We also have different risk monitoring tools, and we also have, like I said, a separate portfolio margin risk team and support for portfolio margin accounts. So there's a lot of
because that extra leverage comes with extra risk too, right?
Yeah. When you start with portfolio margin, you don't do anything different. You just use less capital, and then eventually you learn how to scale into it.
Put the money someplace else. Absolutely, 100%. To benefit from the extra margin that you're allowed. Yeah, for sure, 100%.
And again,
it's a good thing to have.
If you have more questions on portfolio margin, you can send an email to support@tastytrade.com or tradedesk@tastytrade.com. And you can also make it to the attention of Pete, Pete Klinker runs our portfolio margin team, and there's a bunch of people on that team and a bunch of people on risk. They'll be happy to help. We go out of our way to support our portfolio margin customers.
Very good, sir. We're going to take a quick 90-second break. The moment you've been waiting for on this Friday. That's right, my friend and yours, Mr. Scott Sheridan, coming in with your phone calls, 855-238-2789 or 855-BE-TASTY. You got any questions on portfolio margin, which you just talked about? Maybe features you want to see on Tasty Trade? Just questions in general. Sosnoff always has an answer, even if it's wrong. We'll be back in 90 seconds. It's Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
one
does yours get delivered? You didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
You're going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend, and you know what that means. Well, enough out of you. That's right, from the still named Tasty Trade Studios, the Scott Sheridan Studios, Mr. Scott Sheridan, who's taking your phone calls at 855-238-2789 or 855-BE-TASTY. That phone number is right below me right now. Give us a call. I got 4 or 5 lines open. I'd love to hear from you. Mr. Scott Sheridan, how are you?
I'm not sure which is worse. Tom, or the fact that we're surprised about Tom.
I will take Tom for the win.
What do you mean? What did I do this time?
What didn't you do? Again, if we could show the commercial breaks, the size of the audience would be 10x if we could show the commercial breaks. What did you do this time? We have a full-on conversation. It's amazing. We could give you, I think you actually said this. I'm not going to say it the way you said it because I can't repeat that on air. But we could give you the winning lottery ticket and you complain about something. You'd say, well, the lottery wasn't big enough. It was bigger last time. Like,
oh, he can ruin a young man's dream for sure.
Right?
For sure.
Right? Like, I'm giving you something. I'm really happy. I'm going, oh, this is a big deal. And you go, who cares?
You know, he just like,
it's not that. It's just that like for you, it's like, you know, like you're happy. Here, I'll give you an analogy that you'll understand. You're happy if you.
Oh my God, this is so going to screw you over. This is so going to screw you over. I've been in this situation, Scott. Your internet should go out right now if I was you. Go ahead.
No,
Tom.
I want to hear this. I want it in a way that I will understand it. Go ahead.
In a way that you'll understand. You're happy if you could just dribble a basketball. I'm happy if you can make a basket. Like
for somebody who's played basketball with Mr. Sheridan, he can do more than just dribble a basketball.
No, but he's happy
he can pass too.
He's happy just being able to dribble. But he doesn't realize that to win the game you got to make the basket too.
Oh my God.
I'm here. So when you say I'm paying attention to this. That's a horrible analogy. Okay.
Well, I'm explaining it to Tony because he's a little, you know.
Oh, here it comes. So Tony,
here we come. I'm getting thrown in the bucket.
He got both these. Are you going to attack Beth? Because Mama Bear's ready right now. Go ahead.
I'm not going to attack Beth because I don't know where John is today and I can't have her walk out.
SMRT, smart.
Right. See, I'm waiting now. Here comes Beth. His analogy for you, he was thinking about it, but he couldn't get the words out. Something with softball where you're just happy to be in the batter's box and swing, but you could care less if you hit the ball. Right, Tom?
I don't put words in my mouth. I was trying to help you explain your situation.
So, okay. So, you know what's amazing? Beth and Tony thought what I talked about. They're like, oh, that's cool. Good job. So it's three against one.
They have
sometimes,
similar,
here it comes. They're happy to dribble too.
Yeah, they're you know.
So they're dribblers. So we're 3 dribblers and you're a shooter.
Yeah, exactly.
That is so on brand.
That is so exact.
That is so perfect.
Here we go. 3 dribblers and a shooter walk into a bar.
Who sits there cherry picking all day?
All right. There we go.
Hey, I tried.
Hey, Tony. I'm
Yes,
going to switch subjects.
Sure.
I would sing happy birthday to you, but you don't want to hear me sing. So I'm just going to say a very, very happy birthday. I hope the weekend brings you everything that you're looking for. Some nice family time, some nice personal time. We've never really talked about this. What's your workout? What's your go-to? Swimming right now? Running? What do you do?
For the sure thing?
No.
What do you mean? Begging usually works the best.
What's your workout? Like, what do you do for Tony?
Begging. I beg, and I beg. And
it's embarrassing. Okay. It's embarrassing.
I go through the whole year, all the good things I've done,
he's putting together a list right now of all the reasons of all the good things he's done. That's right.
Okay. From an exercise standpoint, do you do yoga?
No, don't do yoga anymore.
Big yoga person.
Scott, I don't know if you've noticed here, Scott. You know,
So I'm asking, you pumping the weights?
pumping the weights a little bit, couple times a week.
Nice.
Drop some
important.
lbs. You know.
Very important. As we get older, they're finding weightlifting is even much more important than they used to think it was. So keep it up.
Creatine, and pellets.
It's not helping your. It's not helping your memory though.
Testosterone pellets.
Testosterone pellets. Okay, we'll stop there. All right.
Get your testosterone checked is what I should tell you. I mean, you're all of age. Sadnov, you don't need to talk about this conversation because your transformation, testosterone would hurt your your transitioning. So don't do that. But get your testosterone checked and come back and see me.
Okay. Why don't you give the number?
855-238-2789 or 855-BE-TASTY. I got a couple of lines already. I got Austin, Florida, Dallas, and Philadelphia. We will get to you immediately following Mr. Scott Sheridan's list. Go.
Top 20 symbols going through the system. First 40 minutes a day, no broad-based indices or futures. Tom, I know you are not listening, but for everybody else, number 20, circle at a 4. For everybody else, we're going to start with 1. NVIDIA at an 8, IBIT at a 16, Tesla at a 17, MSTR at an 11, PLTR at a 41, SLV at a 37, Hood at a 35, Amazon at a 30, Coin at a 38, Meta at a 30, GLD at a 22, Apple at a 25, Netflix at a 37, SoFi at a 32, AMD at a 26, CRWV at an 8, HIMS at a 48, DAL at a 23, TQQQ at a 19, and number 20 for Tom, Circle at a 4.
Tomas, coin unchanged. It's been up around 3, down around 3, just letting you know because you were looking at getting short that, just leaving it right there for you. Let's go to the phone calls. We've got Andrew in Austin, Texas. Andrew, my man, how are you?
Good. It's your birthday?
Tomorrow, but we're not on tomorrow, so my fine friends have been wishing me a happy birthday, so thank you.
Normally, it's like in years past, you've already celebrated like a birthday month. So I'm actually surprised it's your birthday.
Yeah, Tom really wanted to do that, but Beth put an end to that because we live in a society now where, you know, everybody has to celebrate their birthday equally, you know, so whatever bull crap that is, you know, whatever.
I have one feature request for Tom to knock out over the weekend. I know you have it in your queue, but just improving that graph of the account value, the net lick. It's really tiny. It only goes back a year. It kind of sucks. And I even had to like hit the NetLick API and make my own graph in Google Sheets. I mean, even Schwab has a better graph than this, which is kind of embarrassing.
Yep. We agree. And it's a point of contention. We've been arguing with our devs and our requirements team now for 3 years. I don't know what to tell you. I mean, I would blame Scott Sheridan because he's the top of the food chain, but and he's on this call, so you can, you know, he can take that. We have been asking for that literally for Tony and I have been asking that for 3 to 5 years.
Could you actually do me? Could you do me a favor? Could you send me an email with a screenshot of just send me an email. So it's Scott at Tasty Trade.
Yeah. I'm not even going to defend our team. They just say they have other priorities that are bigger, but that's been missing on this platform for years, and we desperately need it.
Yeah, and it's an easy ad. So if you just send me an email, I'd greatly appreciate it, and I'll pass it to the powers that be.
Okay, thanks, Scott. Thank you all. Happy birthday.
Thank you.
Thank you again. Really do appreciate it. 855-238-2798, 855-BTAs. We're going to go to Florida. I got my man Joe. Giuseppe, what's up?
Hey, guys. How are you doing? First-time caller, long-time watcher, and trader with you guys. So,
thank you.
I got to admit, and happy birthday, Tony. Everyone needs one every now and then.
Yes, we had. Yeah. Once a year would be fine. That's right.
Once a year. So my question is this. So I do trading around core positions. And as an example, I bought some Tesla, back in January at a much higher price. But I've traded in and out on some additional blocks, right? So I have my thing set to LIFO, last in, first out. But on the trade pricing, as I've done this, I've noticed it does not keep the correct cost basis for the lot that I have. And so right now it's showing, yeah.
Let me jump in here. Our platform is FIFO, but Apex, that's all that really matters from a tax standpoint. If you've made the change, I actually haven't gone over this in a long time, but if you've made the change with Apex so that you want LIFO instead of FIFO, if you look at your conference and your statements, hopefully that's showing correct. If you have a question about it, you can call our desk, 888-247-1963, and somebody will be more than happy to help you. But regardless of the way that you have requested for it at Apex, which is the only thing that matters, I know we're then not showing you correctly because we're still showing you FIFO. So we have not updated the platform. We just don't have enough people that trade this way for us to have put the time in to fix it on the front end. But on the back end, it should be correct. But again,
So
if you have a question, call the desk.
His taxes and everything that he wants should be correct.
Correct. You're picking the lots that you want to sell by doing. You want LIFO, which we could do that at Apex. Again, our platform is just FIFO. We don't have the option.
Yeah,
but just call the desk. We'll walk you through it.
You know, it's a nit because I have to keep my spreadsheet so that I really know what my positions are and my averages. And you know, I was hoping that you might be able to have a button or something that says I want to switch the platform to being LIFO from FIFO if I trade that way.
Yeah. Hopefully we will get to that. But again, we don't have a lot of people that do the tax election. Yeah. So,
okay.
All right.
Yeah,
well,
I noticed the backside of that too is that when you go to do your year-end reconciliation for taxes, right? Some of the wash sale stuff gets really crazy where the statements believe that there's a discrepancy between wash sales that Apex is reporting and what I have in another professional accounting piece of software that kind of really matches it properly. So anyway, thanks a lot, guys. Keep up the great work. You got lots of great features.
Thank you, man. Thank you. Appreciate your time. We're going to go to Dallas, Texas. I got Sam, Dallas, Texas.
Hey, guys. How are you?
Doing good, Sam. Thanks for calling.
Hey, Tony. Happy birthday again.
Thank you very much.
Hey, sorry. So I have requested this feature before as well, so apologizing upfront. I wanted to know, like, for example, if I sell SPY options today, I wanted to know what was the underlying price. Like, if I want to look at Monday, right? I know what was the option price I sold for, right? But I don't know what was the underlying SPY price when I sold the option. Like, when I talked before, I thought you guys are working on it. Yeah.
We are. I don't know where it is in the queue. If you want to send me an email, I will get you an update as to where that is in the queue. But to have the ability to tag a filled order to say, here was the stock price, you know, when the option got filled here. Scott, SCOTT, at tastytrade.com. I will get back to you with an answer.
Yeah, the IVR on that same confirm, Scott, would be great.
Yep.
Price and IVR would be great.
Scott, it would work for futures as well, right? Not just equities?
I am actually being told that I haven't looked at this. I'm actually being told by Tim, who runs our product team, that is available right now under the order chain snapshot. So can you take a look at order chains and see if it is there? But again, just send me an email. Under order chains, so take a look and see if it's there. But if not, send me an email and I will have Tim send you a screenshot. And they both already have both price and IVR, so it's there. So it's in the snapshot view for order chains. So if you can't figure it out, just either send me an email or call the desk, and we will be happy to point it out to you. So thank you.
Very good, sir. Appreciate your call. We're going to go to
Here
Philadelphia.
we go. I can tell you. Oh, here, wait. Wait, I'm sorry, Tony, before we go on. Right-click on order chains. Right-click on order chains activity. View snapshot in the right side menu.
Right-click on order chains.
Order chains activity.
How do you get to activity?
I can't with him, Scott. You see, this is a 4-hour show. Now you got to add 4 hours. Can you send it to Tom in an email? And when you do, can you ask him to stay in screen?
Yeah,
I'm trying to figure it out. I'm trying to figure out what he said. I can't.
That's the answer. Tim will send you. Let's keep moving. Tim will send you an email. He'll give you nice pictures so you can follow along.
If anybody anybody would like to see that, support at tastytrade.com, they can get that for you. No problem. You can send it to me, bat@tastylive.com. I'm going to go to Philadelphia. I got Mike in Philadelphia.
Hey, guys. I'm going to work my way across the screen here, right to left. So now, Scott, I know you can't say anything even if Tom gave us a waiver, but he's got to be like the #1 Tasty customer with the amount of trading he does.
Not even close.
I'm in the team picture. I'm in the team picture.
Okay. Now, to the middle of the screen, Tony, happy birthday. What I want you to do when you go home is look up the life story of Michael Buffer. He turned 80 last October. There's a lot of similarities between you guys.
Wait,
he was like the king
Michael
of
Buffer, the announcer?
Yeah.
Michael Buffer, the boxing announcer?
Yeah.
That guy's 80 years old. Oh, damn.
Yeah, I mean,
let's get ready
to
rumble.
He's made hundreds of millions in royalties. He did things like, cheese, let's get ready to crumble. And it all started with his son saying, hey, Dad, you can do better than these guys. In Atlantic City, this is in the early 80s. They sent his picture out and all that. So do that assignment. Now, Tom, I got a question for you. Back in the day, Tony, can you bring up the SPY August 1 expiration? Go to the 632 strike. Now, Tom, you used to do this before Tasty. I want to know if it's still valid. So let's say you would sell the 632 SPY call. It's like, it's about $4.80. Now, the probability for that is 36% in the money. Or let's go out of the money. Or let's just go in the money. It doesn't really matter.
Top,
but,
yeah.
Yeah, whatever. It's the inverse. It's fine.
So if you, I just lost one. Okay, so the 632 call, you could get, wait, what did I say, 635?
480, 632 call, $4.80.
Let's say you sold the 635 call, you could get, not quite, what?
365, 370.
Mm-hmm.
It doesn't matter. So what's your point? What are you trying to say, Bank?
All right. So if you go to the 4, if you add $4 to that, that would take you to the 637, and it would be 30% chance in the money. Is that still like a valid way to look at it? In other words, the percent, if you sell 632, you'd get like $6, but if you add 6 to it, you get close to 638, which is 30%.
Sure.
I mean,
right. I mean, of course. Yeah. You mean you're talking about your break even? Sure.
Yeah. Okay.
Yeah. Why not? Of course. Yep.
Okay.
Absolutely.
All right. I'm going to jump off. I guess we got 10 minutes to the hour.
Thank you, my man. I appreciate it.
All right.
Hey, Tony, before you go on, I'm going to say that I just did this. It's the view market state snapshot on my order chains, which I did not know. Obviously, we didn't know was there. It's awesome. It opens a separate graph, and you have 5 different features that you can look at, 5 different numbers you can look at that we're recording. So it's great.
You better show me how to do this.
Okay, Tony, do you think Tom knows what order chain? Do you even know what order chains is?
I use them all the time. I use them every day.
Okay. I have the link.
Go to order chains.
Got it.
Let me try to do something. Let's get ready for order chains. I have the link if you would like to see what Scott is talking about, and Tom cannot find, but hundreds of other viewers have found already quite easily. Send me an email. That's bat.
Go
Boy,
to
Apple
order.
Tom.
So Tom, pick any roll.
Yeah, I already did it. I already got it.
Right click. Okay.
I already got it.
It's cool. Yeah, and then at the bottom. So you might not see that at the bottom.
Yeah, I already got it. I got it. Yeah, it's cool. I didn't even know that was there.
Right. Yeah, what have you done for me lately? Thanks, Scott. We're going to go to Florida. I got Bob in Florida.
I actually didn't know that was there. That's a good piece of, that's a good feature.
That is a good feature.
Yeah, the 6Js, I'm curious if how you guys would look at trading that. Love to see a show on the Japanese yen.
I mean, we trade it all the time. We have a bunch of positions on there now. We're just short a bunch of puts in there. We usually do for me, I can't speak for everybody else, but I'm bullish on Japanese yen. So I've been selling the 30 delta puts all year long. Those tend to be about 2 points under where it's currently trading. So for example, like right now, if it's 68 or 69, we're selling the 66.5 or 67s, but that's how we tend to trade. Same thing, 45 days out, roll them at 21 days. And you got to trade really small in there because the markets they're okay. They're generally 20 ticks wide, and they trade somewhere in the mid price if you just leave your order in.
Right. Usually I don't like to keep them over the weekend, but I have one I have a couple that I'm going to stay with. And
yeah, they're hard to scalp in and out of because you have to give up that extra tick to get out. So I tend to not scalp them. I just leave them on. But so far this year, they've worked.
Yeah, I've had good luck with it too. And when they move, they tend to move for a longer period of time. But the last day or two, they've really hit an extreme in the last 2 days.
Yeah, the yen sold off about almost 300 points. Yeah.
Yeah. But it seems like they're bouncing right now. And I'd love to hear about you guys' thoughts on the housing stocks.
Oh boy, that's Victor Jones' area of expertise. Tony and I avoid it like the plague because their XHB is so illiquid and the housing stocks are such, they're so hard to trade.
Housing is a very hard thing to play. I know bullish, bearish on sales and everything else. It's a very hard market to trade.
Victor's the only one we have of all the hosts that talk about housing stocks. He's long them all. He loves them for some reason. I don't have the same love. Tony and I don't trade it. Honestly, I don't think we've traded XHB in a year.
Yep.
HSB. And the European options that they have for the yen, are there any shows you guys have done where you've gone over trading those as compared to the American options or regular options?
I didn't even know does the yen have a different set of options?
Well, I'm looking at the Charles Schwab screen. Yeah, the Charles Schwab screen. They're all European options. I don't even know if they let you. I forgot. Let's just see. Yeah,
I don't trade the yen, but I would imagine that has to settle into the currency. It's not a cash settled product.
They're all European options in the yen.
They don't. They settle. You're European, but are they cash settled? Are they?
Oh, they all settle into the future. They all settle into the future.
But European meaning there's no early exercise.
They're technically. I don't know if there's an early exercise. There technically could be, but I don't think it's ever happened before.
You know, it's funny. I don't know if any of the products. I don't know if any of the products are American. I think they're all European. It's really funny. I don't even know that. I mean, I've never tried exercising.
You see, the problem in the futures options is all the carry costs are built in, so there's no reason to ever exercise early. And they all settle to the future. None of those settle to cash. But I'm not sure what they're classified as.
I think, I know in ES they go, the monthlies do go future cash. So if you're on the monthly, that does go future instantly into cash. But non they do into future.
Quarterly.
Yeah.
But anyway, you could ask Pete. You could ask Pete.
Sorry, I will.
You could ask Pete. Yeah.
Very good. Let's try to get to a couple more. Go ahead.
Okay.
Yeah, but there's not two different choices. There's not two different choices. Like Schwab and Tasty offer the exact same options. There's no other choice.
Let's go to Utah. I got Chad. Chad in Utah.
Hey guys, how are you?
Hey Chad.
Doing great, man. How are you?
Doing well. First time caller. Thanks, guys. Hey, quick question for you guys, Scott. Tell me where you guys stand on like an active trader / dome scenario. Are you guys working on that, or what's the?
Yeah.
Oh no, we're not working on it. It's almost released. It's almost done. We have a new active trader that I think could be out this month. So I'm supposed to see a demo on it shortly, but yes, very close to it.
And is that going to have things like bracket orders, and you can do multiple stuff and adjustments and stops and all that kind of stuff in it?
I believe so. I don't know where our day one is. You know, some of the stuff might be a day 2 or 3, but I believe brackets are day 1.
And the adjusting the stops is
like
definitely, yeah, adjusting the stops and all that stuff is all day 1.
Yeah.
Nice. Well, we'll look forward to that. Thanks, guys. I'll let you get the next call.
You got it, my man. Appreciate it.
Here, I just got this one. I want to be careful how I'm launching this one, but if you want to send, hold on, let me get the email address. Let me figure out where this email address. I'm going to tell you, you could send an email to this address if you would like to beta test. So if you would like to, we're going internally next week, probably another week or two until we go live with clients. But if you would like to beta, I am going to give me 10 seconds. I'm going to give you an email address that you can send your information to. So this is for the active trader for the dome.
And what are you guys calling that? Is it?
What are we calling it? I don't know. I mean, active trader. It's our new active trader interface. I'm not sure we're putting a name on it. Yeah. Send it to here. So send your email if you want to do this and just say you'd like to beta test. Feedback, FEEDBACK @tastytrade.com. Feedback @tastytrade.com. Send your email address that's tied. Send the email address that's tied to your account in case you have multiple email addresses, and they will get you set up.
All Japanese yen options are European style.
European. Yeah.
Yeah.
I think all. I don't know that there is a future that's that's American.
I think they all are. They're European style and they're auto exercised if you don't do anything.
And you can't DNE. So you can't DNE a future option. Which you can't.
That's do not exercise, right?
Right.
All right, guys, I'm so sorry we ran out of time. I do appreciate everybody who was on the line that did not get through. I will leave you with this email that somebody sent me. It's perfect. They said to me, I hope you have a wonderful birthday and enjoy your meals. Rest assured, both Tom and Scott will hate the places you go to, the meals you order, and the way you eat them. We're going to take a quick 90-second break and come back.
Get the hummus. Get the hummus.
We'll be back in 90 seconds. Peace. You really are something else.
Get the hummus.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
All right, Mike.
All right, Glenn.
All right, Nick. What's a recent news report or earnings call that completely changed your view on a company?
I mean, everything that's happened with UNH over the last month or so, and seeing the movement in the stock, and then over the last 2 months, it stayed basically sideways. So I feel like the worst of it is baked in here.
Probably Lululemon. I thought it was the clothing brand you wanted, but it's not the stock you want, that's for sure. They were hit hard with tariff implications, I presume, but yeah, their stock went down like 30%, 20-30% after earnings. So big red flag.
A common trend now, given all the tariff volatility, is to just not give guidance. I think that's really interesting. We'll see how that shakes out. It's been up and down for different companies, but I don't think that'll continue very long.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody, and welcome to the Friday edition of TP and VLD. I still
Is
love
it
the name.
Friday already, Liz? Oh my gosh!
You know how I know it's Friday? Flame Shirt Friday, TP.
That's
I
right.
asked,
That's
and you
right.
came through. I love it.
You know what? It's I don't get to wear this shirt often enough. I really don't. And we were just talking during the break with John and talking about how hot it is here in Central Texas. And these are very nice shirts, right? They're kind of heavy cotton, so they hold up well and all that stuff. But they're a little warm to wear outside these days. I'll be honest.
Ooh.
So yeah, no, they are.
What does one wear? Okay. How do you keep cool outside? Do you use like the cooling fans, the cooling towels? And have you seen those things that go around your neck?
I don't go outside. That's why it's just no, that's not true. It's seriously, I can be outside in the heat for like 20 minutes, and then I have to go back in because I'm old. It's as simple as that.
I'm old too, but so and it has been warm here not this week, but the last week. And so TP, I'm turning into an old person where I'm freezing inside, and then I go outside and I warm up, and then I come back in and I'm freezing again. I'm turning into a 90-year-old.
That's what my wife does. So she's much happier in the hot weather than I am. And she'll come inside and I'll have the air conditioning at 72 or something. So, oh my gosh, it's freezing in here. So anyway, same thing.
Oh, TP, I got to give you a massive shout out. Okay, John, if we could jump into the, I'm on our site. So tastylive.com this morning, TP, this market measures, if we could pull it up so everybody could see it, John, that'd be great. well, that's at work by 11. So this is great, but I'm going to go to, here we go. So I'm in just tastylive.com. TP, this market measures is dedicated to you. So I was shocked and awed at the nice things. I was shocked and awed at the nice things that Tom Sosnoff said about you and how you created the portfolio margining, to the point where I think you need to go back, watch this, and cut out those clips and save them for your personal use. Because he's like, TP is so smart. TP created this.
Well, thank you, Liz. Thank you, Liz. You know, Tom and I have worked together for a long time, and it's rare that we compliment each other. Especially in person. Especially in person.
Well, I know I'm bringing this to your attention because he would never say it to you, but I heard
Well, it's just like if we go out to dinner or something like that, or go out to lunch, I will never compliment him on the restaurant. I just can't. Even if I'm loving the food, I just can't say, gee, Tom, this was a good call. I just can't. Although a lot of the places we've already been to, 20 times, so I already know what it is. Anyway, no, that's nice. And the whole portfolio margining thing, we have pioneered a lot of industry standards over the past 25 years. And we push the boundaries. And like I said, I think we talked about this on Monday. The most important thing and the hardest thing, Liz, is to ask the question, what's next? What do I build next? Because answering that question is easy, okay? We have really smart people on the dev team. We have really smart, research people. They can answer the question. The hard part is coming up with a question. So it's for, let's say, capital efficiency and portfolio margin. It's imagine what would it be like if, in the same way that you reduce your capital by buying an out of the money put against a short in the money put, closer to the money put, creating a vertical. Imagine if you had that across two highly correlated underlines.
Yes, that's an excellent point.
That was the question. They figured it out in a week, how to do it. I write up the specs and all that jazz. But the point is, it's asking the question. And so we've been asking questions like this that have become industry standards.
You know what? TP, I don't think people realize this, and this is what Tom was saying. And you can correct me because you are actually the creator of this. He was giving credit to you and Clink for creating portfolio margining that is an industry standard across not just us. This is now an industry standard across all platforms. Why didn't you name it something like TP's Guide to Options instead of portfolio margin?
Because it might be my idea, but the exchange has to own it.
Oh.
Okay. So the exchanges would never say, oh, it's Tom Preston, blah, 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 because and they can't, right? So whether it's the CBOE or the CME or the board, whoever it is, they can't, it has to be their thing, right? Because another brokerage firm or another trading firm isn't going to let Tom Preston figure it out. No, it's like, so it has to be the exchange. That's why, for example, and we've done all sorts of things with this, whether it's margins on verticals and butterflies and broken wing butterflies, which I changed, right? Yeah. I taught the world how to margin those things. Took forever to convince them. Penny wide options, ticks and pennies. We did weekly and daily expirations. All that stuff was asking how it could be better.
Do your kids know how important you were in this industry?
No.
Get those two girls on camera right now. I need to tell them.
They're busy with their own things, but they're trading. My younger daughter's now 19, so she has her own account now, and they're putting on little trades, and they're young and they're busy with their lives and everything, so they can't be glued to the screen like you are, for example. And I think with both our kids, and your kids are about the same age as mine, that I think what we're trying to do with them is if I knew when I was 20 what I knew when I was 50, right? And give them that advantage that I never got.
No.
My parents didn't even know this world existed.
No, you know what?
God bless them, but they didn't know.
I don't know that it did exist, though. Do you know what I mean? I mean, when you talk about the options exchange, I mean, Frankie would know this more than anybody else, but the options exchange, I think, was built in. Puts didn't come around until a long time. Like
Frankie is my spirit father. He's like my spiritual father.
I'm telling you, though, if I ever get on a game show, Frankie's going to be my number one call, because I feel like. For those of you just joining us, Frank Walsh is the man, the myth, and the legend behind the YouTube chat. But so he will be my first. Like, if I ever have to phone a friend, it's Frank Walsh.
100%. 100%. Frankie on speed dial.
Yes. I mean, his knowledge of weird is vast. Like, it's out of control. Nonetheless, I did want to give you that little props because I did hear, and he was giving you a lot of credit this morning. So for those of you who aren't interested in portfolio margin, go back and watch that market measures. It was a pretty good one. Okay, TP, we've got a couple questions that we want to answer that came in via a viewer, correct?
Yes. Yes.
And then we also want to talk about, if I'm understanding correctly, either put call parity or boxing off a position.
Okay, sure. Okay. Let's do it.
Yeah. So do you want to go questions first?
Yeah, let's do these questions because they're kind of big-ish questions.
Okay.
And these came from a client in Italy, Fabio, great customer, and again, it's the questions that are important. And do you have them?
I do. I can read them. Do you want me to read them?
Do you want to bullet point them, and we can kind of talk about let's say the first one, because I'm seeing them now. But if you want to bullet point them for presentation,
and then we'll talk through it because I don't have them up, so we're just going to read and talk through it. So number one, if I understood correctly, you mentioned that often you trade stock options without knowing the underlying company or its business. So I think this is a good question. Doesn't that mean you might miss or avoid opportunities that are tied to news or fundamental development? Also, how do you manage the risk of ending up with multiple positions in stocks in the same sector? So that's a couple questions in there. And you know what I love about these, TP, is you and I will flippantly say news doesn't matter, it's built in.
Right. And here's why. So when and again, Fabio knows this, you know this, Liz, obviously, and you do the same thing, it's liquidity first, volatility, and then probabilities and strategy. And news is for context. News gives you something to talk about, like to your neighbor or whatever.
Yeah.
But really, it's do I miss opportunities with news? And my answer to that is, and this is going back a long time. When I was trading bonds, bond options, and we were looking at the unemployment reports coming out at 7:30, I could never guess them right. And we would say, even if we got them ahead of time before everybody else, we still wouldn't know whether to be long or short bonds. Okay.
No, you don't. And I think a lot of people who haven't been trading don't understand that. Even if you got the reports in advance, what is the market going to do? You don't know.
Right. So analyzing the news. So as a small trader, and I'm not being, falsely modest, but as I don't have billions of dollars to invest like a hedge fund or a pension fund or an insurance company, if they react to news in some way or to some other influence, then it doesn't matter what I think. I've seen stocks with great earnings drop on the news.
Yeah.
Aren't positive. Isn't an earnings beat supposed to be bullish? And vice versa, Liz.
Yeah.
We've seen that so often that over time, and when you go with the Liz and Jenny trade small, trade off, and number of occurrences, get those up, that the news kind of comes out in the wash. That whatever my opinion is about the news really over time doesn't matter.
So, TP, I got to ask you a question from my perspective. Now, granted, this is Fabio's question, so I understand that, but I'm just going to ask you this. I kind of think it's almost backward looking for a reason. So sometimes if I walk away from my platform for, say, I'm going out and walking the dog and I come back 20 minutes later and the SPOOs are down 100, then I'll go look and be like, what happened? Instead of, because the markets are going to react faster than any human or any computer can to the news. So sometimes I'll go, what happened, instead of what can I do? So it's almost backwards looking for me.
Yes, because I think the what is more important than the why.
Yeah.
Right. So there's always some reason you can attach to, oh, the SPOOs are down $50. Right.
Yeah.
There's something you can find in the news. Is that the reason why? I don't know.
We're on the platform now. I just want to show, we just finally built this in. So I'm just going to go to wherever. I'm just going to go pop out the side in Amazon. This news button, this was not here for a very long time in the platform, but people asked for it. So there is the news on each thing. We very rarely will go there unless I want to see what happened, right? If I'm looking at that. But, if you get this news in advance, you really don't know what to do with it.
And so, to the point, am I missing opportunities? Perhaps. And I am not saying, Liz, that Fabio or any of our viewers can't look at a company, in other words, Amazon, and really analyze it and understand Amazon as a business and all the stuff it does and come up with a bullish or bearish bias. I am not saying that you can't do that or that it's impossible. It's just I don't. But use a high probability strategy for your speculation. In other words, if you come up through your analysis that Amazon is going up, sell a put spread. If you're bearish on Amazon, sell a call spread.
And right. And I mean, I like when somebody else, I went through a year with this where I was like, somebody else is going to make the directional assumption, however they get there, Fibonacci numbers, charting, whatever they do. And then I'm going to overlay a high probability strategy on top of it. Because I would rather do something where it's a high probability strategy to me. And do you think that's quantitative trading? Is that what that's called? If you do bearish or bullish. So if I'm in Amazon and somebody thinks it's going up, to your point, you're still going to I would sell a put spread instead of going out and buying Amazon. But would you call that quantitative instead of saying
fundamental?
Directional?
Yeah. Yes. I think in there, these quant trading firms, they call themselves quant firms because they use, what do? They use volatility and probabilities. They took the formulas that we created and built their firms around them. Okay, fine. But the point is that, it's really kind of quantitative trading, that it's not news, it's not charts. It's just, we're quant traders in that sense.
That's pretty interesting. All right, now I'm going to go on to number 2, okay?
Well, hang on. So the other is it manage the risk of ending up with multiple positions in stocks from the same sector.
Yeah.
So what I typically do there is what can happen is a sector, let's say a biotech or chip manufacturers or whatever, if one becomes very volatile, they can all become very volatile.
Correct.
So I can tend to have multiple positions across, let's say, oil and gas stocks or chip stocks or whatever. How do I manage the risk? I will often go into my portfolio management stuff and say, which trades are okay, I agree with the liquidity, I've got my volatility set, they're all good, but I will manage them via capital usage. So one of the things in a different sector, they may have the same volatility, but they might have very different prices. So a high price stock will have options that use up a lot of capital. And I may manage the risk like that. If I see my capital being outweighed in one symbol, I will pare that back.
Okay. So because so let me just see if I can break this down. You do kind of agree that sometimes you'll have a lot of risk in the same sector, right? Mm-hmm. And that's easy to do because if you're a volatility chaser, a lot of sectors have the same volatility at the same time. To your point, if it's a chip maker, if it's an oil and gas, if it's things like that, all those products have a tendency to increase volatility at the same time. So you look at it more from a capital basis perspective, saying I want to keep my capital in check. That's a good way to look at it, TP.
Yeah, because again, going back to the first question, do I have any news about this stuff? No, but if I have multiple positions and I don't disagree with any of them, I still kind of like them, I will manage them according to capital. And so I might maintain them, but managing the capital is managing the risk.
Do you ever use the beta weighted delta to see if you're too? But the beta weighted delta is across sectors as well, so it's not as if that can give you sector the risk.
Beta weighted deltas, I can put in the any symbol to beta weight against, but what it does in the analogy I use, it takes apples, oranges, and peaches and turns them all into grapes so that I can see how many grapes I have. And it will show me how much delta risk I have relative to something else. That's a very valuable tool also. But the easiest, fastest thing is to look at the capital requirement.
So, I mean, once again, I apologize, but I feel like I can ask you anything.
That's
so you
okay.
can take. I'm just gonna try to unpack this for a second. This beta weighted delta, this column right here. I'm with the standard, so it's beta weighted to the S&P 500. That's what it comes with. But you said you can change this. So say I think oil is going crazy, and I'm in a lot of oil stocks. I could beta weight this to CL.
So there's a way, and I'd have to dig through this. I haven't.
No,
done
you don't have to do it right now. But I was just there is a way to do it.
I think if you go in the settings, that you can actually change the beta weighting symbol.
That's
it's
another way to see.
Group by, or if you click on the.
This guy.
What happens if you hit
there are people that are better at the platform. I'm sure there's a way to do it, but I just wanted to say, so if somebody was I'm too all up in a certain sector, you can beta weight it to something to see what your exposure is.
So Liz, click on that little gear to the right of SPY where it says SPY. Not there. The little gear.
Oh, right here, this guy?
Yes. Right in the middle,
beta weighting symbol. I'm gonna make it to. I mean, I'm just gonna go to NVIDIA.
Anything. Yeah, and do NVIDIA.
I just want to see what my beta weighted is and how much chip sector exposure we have, right? Like.
Yeah.
And then that's in there, and then this changes all the beta weighting. Wow.
Yes. Yeah.
That's cool.
Yeah.
I gotta go back to SPY though. So Jenny's gonna come back and try to hit me if it's all beta weighted NVIDIA. But even like if you wanted Bitcoin exposure or what your exposure is in there, that's pretty interesting that you have that feature.
Yes, and so if you're looking at an industry sector and you say, okay, generally I weight to SPY, and that is the most valid, most reliable number. But if you have a bunch of, let's say, 3 or 4 or 5 symbols in the same sector, pick one of the big stocks like NVIDIA for chip stocks.
Yeah.
Sure. Or USO for oil stock, whatever. And you say, okay, how does it even, where am I, do I have any delta risk that's overweighted? That's a tool that I invented 20 years ago. And I don't know if anybody else has it. Maybe they do. I'm not sure.
I don't know, TP, but like I said, I was today old when I realized that I could change this.
Yes.
That I could. That's amazing. So that's another way for you to kind of check to see if you're too overweight. Now I like yours better because I like keeping an eye on your capital usage, because if you have, it's almost as if saying that you think that's the one that's going to win if you have more capital in one than the other. And we don't really know. With trade small, trade often, you want to pepper the infield, but we don't know which is the winners and which is the losers, and there will be losers.
Right. And like I tell my kids, it's trading, it's not like a corporate job. I mean, it kind of is, you're sitting at a desk and everything, but you have to be fast and decisive. And looking at capital requirements is very fast. And whether you're decisive or not is personality, but that's beta weighting's fast too, but capital requirement I think is a little bit faster.
That was pretty cool. Okay, I like that. And then now I'm going to go on to number 2 just to make sure we get to everybody.
Yes.
Okay. So number 2 is, could you explain how to adjust a strategy when it's not going as planned? For example, some time ago, I was assigned in SoFi at the 1550, and I'm actually going to type this in as I'm talking. Okay, SoFi. So he was assigned at 1550. It's now 2162, and then I opened a covered call and kept rolling it. So now I'm holding a 17 call. Okay, so he's got the 17 call expiring February.
Way out there. Okay.
Way out there. February 2026 with a break even around 1974. If I roll again, I'd have to roll out to March at 17, which would push the break even to about $22 just to collect a credit. It's starting to feel like an endless wheel. Is there a way to break this cycle without losing the current value of the stock? Would it make sense to convert into a vertical spread, or perhaps consider another strategy?
So
they're
the
at 17 level.
Yeah, I think this is kind of a first class problem, right? If he bought stock at 15.50 and he sold a 17 call against it, the trade should be up a little bit of money. Now he's giving up profits as the stock goes from 17 to 21.5, right? Maybe that's the question. And if you are rolling out, if you're buying back, if you sell a call, stock rallies up to that, and now you have to buy that short call back if you want to hold on to the stock. That's a first class problem. You're working with profits, not big profits, but you should be making a little money on that trade. I don't think that's just the nature of that trade.
Right.
It's just and I can tell you, did some trading today where, I closed out an slightly in the money option. Did I give up some profits on it, on the overall position? Yeah, but not much. That's why I don't like hedging. I don't like hedging.
I sort of feel like this is the quintessential age as old as time question of new traders, right? So you're long stock and you sell a call against it. You've made money, but the second you sell that call, you've capped your gains. So you have to be willing to say, do I want to make money from whatever, 14 to 17 plus that, because they're together. And I'll never forget this, TP. My father-in-law, he's a great trader now, but when I first started at Tasty, he was like, I don't get it, Liz. He's like, I'm losing so much money on this call. I'm losing so much money on this call. I was like, once you place them, they're married. So they're together. So whatever you make on the stock, you're going to be losing on the call minus the extrinsic value. And that was the hardest hurdle, I think, for him to get over.
Yeah. And so I think you and I do this shorthand, right?
Yeah.
And sometimes it's hard when you're starting out, or when you first see this problem, it's like, it's not really a problem. What you have is a winning trade on your stock and a losing trade on your short call. Net, you should be slightly profitable. Now, if the question is, if you want to hang on to that stock, then yes, you have to continually roll that call up and out. Now, I think going out to February is a little bit long.
I think so too. And it's interesting because he says, is there any way to break the cycle without losing the current value of the stock? And then it says, would it make sense to convert the covered call into a vertical spread? So if you're willing to go to a vertical spread, this is an opinion, if I'm willing to give up that stock, I would close the entire position and then go back out and start by selling an out of the money put in a nearer term cycle.
Yes, that's the way, because, and again, it goes back to capital, Liz. It goes back to capital. And I'm using less capital to sell that put than buy the stock.
Here you're using $270, where in that other one where I had it up, he was using $670. You've got the out of the monies again. Instead of holding out the stock with a call, it does alleviate some capital.
So it's the way to break the cycle. I think if you are still bullish on SoFi, buy back the call, sell the stock, just get to flat, and start again with a short put. Because then it becomes simpler.
You could even be aggressive, TP, because if he's got if he's got a deep in the money, you could start with an in the money put, which is that a covered call anyway. You could get a little bit aggressive with it. It's still less capital.
22, 100%. You're actually getting more delta risk. You're getting 50 shares of stock risk on that. So that's how I would think about it. And vertical, you can do it a vertical if you want. If you want to keep the capital down, but here's the thing, with a $21.50 stock, the margins aren't huge on the naked options.
They're not.
They're not huge. And you might not get the credits for, well, you kind of do. Yeah, if I sell the 19-20 call spread, I'd get about 20. Oh, no, not the call spread. I'm sorry, the put spread. I'm sorry, Liz. If I sell the 1920 put spread,
you're getting 33 cents.
30 cents. Yeah, you know, you could do something like that.
You could. I mean, in multiples, but yeah, that's the way to do it, is to keep it down, right?
Yeah. So I would, again, there's no best in trading options. There are only alternatives. And
can I ask you a question too? Do you take capital to capital? Do you take, so I'm just back of the napkin math, but when he had that long stock position on and the February call, it was holding up about $600. Now that's quite a bit, right? Mm-hmm. Would you ever take, now I just threw the 21.19 in just because it's a little bit more, but brought the capital requirement up to what it was to hold that stock, and you can make $380 in a shorter amount of time, in 35 days, if you're willing to hold up that much capital.
Yeah. Yes. So yeah, you could absolutely. In other words, if I'm comfortable with taking, you know, $700 worth of using $700 worth of capital in SoFi, then yes, you put on a spread that has a $620 buying power effect. Now, why does that have? Oh, because you're doing 5 of these. Okay, that's why.
Oh, I just upped it because I said if they're gonna, I wanted buying power to buying power, meaning that if you're willing to leave that stock on for till February, right? So from that perspective, and all you can make is the extrinsic value that is left in your call, which was about, I don't know, I think like $1 or something like that. So if you're going to use that amount of capital out to February, you could close that, come to SoFi, and now granted SoFi has to go up, but if you're bullish,
you're bullish on it.
Yeah.
And so to illustrate your point, Liz, let's go back and look at those February calls again.
The February calls. So
just to show you what you're talking about, because it's a very important point.
So
if I go in there and
17th.
I look at the 17th. So the 17 call, yes, it's trading at $6.85. But that's mostly intrinsic value. The extrinsic value, like Liz was saying, is the value of the out-of-the-money put.
So that's all you have left to make. If SoFi stays right here, even goes down to 17, just not through 17, all you can make on this is the extrinsic value, which is 166. That's your profit potential.
Liz, over 7 months.
Yeah.
Over 7 months. I have bills to pay. I have animals to feed. I have to feed myself. I can't afford to make $100 over 7 months.
Right.
Okay.
So what's your best case scenario here? Your best case scenario would be if SoFi goes in 7 months, goes back to 17, and then you can keep selling extrinsic calls against it. That's why when it gets to this point, I would close it. And I think people don't realize all you have left is the extrinsic value in the option. And to TP's point, over the next 224 days.
Yes. Compare that to the spread you pulled up, Liz. I can get.
Well, here, I'm going to actually pull this up in like how he has it. So he was long the stock with this. So that is using $634. That's how I got to that number before. Around about, I think I was using 620. But if you're long the stock in a regular margin account, if you're long the stock and short that 17 call, it's holding up $634.
Perfect. Yeah. And that's why, and if you want to do capital to capital like you were doing, selling 5 of those put spreads, and holy smokes, Liz, that has a 70% chance of making half its max profit, which would be about $1,900 or excuse me, $190 in less than 35 days, which is more than you could make on the 17 call in 220 days.
Correct. Which is pretty interesting. It's just interesting when you learn your choices.
Yes. And so do I know that these August put spreads are the better choice? No, I don't.
No.
You know, the 17 call in Feb, who knows? Maybe that's a better trade, but I don't think so. Not looking at the metrics. And that's all I know about SoFi. Well, going back to the news and charts and everything, I don't know anything about SoFi.
You can also cut some of your risk. No, I know I went capital requirement to capital requirement, but say you wanted to just do a 3 lot, right? So you're taking it down, you're eliminating a lot of your risk, and your buying power is only $375 instead of $600, and you can still make $225 or 50% of that in the next 35 days.
The other number, and I don't want to spend too much time on this, but the number I really like to look at, Liz, is my theta versus buying power. In other words, the theta return on capital. I don't know if the stock's going up, but I know I'll make theoretically $1.45 a day on this. I'll take $1.45 divided by 375, and what do I get? About 0.4%, right?
Yeah.
0.4% per day return on $1 of risk, right? So that's a massive return on capital. 0.4% per day. Over 10 days, that's 4%. 20 days, that's 8%.
We're a small fry account, but I'm putting one of these in.
Yeah. No, and so that's so when you think about it like that, it's like, holy smokes. Those are the kind of returns you can get.
Those are but I really like those questions, and I'm glad because it's kind of something you and I take for granted, right?
We learned this stuff decades ago, and we forget sometime, and I will speak for you also, is that we forget what it's like to be shown this for the first time.
Yeah.
Wait a second, what's that again? What are you doing? What is this? And that's okay. That's okay. But really, going back to the point we made on Monday, the best beginner strategy is a vertical. Yeah, because that's something that I still can look at and talk about, just like we talked about here, Liz. You sell the put spread because it has great metrics.
Yes. Now, okay. Well, and there was another question I think that you had today about how you can see what your maximum loss is by using the opposite.
Oh, yeah. So let's say you're wrong about SoFi, Liz. Let's say you're wrong. And it drops 5 points.
Yeah, it goes from 21 to 16.
16. How do I estimate what my loss would be? And this is the old market maker trick. This is before we had computers, before we had pushing buttons and all that stuff. What I'm going to do is assume, and it's not a terrible assumption. I'm going to assume that my 1921 put spread is going to look like the 24-26 put spread does right now.
Oh, so you know what you could do too? Okay, 24-26. I like that. We'll go 24-26.
And all right. So that is now $1.55.
Mm-hmm.
Right? So I sold that put spread, the 1921 for, what did you take in, Liz?
Hold on, I got to go back. I'm not as good as you. I sold it for 74 cents.
74 cents. So if SoFi collapses and drops 5 points, that spread might be worth about $1.55, roughly. Okay, so that means your loss is going to be about $80. You're not going to be at your maximum loss, but can you manage an $80 loss? Yes or no? But that's what it's going to look like.
It's a pretty interesting thing because it won't be full loss if it wildly gaps down. But you know what the kids these days have that we didn't, TP, is all these other expiration cycles. So you can say you could even go a little bit more accurate with it and say, okay, 35 days right now, say 15 days or 14 days marches on. What is it worth in 14 days if it's down that low? And it's still not that bad.
$1.60.
Yeah.
Right.
It's still not that bad.
And just go out and push the boundaries a little bit and push that to 14-day cycle. So all you have to do is
look at this. I'm going to just take the expiration cycle down so we can see how much you'll lose. 180, still not max loss.
Easy this is. You're just clicking on this stuff. So my point is, without getting into the theoretical values and all that stuff, this is a way to stress test your position. And by the way, Ms. Deerking, this is basically what the portfolio margining system does.
Oh, good segue there, Tom.
Not exactly. There's some calculations, but that's what it does. It says take SoFi and take it down $5. See what the loss is. That's what it does.
So and I know SoFi is a very, 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 very low price product, but I'm going to try to go to, let me see. I'm going to go to ZB, even though we have a position in it. So what TP is saying is, I think what you're saying too, is I'm just going to make a spread up. So I'm going to go here to here. Okay, so this is actually more. Let me try to find something else. What's a future that the max loss is going to be more than the buying power effect?
Oh, maybe. Oh, well, yeah, like crude oil. Well, like crude oil or something.
I'll try CL. Okay, we'll go to CL.
Try crude oil.
I'm going to go out a little bit.
Yeah,
so
go out a little bit.
I'm going to go 65.
Widespread.
So I have to go really wide. Oh, this is a decent example. Okay, here we go. Well, it's still more. I'll go wide.
Right there.
So your buying power effect here is actually holding up more than your maximum loss. So
that might be. I'm not sure. I don't know why that should be the case.
I know. Maybe it's because crude oil is a hot topic right now.
Yeah, but in any case, what you're talking about is you could do this with futures options, stock options, index options, where you stress test a position. Right there. So I can say if nat gas drops, 38 cents or 50 cents or $1 goes down to 238. If I move this up to the 365 410 put spread, that's approximately what it would look like. That would be the value of it.
And so the portfolio margining is pretty smart in the fact that it's very much like span margining or smart margining here, meaning like your max loss at expiration is 3,500, but it's saying that you're risking this, and that's why we're allowing you to only hold up X amount, and that's what portfolio margining does, right? You took like a realistic approach instead of saying, okay, if I'm buying this just to eliminate my losses, what's the realistic loss that could have happened?
Yeah, and it's right. And the big difference is that it is volatility based and risk based as opposed to price based, which is what the standard margin system is. In other words, regular, a margin account, 50% of the stock price, things like that, that's price based. This is portfolio margining, and futures margining is volatility based.
TP, what do you think of this market too, by the way? Because we were down 35, now we're only down 16.
Are we back up?
We're not up. We're only down 16. It's kind of crazy.
No, this is a pretty. We're at all-time highs basically in stocks. This is interest rates haven't gone down. Inflation is maybe an issue. Who knows? But it's this is why. Look, Liz, you can do the same thing. You can come up with half a dozen reasons why things don't look good for the American economy. Okay. but it is still, the S&P 500 is still at its all-time high. Yeah, it's off a little bit today, but this rally is amazing. This is amazing.
This off a little bit today. It's like that's the smallest bar you'll ever see. It's kind of crazy that we bottom. But yeah.
And I have been very carefully, I've been selling put spreads in SPX and NDX in the morning, collecting a little bit of credit and doing the whole, the LD strategy, buying it back, putting in the GTC order. And that's basically worked over the past few weeks.
It has. We've and a lot of our viewers have been doing that same thing too. They're either doing the iron fly and it's coming off, or they're doing just the put spread. And we did a lot of research on just the put spread has been working.
And this is why it's. Go ahead.
I do need to clarify. I just do need to clarify. When I said we've done a lot of research, please keep in mind that is not me. This is people that are much smarter than me. It's your Jacobs that is doing the research. I'm just reading the research. I just want to be clear. Like, it's not me.
Though, there's a difference between, let's say, being a trader and doing research. So
Correct.
You can do a lot of research, but you have to be willing to take risk and actually pull the trigger on this stuff. Yep. And you'll learn way more about trading. It's just like, Liz, remember the people that were like the clerks down there at the CBOE? They've been down there for 30 years, and they'd be the out trade clerks, the whatever, the exchange officials. They didn't understand trading. And it's not bad. I'm not saying that they needed to, but but if you traded for a week, you learned more than they did in 30 years. Trading, you learn in dog years.
Did you start as a clerk?
Yeah, briefly.
Yeah, I mean,
Before I get the badge.
I was a clerk for about 2 months, and I will never forget being scared to death. And you're right. Like, I read every book I could. I did everything I could. I did fractions and flashcards, and I was prepared. But I didn't know anything until I opened my mouth to make my first trade. Making or losing money is the fastest way to learn.
I gotta say, walking into the board of trade where the bonds were.
Oh, that was an intimidating room.
Old building, it's dark. They've got the little lobby where you get off the elevator, it's dark, and you go through the turnstile. You show your badge to the turnstile, and you walk down this little hallway, and then it explodes in light. It's like birth. It's not that I remember.
But I mean, being down there in that room, so I was only there for 1 summer, but that room is the most intimidating room I've ever seen in my entire life, because there was one huge bond pit and then there were pits everywhere. And it's kind of like being at the Coliseum. And I'm exaggerating a little bit, but then all the firms line the walls up like this, right? So it's kind of like being at the Coliseum.
And the big traders fight to be on the outside ring, right next to the broker. They want to be the first ones. Me, I was down kind of on almost the lower step because I was a nobody. I mean, and that's not bad. It's just the way you start out, right? And I didn't have a lot of money. But that's how you learn. And the thing is, I was in the options too, which is a little bit smaller than the bonds and the notes and stuff. But you learn fast. You learn fast because my excuse me, my income was what I was trading.
Yeah. And I will tell you though, and this is, I mean, I don't think everybody learned fast. I think there were a lot of people that came down and didn't come back.
Yeah.
You know what I mean? You either learned, it's kind of like survival of the fittest. You either learned or you didn't. And it was a quick turnaround if you didn't.
Right. And there are different types of, people have different strategies, I guess. People manage risk a little bit differently. People certainly have different levels of capital they could access. But, if you couldn't find your way or you just couldn't make money and you blew through your parents' money, that's what it is. But you still do the same thing today, I think. Now, you fire up Tasty Trade, you fire up your platform and you get to start trading. You can't think about it. I mean, you can learn, but you will always be learning. You have to start trading.
Yeah, I agree. I mean, you can't just read about it in a book. TP, I know it is 47 right now. I want to get to maybe a couple tweets if we can. I haven't been looking, so I'm going to go top down. Eric, we see you, which is great too, but I'm going to go top down to see if anybody came in while we were on, and then we'll go look at this. Oh, good. I just said, Eric, we see you. So TP, this is what I love. Okay, so Eric has been doing this for a while. He's very Jack Tucker-esque. Take a look at all these trades that he's done. So he is done for the day, which this is why I like the zero DTEs. It's fascinating to me. So people have been doing these where he's in and out, lots and lots of trades, but done for the day. You can go out, you can go skiing, you can go lay in the pool, do whatever you want to. So he nabbed $2,271 after fees, and then he's done.
Yeah, that's awesome. And let me put words in Eric's mouth for a second. If you're trading these zero DTEs, if you wrap up your risk by, let's say, 10:30 or 10:48, there's nothing really left that's very interesting in those zero DTE options at this point. I'm not selling zero DTE options at noon.
No.
Right. There's just not enough money in there to warrant the risk, because you can have a huge move in these indexes on Friday afternoon, that you can't manage. And so, taking the risk off, booking $2,200 in profit, awesome.
Well,
awesome.
And I love this, TP, because a lot of people are doing this now too, they're methodical, they put it on, there's lots of different tranches, if you will. So it's kind of like peppering the infield at a bunch of different things. They set their GTCs, and I know Frank in the chat's like, why do you put a GTC on? And I said, it's because it defaults to it if you're adjusting the percentage, because we get that at the end of the day, it doesn't matter with SPX because it's just a day trade, right? You could put a day closing order in, and then they're out. And then you're not even taking the risk over the weekend. Then you sleep soundly over the weekend. Whatever happens. Yeah,
I mean, this is how it's done, folks. This is how it's done. And if you actually break down and see what Eric is doing, it's not particularly complicated. And I mean, speaking for myself, but it's, it's verticals.
Eric is, if in my understanding, an iron fly guy or iron condor. So it's iron condor, iron condor, iron condor, iron condor, right? So he's doing both sides at the same time, which is great. And so him and Jack Tucker and everybody's been motivating everybody. So Maria just joined the game too, and she tweeted us yesterday too. She's in and out in less than an hour with 25% profit. And I will tell you, TP, I think Eric, once again, people have their own risk parameters. Eric is great because he sets his at I think 25 or I think he's 40% profit or something to that effect. So he takes 40%. And Maria took 25. I get pretty aggressive and I take 10%. So, I mean, when I'm doing the Iron Condor, I want out in 10%, and I'm okay with that. And everybody can kind of, go with whatever percentage makes sense to that.
You do you.
Yeah. Yeah.
Okay. And that is the best application of that phrase. Whatever you do to either manage your risk, book the profits you want, that's okay.
Yeah,
that's
for
okay.
Sure. And I think I'm so little too because I've got my son doing the same thing. So I want what he has on, and I keep telling him, I was like, take $50, get out. Small profits for him, and I'm trying to keep an eye on what he's doing. So that's why I'm there. Okay, this is the Polish Warrior. We love it, Mikey. Okay,
fearsome Mike Namatka.
This is correct. He loves the shirt. Question for you. With IVR being so low, do you agree it makes sense to target smaller? Oh, this is a question. With the IVR being so low, do you agree it makes sense to target smaller locked-in profits to fly off my I'm sure it's long call spread on SPX. I put $50 in my pocket and did not want to risk waiting for more. So this is what I love about about Mikey. So he's got, and he's brought this to the attention a bunch of times. So he put a long call spread in, and then instead of closing it, he butterflies it off. So he does not have to comply with the pattern day trading rules.
Yes. And you're going to have, I want to hear your opinion on this too, Liz, but does it make sense with volatility low? And it is. Does it make sense to target smaller locked in profits? Yes, I think it does. Because you're never going to collect a huge amount of credit for this type of trade with volatility so low. Okay, so yes, book smaller profits, and if you are fortunate enough, or if you're lucky enough that the SPY drops right down to 62.60, or it's right here right now, you're gonna nail that butterfly and have a massive winner. But that's luck.
Just leave it, because this isn't something you have to close because it's SPX. So yeah, you're locking in a profit with the potential of more.
Yes. So I would be a little bit more aggressive, just like you were talking about, Liz. Get a smaller profit locked in and let it go.
Yeah.
Or let it go.
I like this.
Yeah, Mike, you're absolutely right.
I like the butterflying off. And then here's Eric's positions, just if somebody wants to see him. That's what I knew when he was showing that. I know he's Iron Condor tranches. So this is where his position is, which is awesome. And then Jackie. So Jackie does the one side, right? Mm-hmm. So the 62.15 put credit spread. So he's selling up for $20 wide. Victorious. So $383 gain and done for the day.
Yeah.
That's great.
Yeah. And the analogy I look at is weightlifting. Okay. For health reasons, I lift weights, heavy weights, nothing fancy. I'm not competing or anything. But even though, I'm, deadlifting, 350 pounds, does it matter that there's some monster guy out there who can deadlift 950 pounds? No. Okay. I will never do that. Okay. That's okay. But if I can just do my weights that I think are pretty good for me, right, I'm going to stay healthy and out of the nursing home. Okay?
Hey, I think that's pretty impressive. 350 is pretty good.
Well, I've been at it for a while. But the point is that this is one person does $2,000, another person does $383, another person does 10. That's okay.
Yeah.
Do it.
I've got my son, like I said, I go, your threshold is $50. Like if you're gonna put something on, you're gonna risk it. Once you get $50, get out. Because of what you guys have done, TP, where the commissions and things have come down so much that it's okay to lock in $50. You're not getting charged $47 to lock in 50.
The zero commissions to close is transformational.
Yeah. Mm-hmm. Mm-hmm. So I'm really excited. I love seeing these, and I really do thoroughly. I feel like a proud mom. I know that sounds dumb to say, but I feel like a very proud mom, especially with like your Erics and your Jack Tuckers and things like this, because they're posting it, right? We talked about this yesterday. It's not people who are like, I made $3,000 today. Great, right? Like this is real.
The other thing too is, and this is not throwing shade, like the kids say, on any of what people are doing, but they're not saying I'm making $1 million a year.
Yeah, no, they're not.
Because in previous iterations of my career here, I was managing the risk and margins and all that stuff, and I could see everybody's accounts, even of the people that were saying, "Oh, I make $1 million a year trading." No, you weren't. Okay. The people that talk most about, look at all the money I make and look at my huge lifestyle, they're probably not. Okay. Right. What Eric is doing, what Mike is doing, what Jack are doing, what Jackie's doing, these are real traders. Real traders try to make some money every day. 2,000's great. 5,000's great. 300's great, 50's great. Okay. It's not, oh, well, I'm the Polish warrior. I make $2 million a year. I hope he does. I really hope he does. But he's not saying it. That's not the point.
No, I love it. And the realistic approach to being even trading on here, you and I talking about all this stuff, is these people also say when they're struggling, like, ooh, it's outside today. Like, because that happens. Guess what? There are days when it's not going to land in your green bar area, and you are going to go into the close with some risk on. That happens too.
Yeah. I mean, I'm down today. I'm down about $1,200 right now. I can go in and do some more trading and hopefully turn it around. But I have negative days. I've had a very good week though. Lots of things have gone my way, but I have losing days. I have losing trades all the time. Okay.
Yes, and everybody does.
And so, but I know I rely on these probabilities, volatilities, strategies, yada, yada, so that I know that this is temporary. I don't like it, but I know it's temporary.
That's very true. Okay, only because we are out of time, and I do not want to cut into Mike and Nick's show because they have a great show. I'm going top down, making sure we got Eric. TP, administrative stuff that has to be done right now. Yes. Just because we have a little in the money sign right here. This was a Delta Airlines earnings trade that we put on 2 days ago. I left it because it was a Jade Lizard. There's no risk to the upside. Did you see what the airlines did? So the airlines gapped up, and I said, hopefully, it was yesterday. We could have closed it. I mean, there is no risk to the upside, so we didn't lose anything in this trade. But I was hoping for a little bit of a pullback. We did get a wee bit of a pullback, but nothing, not as much as we needed. So I'm going to close this because these are not like SPX 0 DTE. If I leave this, I would exercised and assigned on both of these sides, and both of those come with fees. So I would rather just close it and pay the $1 than the $5 closing fee. You know what I mean?
100%. So you're going to go at 101?
Just the cost spread. Yeah, there was just administrative stuff. I wanted to make sure that we got to. There's no other red in the money signs. I will make sure everything that we do gets pushed out.
And that's an important thing to learn, folks, is you would rather pay that $1 over value than pay $10 on exercise and assignment.
I mean, at the end of the day, it's not the end of the world because they were both in the money. Where if you walked away and you're at the pool and you're going to get exercise and assigned, fine, they'll wash each other out. But that's just, I'd rather pay $1 than $10 on anything, right?
100%. And you got to fight for that stuff. That makes a difference over a career.
Yes, it does. Yes, it does. All right, TP, you were a fan favorite on Flame Shirt Friday. The chat was lighting up about it, so we love it. Yay! It's a great shirt. Thank you for joining me this week. We're going to have to kick Jenny out again soon, so it can be TP in the LD.
There's no kicking Jenny out. She is. Don't use my name.
Oh,
I
she
don't
is
want
actually,
Jenny mad at me. Okay.
no, she won't be, but she is actually leaving again soon. She's going to New York, so we might have the TP and the LD back.
Cool.
If you're in. Okay, good.
I'm
All right, TP,
always
thank you.
in.
Thank you very much. Enjoy your cool weather in the mid 90s. All right, everybody, remember to trade small, trade often, laugh with us, learn with us, and watch TP and VLD. I'll see you on Monday, everybody.
Wow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. That's when does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies that happens, the guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddy, Mikey Butler. Good morning, sir. How are you?
Doing well. It's a rainy day out there. We had the Windy City Smokeout going on in Chicago, and they got dumped on last night.
Yeah.
Probably got canceled, if I were to guess.
I think it still went through. I saw a couple buddies that were out there. Flowers for Dreams is a sponsor, my friends in the Chicagoland area. If you're interested in flowers, you can hit them up. Flowers for Dreams. Very nice. No free ads. No free ads except for that one. If you're friends.
No free ads.
No free ads. But that was a free ad.
As you know, I bought new remote control blinds for my place.
Yes.
Saved like $2,000 thanks to 4th of July sale.
That's great.
However, I would be willing to give that back if someone else could do it for me, because the installation process is very I'm surprised I have any teeth left from the grinding I've been doing.
Oh, I'm sure. I mean, you got to get up on the ladder, make sure everything's all straight.
I'm all the way up on the ladder.
Yeah.
Put the brackets in, or I try to put the bracket in and I get halfway and I hit cement, so I got to move it a little bit. Then I get it all the way through. Then I'm like, okay, the instructions say take a 1/4 inch off, or an 1 1/4 inch. I took an 1 1/4 inch from each side. Then I realized, okay, it's total 1 1/4 inch, not from each side. So I had to redo the brackets, go back. It's just it's crazy.
Mikey, well,
but
it
will be amazing when it's all said and done.
Excited for you.
Some nice remote control blackout shades.
You think you'll finish it this weekend? I mean, we got
I'm
our
finishing it
golf
today.
round tomorrow. Oh, you are. Okay.
Yeah, I'm one of those.
Good.
I'm one of those people that when I move, if I move from one place to another, I don't sleep until all my stuff is unpacked when I move in. I just like to get it done,
Yeah. Yeah. No, I'm with you. Well, good. I'm excited. Can't wait to see them.
They're gonna be great.
I'm sure. Well, today, as foretold, 6,300, back to the start of the week on the E-minis. But the real story of the day is the move that we have in Bitcoin. I'm excited to have Ryan on Monday. There's crypto week popping off next week. The Tasty Crypto team did a nice little thread on everything that's going on for the weekend festivities. If you're wondering, you can read that. It's on Twitter. Mikey posted somewhere. I'll post it shortly here. But right now we've got E-minis down 26. They looked to be a lot weaker in the overnight session. They were down like 40 or 50 at one point. We got to 62.76. So we've had about a almost 60-point intraday range, which is one of the wider ranges we've had all week. But really, this week has been a grind. We opened the week on the E-minis at 63.07. We're 5 or 6 handles off of that right now, 10 handles off of it right at the moment. It's been kind of a nothing burger of a week. The Nasdaq down 50. You got some of the big name stocks kind of like buoying the rest of the market. Nvidia continuing to moon higher, up $2 and change. Amazon, another one that's been super, super strong. Tesla has been kind of flat all day today. Google has caught a little bit of a bid. On the flip side, you've got like Apple down a couple. Microsoft was up here. Meta was giving it up a little bit. So it's certainly been a dispersion type trade in the market. I know people love to talk about that in the Twitter, in the FinTwit world. It has certainly been a dispersion trade today and for this whole week, with the market basically going nowhere. Dow down 388 and the Russell down 31. The Russell the weakest of the group, mainly because of this move in bonds. Bonds getting absolutely smoked today. They're down 1 to 113. They're down over a full point. It's a huge move in bonds. Oil catching a little bit of a bid, Ford/CL up $1.80 at 68, but it's been chopping between 65 and 70 since the end of our 12-day war. You've got volatility futures up 11 ticks. It cannot catch a bid, which leads me to think that this might be another one of our routine little dippy-doos. Gold and silver both really, really strong today. Gold's up $47. Silver up $1.50. A huge move in silver, blasting through new highs. We've been talking about that catch-up trade for quite some time, with gold outperforming silver, the gold-silver ratio kind of back in line here. And then, of course, Bitcoin absolutely mooning. I don't know if we got 120 overnight. The futures got to 119.5. Spot was at 119 on the dot. 119.13 was the high on spot. But Bitcoin and Ethereum and all the crypto having a quite the day here. Ethereum down 14 cents from the open, or $14 from the open, but it's had a huge move. Bitcoin as well. Just looking at the rest of the crypto space, I mean, they're all having a little bit of a day here.
Yeah. MicroStrategy coming off of annual highs.
Yes.
Yeah, you're seeing a lot of stuff move.
Coinbase, though, to the downside, Circle to the downside, they front ran the move, it seems like.
For sure.
Those stocks.
It was almost like let's pump the providers and then let's rotate out of the providers and pump the actual coins.
Yeah.
But hey, great to see if you are bullish on the crypto space. But yeah, crypto week next week will be very interesting.
Yes.
Potential legislation, all that jazz. We will see what happens there.
Yeah, I can post that that thread as well. Give me a second here. How's your IBIT position looking? It's got to be looking good.
It's looking really nice. Really nice. It is, so I've collected $1,900 so far this year. The current net price is $300. So I'm up $1,600 on this position.
What do you got?
I have the 60-70 strangle in August. So like couldn't paint a better picture for where to be.
Yeah.
But as I've said before, I will not have upside risk in this. So if we continue to rally in IBIT, let's say IBIT gets to 70, I won't just roll the put up. I'm just going to shift the whole thing up, but I'll probably do it like 5 points. I'll probably move it from the 60-70 strangle to the 65-75 strangle. If that happens in 2 weeks or so, I'll probably roll from August to September, and I'll probably widen it out, especially if I can do that into a rally. Like probably doing it like today is actually interesting. Let's see if there's any premium boosted on the upside here. Not really.
No,
not really.
Volatility hasn't exploded like I was hoping we'd see. It's certainly up. The Ivy rank's 11 right now. I mean, we were looking at negative Ivy rank numbers earlier this week with Bitcoin just kind of chopping in the 100 to 110 range. So I figured if we blasted through that, we'd get some little upside volatility skew here. There still is some upside volatility skew, but it is certainly not as extreme as we're used to in these Bitcoin in these big Bitcoin moves. So you get another one like this, and you might have some fun with that position.
Mm-hmm.
But
yeah,
great position. Good job out of you.
Yeah, thank you. It's been fun. The year-long trade with zero resistance, just plowing through P&L on the positive side. But yeah, looking at it right now, like if you roll from August to September using the same strikes, the 60-70 strangle, you can pick up $2 and change. So that's been the story this whole year, which is how I was able to bring that credit from the initial $500 up to almost $2,000. But if I move it bullish, move it to the 65-75, that's going to bring in $325 in credit. So either way, we're sitting in a good spot just because so far we've collected so much here that I've got 20 points beyond the strikes. Wherever I move the strikes, I've got 20 points beyond the strikes for the break even. So I have a lot of flexibility in terms of what I can do.
Very nice. It's a great position. I wish I had some.
Hey,
I do have some upside delta in that bit, but I meant I want some of your position. You know, like just a little piece.
Yeah.
Have you done any trades today? I've done a couple things, just closing out of some risk, buying in the risk on the UAL position I pitched yesterday. UAL down $3-4 today. I bought a strangle, but I bought wings for my strangle ratio position that I have in Uber. I have a call ratio with a naked put. So I bought in some risk on that just to free up some capital. Same thing in Roku. Into the move today, had a little bit of a down move. I bought in the risk, and now I got this cheapy butterfly in Roku.
Lovely. Yeah, I'm looking at the micro accrued position, that micro accrued covered call position I put on. That's nice. It's up 70 cents right now. And now it's basically a short put at 68. Since my short call is at 68, but there's still $100 left to get out of that. So I might just hold it through next week, see if we can get some more premium out of there and then close it. But I'm trying to just close my gold butterfly. I had the 17-day, 3240, 3220, 3180. So 20 by 40. And I looked at removing the risk and buying power, but it's going to cost me like 70 cents. And it's currently trading for 20 cents if I just close it. And that would lock in a $230 winner because I collected 250 up front. So I think I'm just going to close it and then look to re-enter a new one in a further dated cycle into a sell-off.
Yeah, you're getting bailed out.
Yeah.
Today, so might be a prudent move. I like that.
So yeah, I've got an order in to route that to buy it back for 30 cents. So that would net a $220 winner.
Very nice. I mean, what more you want?
I don't know.
I mean, that's a good trade, dude. Come on.
Things are looking up here.
Yep.
But yeah, very wild to see Bitcoin rallying so much and the E-minis and NASDAQ down, but at the same time, it's not really. I mean,
we still got some time left in the day, Mikey.
True.
I don't know. I think we're going to end up just pinning 6,300, but who knows?
I think you're right. I mean, what's the SPX expected move?
To the end of the day?
14 points. Ugh.
Yeah.
Ugh. And then through next week, we're looking at 78 points.
Nothing.
So, nothing.
It's crazy.
Indeed. Yeah. But yeah, if you want to join us, we're streaming live on the YouTube channel. You can pop over there to Tasty Live. You'll see this video front and center. And I see a lot of people in here already. Welcome. And we can get to some trade ideas here.
I see some people shouting out Gus and Thomas from yesterday. Did you watch their segment, the boys?
I did not. What time was it on?
4:30 to 5. They did a good job. The young guns. Even though Thomas probably considers Gus an old guy.
Yeah. He considers you an old guy.
Oh, I am.
He's living rent free in your head. Do you realize that?
No. I've adopted him. Like Thomas is like my little like protege.
Perfect.
Yeah.
Love to see it.
His energy is great.
It is. It is great. He's a smart guy. I think he's on the dean's list over at DePaul. So there you go.
Got all the scholarships, all that stuff. He's a smart guy.
But yeah, while we're working these orders, I just have the one gold buyback for 30 cents. We'll see if that hits. But I have plenty of capital. We can get some trade ideas on, possibly.
Yes, please.
So yeah, I've got the Cherry Picks newsletter pinned at the top of the YouTube chat. I'll throw in the Tasty Crypto one as well. Definitely sign up for that. I'm sure there'll be some interesting nuggets for this move today and Crypto Week next week. But yeah, let's dive in here.
Cool.
Harsha sold a 307.5, 312.5 call spread in Tesla.
Okay, what? 307. Is it short term?
Probably. Maybe for earnings week. Yeah.
Yeah, 50-50 shot. I mean,
yeah,
right at the money. Not my cup of tea. I have this mangled iron condor, which I actually think is probably close to a scratch at this point. Yeah. I think I'm you guys can't see that. I could do it like this. So I sold this call spread against it. It really hasn't done anything, hasn't hurt me, even though Tesla has gone up since I sold it. We can even see here. So I sold this when the stock was at 302, and this is the. Does that not show up? No, the market snapshot doesn't show up. I was going to show, if you were wondering how to get to the market snapshots, we showed all the time on our show. But if you right click on the order chains, it doesn't show up. Okay, never mind. If you right click on the order chains, you can pull up the market snapshot feature. But anyway, I have this mangled iron condor. It might be time to close this and roll this out to August or to September.
There you
Why
go.
is this doing this to me? Oh God.
Why? Chris asking, if you buy a leap option and the move goes your way, when would you ever consider a free debit spread? So selling an option higher than your leap and just creating a wide free debit spread by selling the option for more than you bought the leap option for. You can do that if you want. I think the product I would probably do that in is something like MicroStrategy or iBit, where into a rally, if you're doing it on the upside, into a rally, you would assume that implied volatility goes up and call skew increases, which just allows you to sell a wider option against your long. And then the nice thing about that is if it keeps going, you're still going to make money. But if it sells off, you could buy back that short call that you sold against it and re-enter the long leap trade. So I think that it just has to be high implied volatility. That's really it. It has to be to a point where it gives you enough value and creates a wide spread to where you have a free wide spread on. If you're doing it in a lower volatility product, it's probably going to create a much narrow spread, and a narrow spread with leap options just is like basically done. So those are the keys for me.
It also depends on the magnitude of the move and what leap options you're trading. If you're trading like in the money leaps as a synthetic stock position, I would be less aggressive doing that. If you're doing them out of the money in you know, to use iBit as an example, you're trading out of the money leap options, you get this big move and ideally a pop in volatility. I'm much more comfortable selling that upside tail, and you could even diagonalize it if at all possible. That allows you to maintain that sort of poor man's covered call type position while not while taking advantage of the move that you've had.
Indeed. Andrew had a short put on UNH at 350. Today, I was assigned 100 shares of UNH at 350. Should I sell the shares and get into a new trade, or should I sell a covered call at 350 out in September? That is a question depends on your risk tolerance, but there's plenty of premium at 350. So, and 1%. Even if you were in August, $500 for the 350 strike. If you go to September, like you said, $800 for the 350 strike. So like you're still picking up plenty of premium. It's just a matter of whether you want to hold on to that position or not. For me, like if your account size is big enough to where you can hold it, I would lean towards holding it, because the value you can gain back if UNH eventually gets to 350 will be substantially more than if you close it and create new trades that are high probability, lower profit potential trades. We're going to exemplify that in my UAL position. Because I had a United Airlines strangle, the 9120 strangle, pre-tariff. And UAL, of course, went from 120 all the way down to 50. So at one point, my strangle was almost a $3,000 loser, and I closed it for a scratch. So if I would have exited at the bottom, my P&L would be $3,000 worse than it is right now. So
and you'd have to try and make that back with new trades.
Right, which would take a long time.
Yeah.
So I say if you are comfortable with the risk and you're willing to hold it, I would just be rolling that short call at your basis at 350, and eventually, if UNH rips higher, you'll be just fine. But that's one of the benefits of trading small, is that you can hold those positions that grow teeth. But if they work out eventually for you, you're going to have a much bigger P&L add back to your portfolio.
Yeah, the other side of the coin is the capital usage. If you're comfortable with the amount of capital tied up in UNH, I would probably just stick with the covered call. And if you're not married to UNH, you can sell a 30 or 40 delta call in August, and you don't need that big of an up move to get out of the position. So that's another option. If capital is an issue, closing and selling a at the money put or 40 delta put is going to bring in, $11. So you'll cut your loss by, 20%.
Yeah.
It stays out of the money.
And you could also collar it too. Like you could sell the 350 in September and buy the 270 in September or in August and still pick up a credit if you want to hedge your downside risk a little bit.
Mm-hmm.
But I would lean towards holding it just because of the magnitude of the move. And I think UNH is just one of those stocks that it's been destroyed recently, but I think it'll at least try to recover. And like getting from 300 to 350 is a much easier sell than going from 300 to 600 within, a short period of time.
Yeah.
Everyone thinks carpentry and handyman work is easy until you actually have to do it. Yeah. Yep.
Yeah.
Uh-huh. Nick's done some stuff. He's the real savant here.
Mm-hmm.
You did your backsplash in the kitchen.
Yes. Did some painting. That was easy.
Painting is great. Painting's the most satisfying.
Yeah, painting is very satisfying. That's good.
Yeah.
But yeah, there's nothing more satisfying though. When you do a manual labor task and accomplish it.
Yeah, that's why that's why I'm saying I'm doing. It's all happening today because I want that big dopamine hit later.
Yeah, yes, exactly. There's nothing that just pumps up the T.
Yeah, I want to sit on that couch and just roll those blinds up and down with a little clicker.
Yeah, with your little clicker. Exactly.
Mm-hmm. Long SoFi 100 shares at 12.55 basis, and I wrote a 17 strike July call against it for 34 cents.
I'm in the same boat.
SoFi.
It's been insane. Yeah, my SoFi position is a debacle here. I mean, I'm basically like a scratch now with all my rolls.
SoFi has doubled since June.
Yeah.
That's crazy.
Yeah. Unfortunately.
But yeah, you got the 17 strike. I mean, great trade. You made a ton of money on it with the basis at 12.55. So right now, July 17 strike.
And done. You're done.
Yeah, there's not much you can do. So with covered calls, if you're being offensive with covered calls, you got to roll up and out before it goes in the money. Because right now you have $500 of intrinsic value that you have to buy back. And it's just hard. It's very hard to roll that out in time. You can't roll it out of the money for $500. Yeah. And you can't even roll it even if you buy back July and go to September, you can only roll it up 1 point to the 18 strike for a debit. So it's basically done, but it's a good trade.
Close and sell a 20 strike put in August. Gives you a break even at 19. You continue to participate in the upside. You can wheel into more shares into a down move. That's what I would do. Good trade.
Very good. But yeah, going forward, rolling up and out when your strike is tested for a small credit, that's the move if you're trying to stay in the trade and be offensive. Theta Trader bought ETH A.
Nice.
At 17.50 and sold 22 calls against it. Pretty good, but now I have to wait a month at expiration to get the most of the juice out of it. No, not necessarily. So this one you can move up and out for sure.
For the August expiration?
Yes. So this is an example, you have 100 shares, you got the 22 strike, it's trading at 22. You could buy back August, go to September, and move it to the 24.
Mm-hmm.
Or if you want to be more offensive, you could go to the 25 and pay a 25-cent debit. I'm totally fine with these little debits because what does it really give you? It gives you $300 more of profit potential in your shares if it keeps going higher. So the debit is negligible. But this one, you could move from 22 to 24 in September or 22 to 25 for a small debit. That's the offensive move that you have right now.
Yeah. You also got to, it's a lot of extrinsic value in that option. $1.50, $1.60, we'll say, of extrinsic value in that call. So, your buffer in terms of like where you miss out on money is all the way up at 24-ish here. And that's because this has, high implied volatility, 74% implied volatility. So, you got a nice position here. I might just chill.
Yeah. So yeah, because you have $160 of extrinsic, if you assume that goes to zero, it's the same as if the stock is $1.60 higher without the call.
Yes.
Aaron got two deep. Oh, Aussie reports out. Grains are down.
Oh no.
Those damn grains.
They're not down that much. It's
not down that much. We need corn to just absolutely moon.
Just have a little Johnny put spread. I know you have like a calendar or something.
I have two diagonals. Double diagonal in the same direction.
Double down, basically.
Yeah, literally. Aaron's got two deep in the money Microsoft call spreads expiring in 7 days, 455, 470, and 475, 485. It's so funny that that's deep in the money.
I know. And that's a doubling of price from the low.
I know. Every time I look at this chart, I think of our friend Mike, who's worked at Microsoft for over 10 years and just compiles shares. And if you look at the stock 10 years ago, I look at his Oura ring. I'm like, where's your stress? Oh, you have none because you have gobbles and gobbles of Microsoft stock. Anyways, 455, 470, 475, 485. What's the best move here? Already accepted the fact of max loss. Oh, these are short call spreads.
Yeah, you're dead. They're done.
Yeah. So yeah, I mean, your best case scenario here is a 25-point sell-off for the one. 50-point sell-off, I think, is a little harder. You need a big move there. But the 25-point one, 7 days out, clearly it's not projected to happen, but you're already at max loss. So this one, both of those, I think you can leave, but you'll probably get assigned on the deeper in the money one.
Yeah. I might, with deep in the money spreads like this, I would look at it. I mean, obviously the loss is already realized. I mean, it's there, but leaving them on, have some sort of exit target. Be like, okay, if I make back $50, I'm going to close this trade. Like, that's how I kind of address these positions.
Mm-hmm. Stock Messiah, I just got assigned so many TLT puts that I own half the national debt. As a majority holder, can I just default and pocket the profits? You know what? I think that was a clause in the Big Beautiful Bill. So I think you can do that, actually.
Where's the Stock Messiah been? I feel like he's been a little you've been
He's playing poker. He's playing poker.
Yeah, is he at the World Series of Poker?
No. But I think I'm going next year. I think next year's the year.
It's about time. I've been telling you to go for 10 years now, so I'm happy.
Yeah.
It's time, dude.
Feels right. Yeah. Feels right. I think it feels like the beginner's luck is going to be on my side next year.
Okay, good.
Here we go. Are we doing anything to adjust the SLV position I have? So I've got the 7-day put zebra, the 34, 32 and a half. It's been kind of just like fluttering around this area. Yeah, there's nothing really I can do, but it's trading for 40 cents. And if we get a 2-point sell-off, it'll be back to a scratch-ish. So I'm just
buy back your cheapy put.
Yeah, you could do that.
Couple pennies.
That's a good idea. Let's do that. We'll buy back the 32 and a half. And
you never know.
You never know. And it just turns my 100 delta position into a potential 200 delta position for 4 cents.
Yeah.
So I just did that for 4 cents. So yeah, if we get a 2-point sell-off, this will be basically a scratch. So that's what we're looking for. But yeah, other than that, it's very much like a debit spread on the money or like an in the money credit spread. We're already basically at max loss. There's no reason to close it. Now we just wait 7 days, see what happens, and then if I want to redeploy it, I can get into a new position.
Huge move in silver.
Yeah.
Huge.
Mm-hmm. Silver, gold, and crypto.
Yeah.
What could go wrong? Let's see. Stewie's got a 62.55 0-day iron fly. 62.55, 62.30, 62.80.
62.55.
So you're pinning this.
62.30, 62.80. Yeah.
So
Probably
$1,400. Yeah.
Oh.
Looking at a $1,600 winner at the close. Would you close it now?
Are you saying that's the max profit at the close?
That's the max profit at the close.
So you
up
bought
this
like
for
$200.
Yeah.
Sold it. Did they sell it or buy it?
Just this, so the standard iron fly, like you have set up.
Yep.
So yeah, I mean, you're gonna have to wait all the way to expiration, which is 3 hours from now, and it has to be right here for you to realize that. So these ones, I think you try and just take a little chunk out of it. You got to be at a nice winner right now.
Yeah.
But the rate of decay on this is going to be pretty steep. So it's whether or not you want to hold the risk.
Mm-hmm.
But yeah, right now, if you have a $200 or $300 winner, it's a pretty nice trade.
Yeah.
Short credit spreads on SIU today.
On silver. Oh, God.
Yeah. The U5 contract. Which
markets in here usually are not the best. They look not too bad here.
These are expensive.
Yeah. Silver is a big boy contract.
Mm-hmm.
That's why we're always trading silver. Hustle Johnny's.
SLV.
Yeah.
But yeah, if you can hold the risk, sure. Just be mindful that your buying power requirement is much less than your max loss. For your IBIT crab trade, what is the usual holding time?
So it depends on what happens with the stock. Obviously, this move today is good for me, but I do need time to pass, especially in something that's got such high implied volatility. Like you can see, I still have almost $4 of extrinsic value in the 70 strike calls here in August. So it depends on what happens with volatility, how big the move is, what the duration of the crab is, the difference in the duration. Like mine is a relatively longer duration total position, 70 days on the long option, 30, what's our August at? 35 right now. In August. So you should expect to be in this trade for 2 or 3 weeks with this sort of setup at a minimum. I mean, let's call it, 20 to 25 days usually, just like you would any other normal short premium position, whether it be an iron condor, short put spread, whatever. If you're doing them, into an earnings event or a shorter duration crab trades, they can move much quicker. If this was an August, July crab, I would be closing it right now because it'd be a huge winner because the short premium, in July would obviously expand, but it would not expand nearly as much as these in the money calls that I would have in August. So it depends on the duration that you're using for the crab.
True.
True that.
True that.
Ferda.
Short strangles in IBM and Reddit, both with 35 days, and earnings are in 11 and 22 days respectively. What's your preferred window for managing or closing short premium positions ahead of earnings? So this is it's a tough thing. Like for me, I try and avoid strangles all together in earning cycles because you know that implied volatility and premium is going to stay a little bit more bid than normal because you have this binary event that keeps it propped up, and you can't get paid on a delta move because you have risk on both sides. So normally I will just, instead of doing a strangle in, like, let's say IBM, maybe I get rid of the call, or maybe I get rid of the put and I just sell the call. And in Reddit, maybe I get rid of the call and I just sell the put and just like move it up a little bit to replace the premium. That way you can get paid on delta. But to answer your question, IBM.
I just got some short delta in IBM. Just sold an out of the money call spread right at 300.
Just out of principle?
Out of principle. Into earnings. Stocks had an incredible run.
So the August 15th IBM strangles the 263.15. 263.15. So I would say if you have winners here, I might just take them off.
Yeah, I mean, this is a very cookie cutter standard, one standard deviation strangle implied volatility rank at 40. August, has 35 days to go till expiration. So I'm totally fine with holding this position if you're comfortable with the risk here. There's earnings season is around the corner. So if you're trying to avoid earnings, it's going to be very hard to trade anything because everything's going to be reporting earnings soon. So, keep your size in check. And if you're comfortable, if you would be doing a one standard deviation strangle into earnings, I would just leave this on.
Yeah. If this is I'm fine with holding through earnings, then that's totally fine. Yeah. And you'll get paid after earnings if there's an inside move.
Yeah.
But yeah, both of these are out of the money. But again, if you're trying to get paid before earnings, I think you got to ditch one of these options and just lean a little directional.
Mm-hmm.
Would Tasty play an affirm trade 7 days out?
Sure. What are we thinking? 7 days.
7 days.
Oh, just in general? Did he give us a bullish, bearish, neutral?
Yeah, just in general. Yeah, I think it's still fine. Like, it's 7 days out. However, it still has decent implied volatility. So if you're trying to play direction, you can sell premium there. You could buy premium too. You could do like a 7 day zebra.
Mm-hmm.
If you're bullish or bearish. The shorter term your zebra is, the more leverage you have relative to delta and relative to the stock price. So that's an option.
Yeah. It's a tough one. It's basically cash secured. So I don't know if I'm going to be doing any short premium here. I mean, if you want to do like a wide iron condor, maybe. 60, 80. Let's say stocks at 70. Do the 60, 50, 80, 90. Trades at $2, not too bad.
Yeah.
I mean, Ivy ranks only 10, so it's kind of on the lower end. I'm a pass, but I don't hate that sort of setup.
Yep. Killian has a TLT zebra, the 8486, most likely in August, for $3.85 when TLT was at 85.80. Yesterday was a $115 winner, but now it's a break even. How do you decide to take winners off? So zebras are basically unlimited stock positions at max profit. So the question is, when do you take the profit? And for me, I like to just like look at a chart. So like looking at the recent movement, let's say you placed this was when you said it was at 85.80. So maybe I'm just looking for a TLT to get to 87 or 88. That covers the upper half of the range it's been in recently. And that gives you also a $150, $200 winner. So maybe that's what I look at. I'm not really looking for it to go to like 95,
Yeah.
So I think you could also look at it like, what's my debit paid? 385. So let's put in an order to do 50% of debit paid. So that would be $170.
Yeah.
And that will also align with going to 88 pretty much.
Yeah. There's a lot of subjectivity to stock or zebra trades or in the money calls. I mean, or out of the money long calls for that matter, because it's an unlimited profit potential. You have to kind of put some sort of goalpost there for yourself. I mean, with short premium, when you sell a strangle, you can only make $2. So it's easy to say, okay, I'm going to take 50% of that or 25% of that, and then I'm going to find something else. With a, unlimited profit trade, you have to kind of put that goalpost for yourself. I mean, I have a zebra at a higher price. We put this on last week. Did you do that as well, Mikey?
What?
The zebra and TLT with Westwater?
I have the 85.88.
Yeah, so we were. I think I was around a scratch yesterday, maybe like a $50 or $60 loser. So I didn't have that profit on the table to take. But on a just like Mike said, with a $3 or $4 debit to make $100 overnight, you got to kind of take your money and run in that situation. I think. I would be taking my money and running. 20-25% return is good stuff. What are you goofs laughing about over there?
Stock Messiah said that's what Mike has fallen to. He's now begging for corn rallies. Yeah.
True. I tried, Stonk. I tried to save him.
You know what Stonk also is very good, I just watched last night, is the new quarterback season. Did you know there's a new quarterback season?
Oh, yeah. Isn't Kirk Cousins on for like the 15th time?
Yeah, it's Kirk O'Chains, Jared Goff, and Joe Burrow. It's very good. Very good. There's a cool Jared Goff story in there. It's nice.
Nice.
I bought a 6230 put in SPX premium at 190. When's a good time to exit? 6230. 0 day? Yeah.
I would guess. Yeah.
Yeah. So, I mean, this is going to go to 0 by the end of the day. If there's any rally in SPX, it's going to 0 much quicker. So you're kind of playing against the clock here. But yeah, you need another 10-point sell-off, and then you can get out for a small profit. But that needs to happen soon.
Yes. Again, so another one of those trades where it's hard to put it like that's a subjective number. If you make $50 or $100, you got to kind of, or maybe you're somebody that just buys them and it's all or nothing. That's if you're doing 0 day stuff, that's kind of how you have to approach the situation.
Yeah, but just look at the numbers. Like the expected move for the rest of the day is 12 points. So if you get a 10-point sell-off, you are, based on implied volatility, close to the bottom of the range that is expected for today. And if you get a 10-point, if you look at the 6230 and you compare it to the 6240, the 6240 is trading for 230. So I might put a GTC order in for 230 and see if you get a little 10-point sell-off, and you can close for a 50-cent profit.
Agreed.
Can you explain how Thomas put on a future spread on micro natty gas from the follow page?
Thomas
Westwater.
Mr. Westwater.
Cornman.
Oh, so he did. Oh, wow. I didn't even know we could post these like this.
Look at that.
So he's doing them with the contract. So this is the Widowmaker spread in the micros. So he did these just via the actual contracts.
Yeah, so he's long.
I don't know if we can pull this up.
It's not like showing me the whole thing.
Yeah. I didn't know we could actually post him like that. So that'll be something for me to look into. But I would think he's long the back, short the front, but I'm not sure. We will ask him to clarify on Wednesday.
I wonder how it shows on the web-based. I'm going to check that out.
Okay.
It did a vertical spread in Robinhood, August 15th, 95 100 call, 4 days in, and it's a losing trade. Should I just wait it out till 21 days or close it? So I assume it's a short call, 95 100.
Yeah, it's a 50-50 shot. It was out of the money 2 days ago. This move has been a face ripper.
So yeah, Thomas is he's long the contract that's trading for 336, and he's short the contract that's trading for 333. So whatever that lines up to, you have to manually type in the different contract codes.
Mm-hmm.
But yeah, Robinhood, you're basically right there. So I think you're okay for now, unless you want to close it if you think it's going higher, even higher. Do you guys ever do asymmetric iron condors? If so, what's your thought process when deciding on the setup? So yeah, that's kind of like a delta matched iron condor.
Yeah.
So if you're trying to account for skew, where one side has call skew or put skew, you would have a wider spread on the skewed side.
Yes, and show it here. So if you do a 30-10 or around that, you'll typically see the put side will be much wider. So here in SPY, it's a 610 579. So you're 31 points on the downside, and on the upside, you're only 15 points wide between the 30 and 10 delta. So it's a dynamic iron condor. So you'll have a little bit less risk to the non-skewed side. This is what your risk profile will look like. And that's because you can see the delta here is basically nothing. Just we don't have all the strikes on the upside in August just yet, but same delta short, same delta for the longs is typically how we do them. Now, if you're doing them in different quantities, you can probably do that more capital efficiently with just widening out the spreads, depending on what the underlying is.
Yep.
But yes, we do these from time to time. It's kind of it's a trade that you can do in low volatility because, you don't, it doesn't lean and it doesn't give you any short delta. It's got a little bit more risk on the skewed side. So, it's a tool in the toolbox.
Yeah. Alternative Nick has a 30-34 call September Zebra in SLV for $5.60. It's up $300 right now.
Nice.
Close entirely or roll the strikes up in partial profits to keep the position open.
Could do that.
You can certainly do that.
Sell a call against it. If you have the Zebra, you can sell up to one more call and not use any additional buying power. You could go to August and sell, 35.5 or 36 for 90 cents and still participate in more upside. Gives you that covered call profile.
Yeah. I kind of like
yeah,
definitely nice trade. So if you close this one and book that $300 winner, you could go to August and you could
just do an at the money.
Yeah, you could bring it at the money for $300. So you could just take your risk off, throw on a new one for the next 35 days to the upside, and basically
free roll
your winnings. Yeah, free roll the continuation. So yeah, I like doing that.
Yeah. Nice trade, though.
Yeah. What are your thoughts on leaps in NVIDIA? An NVIDIA covered strangle 140-200 for June 2026.
Covered strangle for June of 2026. 120. What was the other strike?
140-200.
140-200.
I mean, there's nothing wrong with it. It's just when you have risk on both sides.
It's just so much time.
In a 340-day cycle, it's just very it's going to be very slow moving.
Yeah.
So, yeah, nothing wrong with it. You have about a 20% cost basis reduction with the strangle, but it's a 340-day cycle. So, I would say if you're willing to hold risk that long, why go so far out? You could do the same strangle in the 70-day that encompasses earnings.
Mm-hmm.
Like the same strikes, even the August 35-day, the same strikes, the 140-200 give you about $1.50 in August, and they give you about $5.50 in September. So I might do that, where if you're planning on holding it that long, you go to August, you let that fall off, you roll into the earnings cycle, you get the IV crush. Then you go to October, you get more premium. Like you'll be able to get more premium because you're selling implied volatility premium that's always concentrated in the near term cycle versus selling one contract out in time that's just going to be a very slow decay.
Yeah.
So you can,
and maybe at some point you say you don't want to be in the trade anymore.
Mm-hmm.
Low volatility or whatever. Right now it's as low as it's been.
Mm-hmm. Iron Condor and Micro Bitcoin.
I don't think these options trade anymore.
Yeah.
You gotta use IBIT. I'd rather use IBIT anyway. The Bitcoin options are too big, and the micro Bitcoin options are not very liquid, or weren't liquid. I don't think they're around anymore. Maybe we don't offer them anymore, but I would use IBIT anyway. IBIT is one of the, if not the most liquid thing around now. So I would
just water.
It really is. It's great.
Yeah, it's nice to see that actually came to fruition.
Great.
6E short call spread 1-122.
I'm with
September.
You. I'm short the euro. It looked like we were going to get a nice move with all the Trump tariff news in the overnight session. Thought the dollar might get some strength, but no.
No. Let's check out my TastyFX positions.
Oh, mine are not good. Still a little bit of pain.
I only have 8 line items now that are in the red. I have one that's in the green by $2.30.
I did get some money on the British pound. That was a good one.
Yeah. The nice thing about this trade though is like these are so small that I will hold this forever. Like I will not let go of these positions until every single one of them is green. Yes. And that's going to be very satisfying.
Yeah.
If the dollar ever gains some strength here.
Yeah, I gave up a lot of my profits on the first couple trades that I did. Gave up most of it, unfortunately.
Yeah.
But I'm long the dollar, so that's no shock to see some pain here with the dollar near lows, bouncing a little bit. E-mini's only down 16, NASDAQ basically unchanged. Unbelievable.
Classic.
Same as it ever was, Mikey.
Same as it ever was.
That it for us? Get to the boys.
I think so. One last one from Randy. If I have a 0-day gold futures trade, do I need to close it since 12:30 is the expiration time? Yeah, I would double check that. But yeah, if you can't close it, it's because it's already expired for the 0-day stuff. And it looks like that might be the case. Zero bids everywhere.
Yeah, I don't know.
But yeah.
I don't know how those futures settle off the top of my head, but call the desk if you need.
Yeah, call the trade desk if you need some assistance there.
Yes.
But yeah, that's it for us. Thanks for tuning in. If you got any further questions, you can always find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat there. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Have a great weekend, everyone, and we will see you same time, same place on Monday. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments. Thy flight's too vigorous.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We're back. It's Friday, July 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, mixed day here for stocks, but pushing up as we go into the second half of the session.
It's getting a little interesting here because we've basically not done anything all week if you look at the major indexes. I mean, really, we had that July 3rd push on this idea that jobs report was good, I suppose, because it seemed to all happen when the data came out. It was the second thinnest day of the year. No surprise there. Shortened day. Holiday weekend. Nobody's around. Bunch of second tier people on banks' desks pushing things around. And since then, nothing. We've been idling.
Stocks have been idling. That's not the case in other asset classes, though.
No, it is not.
There's probably a story to be told about why Bitcoin, silver, and treasury yields are all behaving the way that they are today. We have some of this tariff talk, of course. President Trump unveiling a threat of 35% tariffs against Canada. Again, August 1st deadline, so nothing into effect just yet.
Why
but
not?
Overnight, Bitcoin, new highs, silver, highest low that we've seen since 2011. Gold's even pushing up right now. Stocks are churning. Paul, we can go to the slides here and get into this. Before we look at the charts for what's happening with today, of course, we are going to take a quick look at next week's calendar. It is a busier week. This week was fairly light, all things considered. We're going to have to cut this calendar in half. What you see on Sunday, technically, in the Monday session here in the futures market out of China. But really, you think about next week, and Monday is a China day, as it were, heading into the Tuesday session. Likewise, the Tuesday session for us here, the 15th, we see inflation data here.
Mm-hmm.
That U.S. inflation report, that's obviously the most important data release, at least in the first half of the week.
To be sure. And by the way, if you want a full download on all this China stuff, we did a whole show on Macro Money this week dedicated to all things China. We had some inflation data that came out over the past week. We had the PMI data the prior week. We have the trade data coming up, and of course, all of it boils down into the second quarter GDP report. So all of that very, very interesting stuff. The upshot here is that if the U.S. economy falters, China isn't coming to help. They are idling. The second quarter GDP report probably gives us the 9th consecutive quarter of economy-wide deflation. That's not disinflation now, it's deflation, because real GDP has been outpacing nominal GDP growth now for 8 quarters. This will probably be the 9th. So at the economy-wide level, the demand picture in China is woeful, to say the least. There is a deflationary sort of economy-wide coefficient of close to 1% of GDP now for 8 consecutive quarters, which is absolutely abysmal. It basically tells you there is no demand in the economy, or demand is so weak relative to how much supply there is that prices are falling, that the entire economy is basically in the bargain bin. So good news this is not, but certainly that U.S. inflation report is the bigger story, because that's where the single point of failure is. And in my mind, the way that the markets are interpreting or choosing not to interpret all of this tariff news, but for a surge in copper, otherwise the markets are basically unbothered. Oh, somebody's talking at the White House. Oh, they said tariffs. Whatever. That, to me, suggests that as we go into the second half of the year, that stuff starts to look like noise. And frankly, so do the geopolitics. And the situation starts to be, well, can we get enough growth? And the China data is going to tell us that they're not going to have it. Eurozone data has been saying for a while that they're not going to have it. So if the U.S. falters, the world is in a recessionary sort of spiral pretty much any way you slice it.
Second half of the week, not so much on the calendar. I mean, you have GDP, you have inflation from the U.S., China GDP, and then U.S. inflation on the first half. The back half, a little lighter. The retail sales obviously matters. We're going to look at consumption trends in the U.S.
Actually.
We'll be paying attention to the housing starts, the building permits. There's also the confidence reading at the end of the week, which usually
I love that.
I usually dismiss the confidence readings, but we've had a need to pay attention to them.
They've been really jumpy lately.
Here. They have been jumpy lately. And they've been improving, though. Stocks are up and oil prices are in.
We saw sentiment really turn in a meaningful way in the prior month's data. Sentiment really came up forcefully off the lows. This is going to be very interesting now because all year long, going into last month's sentiment report, obviously with the tariff conversation, 1 year inflation expectations in that sentiment report have been surging. And that's been the guiding star for where overall consumer sentiment is going all the way back to June 2021. In fact, this, I think, sort of explains why this data has become more important. It was the first thing you really saw in early 2021 going into the Fed's kind of, oh, I guess inflation isn't a transitory thing, a kind of a head change that was screaming at them, no, consumers are extrapolating inflation. Inflation expectations are becoming unmoored. You'd better get to hiking, and you'd better get to doing it now. That was the one of the first real indicators before anything else. So, not surprisingly, basically since then, the overall sentiment index and the 1 year inflation expectations index have been moving inversely. Inflation expectations up, sentiment down. Straightforward. That's
Americans don't like paying more for stuff?
They do not. And that's been the story for 4 years at this point. Month in, month out, this data comes out, and that's how it's been working. So, of course, with the rollout of the tariffs, inflation expectations surged even higher than they did in peak COVID. People really didn't like it. And sentiment cratered back to COVID lows. Last month, it rebounded very significantly because inflation expectations fell off again. Not off in the sense that they're back to 2% or some such thing. No. They came back to 5%, but from 6.6.
I do have one very particular quip with the U of Michigan survey, which is that they changed their methodology a few years ago.
They did.
And they went away from phone surveys and they did online. And it's just a different quality of data pool, right? To get someone on the phone these days takes a lot of effort. Got to have a real quirky person who's actually going to pick up and give a pulse for their time.
Yep.
But online, you can get all the information you need very, very quickly from people. More than no barrier to entry. Yep. So UMich inflation expectations have been a little bit more unmoored than their peers in some of the soft data after the methodology change. That said, the impulse is still the same, which has been that consumers don't like the higher tariff implications. And we've seen the stock market slip a little bit here today after Trump threatens this new 35% tariff against Canada. It's really bad for the Russell, which is off by 1.04% today. The NASDAQ, which apparently is not so concerned with what revenues come from the Canadian economy, is basically flat off by 0.01%. Ilya, you mentioned that this week we really haven't made any progress, and that's a very fair assessment considering it's July 3rd high up at 63.31 and a quarter here in ES. We really haven't seen much more progress beyond there. And likewise, the swing lows that we had at the start of this week after the headlines from last weekend haven't cleared them out either. So for better or for worse, we'll call it 63.35 and 62.50 just to round it out. But this market is either potentially putting in a double top. My disposition is that it's flagging and getting ready to extend to new highs. But if it's ES or NQ, you really are still trapped in the middle of the range. So if you were able to buy earlier today, great. If you sold yesterday, fantastic. If you're waiting for a directional break, 23,100, 22,800, 750. At least we have some levels to work with going into next week. Friday's not the greatest day in the world to apply and put on new trades. But right now, Ilya, I think we need to acknowledge one overarching factor here. Volume's low, volatility is still low, and the technical momentum has not broken yet. So if I was looking to do a short term, like this is still very much in float higher mode and just grind and melt. And we need something to kick us down, because apparently a 35% tariff against Canada is not going to do it.
I would not necessarily say that we have as benign of a situation, because when you look at shock of shocks, of course, when you look at I think the architecture technically, it is a little bit soggier than it's been, and that's because momentum is fading significantly. If you look at any kind of momentum study, you look at NASDAQ, you look at ES, on a daily chart, you're nominally setting these spike highs as you're getting into this range, and you name a momentum indicator. You've got slow stochastics here, MACD histogram. There's negative divergence all across the board. What's really ominous is that when you look at a monthly chart, let's say of the S&P, you're seeing it there now. And that's something that really should give us pause, because it isn't often that you get negative divergence on a monthly chart, or any kind of sort of oscillator divergence. It's typically much too long term for things like that. But when you do, it has been consistent with major tops. It was consistent with a major top in 2022, in 2007, in 2000, all of kind of the big holy moly moments over the past 10, 20 years. And there's not that many of them, because again, on the monthly chart, you really got to get that divergence built. Interestingly, it doesn't happen during COVID, because COVID just spooks everybody, and the market was not really setting up for it. But anytime you build into a sentiment extreme and then the market buckles under its own weight, you get this setup. So it's not great architecturally.
I couldn't disagree more.
Of course.
I will go back to that monthly chart here. We had divergence in MACD back in October, November 23. And yet the market was able to push higher.
MACD is a little bit of a different animal. But
I have never ever successfully traded a divergence on any time frame in my entire life.
So I trade it all the time.
This level of analysis just for me is whoosh.
Oh, I do it all the time. Now I do it with RSI, because in RSI it's just arithmetic. But on
momentum's faded here. Where's price gone? Yeah. Who cares what the indicator says? It's derivative. It's downstream of price. Momentum's been lost, and the best bears have been able to do is stop the rally, not reverse the rally. We were at 63.07 last Thursday.
On this time frame, sure.
Yeah, but building into a monthly
when
top
momentum
is
falls apart on the monthly chart, it's a different story.
Rounding into a top on a momentum indicator on a monthly time frame can take a long while.
Well, that's right, which is why you don't get these occurrences very often. But when you do, and we're there, when you do, it's not a guarantee of anything.
We were there in November 23, technically, where you had a lower high in some of the momentum indicators, and yet new highs in stocks. I think the point is, as a 45 and 21 day out trade, it's like, to me, it's like a valuation metric, right? If someone says, oh, the stock market's overvalued, okay, but valuation is like an investor's POV. We're not investing here.
It isn't actionable in the sense that I agree with you that you could look at a monthly chart, see negative momentum divergence, and go, I should sell now with a 45-day window. No. You couldn't. You would still need confirmation. You would still need a breakdown. And in any case, with divergence, you need confirmation because it's not necessarily indicating that there's a turn. It's indicating there's a loss of momentum. That could precede a period of drift. It need not necessarily correct in price. It could correct in time. That has not been the case when it shows up on monthlies. It's been, at least again in recent decades, indicative of something big and scary on the horizon. But you do need a break on actionable charts for an actionable trade. So while I think the stage is getting set for something nasty, I think at least just technically, I think the bottom line when it comes to where do you actually get in if you're not in yet, obviously full disclosure, I'm in already and have been for basically since the end of last week. But if you're not in already, you do want a break of this range. You want to actually see it happen. And by the way, in the Russell, it's maybe starting to happen today.
You can't hang your bear thesis on the outlook of the worst 2,000 companies in America.
I just look at the Russell. I just look at the price action and I think, well, who's going to get hurt most in a recession? Is it the best companies or the worst ones? And which ones are going to see that damage first?
Volatility is on the floor right now. VIX futures are at their weekly lows for the VXQ25 contract. August expiry out here. VIX is in a very similar situation where it did gap open higher with that tariff announcement, but we've been fading basically since the U.S. cash equity open, now 16.19 here. NASDAQ's now flat. We look at the sector performance, to no surprise, as we make our way over to the metals, we have our metals, miners, gold miners, XME, all leading the way. Energy companies are likewise in the positive territory. So setting aside the commodity sector ETFs right now, there is one sector ETF that's positive on the day, and it's semiconductors. XLK is only up by 0.2% or 0.02%, excuse me. But semiconductors here are cycling to a fresh high, and it's led the way by NVIDIA, which again feels like a quiet market. Who's here celebrating NVIDIA? It's $4 trillion market cap, and where are all the calls like in October and November and January that this thing is cooked? Just feels a little different this time. But it's a clear sector underperformance by things like home construction, healthcare. Those are the companies that make up your Russell 2000. And the higher rates, the higher oil prices filtering through in a bad way. Really, I can't shake this either. I look at the structure of this chart. We're holding the 1 week above the 1 month. We've had pullbacks into the 1 week in recent occasion. And it hasn't been anything more than just a ebb and flow and ebb and flow. Suppose you could go to a 4-hour time frame and start to put together
this is where you start to see it. Your former high here broken. So the place where right there, exactly. And you can see it start to come apart. Now, I'm not getting into this yet. I already have enough exposure, but at this point, I definitely see myself with a plausible case, if the price action comports, of course, to start to put on some Russell shorts in addition to my ES and Q shorts, maybe as early as the beginning of next week. As you were saying, I don't really love to put on trades on Friday. It's not my favorite. I will do it if the price is right, but I don't love it, and I don't see this as terribly confirmed. Oil prices are actually one of the more interesting aspects of this conversation, because if you look at the way that oil prices have behaved in the first half of the year, you would have thought, well, surely wars, certainly not cooling in Russia, Ukraine, only getting hotter in the Middle East, with the U.S. wading directly into an Israel-Iran conflict. How could it possibly be that oil prices are not up? Yeah, they fell 9% in the first half of the year. What does that tell you about, first of all, where we're going on inflation? And second of all, what does that tell you about how much the market cares about supply disruption relative to demand destruction? The market thinks that there's a recession on the way.
Well, talk about it with oil in the oil section of the show.
Well, I mean, if we're going to justify having a positive Russell outlook on the back of oil gains, I'm not sure that we can really make that case.
I would look to the bellwether for what's been the Russell breakout over the past few weeks, and that's been the regional banks here.
Absolutely.
The pivot high that we have in the first week of March 3rd here, it coincides very neatly with the 1 week moving average today. And you can see that we've poked our head up there and we're holding through on the 4-hour time frame.
This range is holding so far.
We're still holding it. So
it's not breaking, but it's holding.
The Russell has some oddities today because of healthcare and home builders.
Yeah.
The fact that the regional banks aren't going down with everything else tells me that the Russell's a buy the dip opportunity, and that we still have a few more legs left, a few more kicks, which actually comports very neatly with the seasonal calendar, which, according to some, talking about July expiration is not seasonality, but I'll take a different view and say it is, because it happens around the same time every year. So the calendar peaks July 18th, 2 days after expiration. It would be a nice little birthday gift here to get this market to squeeze higher for the next week. And then second half of July comes and we peak out, which is why I'm kind of playing this two ways. I'm playing this right now short term for a breakout in the NASDAQ above 23,100 by the end of next week. And in ES here, I just put this on today. I laid out a long put spread at the 60-25, 59-75, 49 days to expiration. So tactically long, getting some downside protection and equities in my pocket, because the VIX has risen in August and September the last few years. Last year, I got a little greedy. I don't want to say that, but maybe feeling a little bit too bullish by not only being long calls, but buying MNQ and trying to got a little too Icarus-like. And then, of course, late July happened. So the market ultimately does keel over in the time frame with which seasonality would suggest, and I was just pushing the envelope too hard. So I'm going to try to do this a little bit more tactfully this time around. Glide higher, have a parachute for lower in case things hit the fan. Volatility is at a 10 IVR. It's cheap. It's laying out $500 to make 2,000. I'll take a 4-to-1 risk to reward, or reward to risk for a hedge, so that I can still operate like a bit of a mindless bull in the short run here, if we're going to try to do one more swing higher consistent with the seasonal calendar.
I mean, it certainly makes sense. It certainly makes sense that if you were to see the market really start to get some confirmation that its dovish view of the Fed is starting to get embraced by the Fed itself, because, of course, the regional banks are notoriously sensitive to borrowing costs. Obviously, I mean, it seems like a distant memory now with all of the chaos of just the past 6 months, but it wasn't that long ago that we were all worried about banks like Signature and Silicon Valley Bank, all around this idea that rates had gone up so high that they were starting to squeeze these banks into defaults, essentially, bank runs that they couldn't service, and to be sure, KRE is an avatar for that, and the Russell was absolutely jam-packed with names just like that, with portfolios just as bad, and they need the rates relief. So if you started to see rate cuts, or at least the market looked like it was becoming convinced that the Fed has heard them, that would be relief for KRE. It would be relief for the Russell, unless it was happening for reasons that were so dire, where the market really said, okay, well, we were worried about recession. Now here it is. And by the way, that seems like what you'd need to get the Fed out of bed at this point. It may just get overwhelmed by that kind of negativity. But that is certainly something you could look to perhaps helping Russell. If suddenly the Fed got religion on stimulus, then those regional banks would have an easier time.
Yeah, and there's more than one way to skin the cat. I know I'm playing this in the long NASDAQ and the short S&P and a little bit of a longer term spread here right now. But there are option strategies that you can do this with one fell swoop. Short calendar spread with calls or a long calendar spread with puts. If you're long a calendar spread with puts, you're selling the nearer dated put and you're buying back the longer dated one at the same strike. And it's vice versa for the call spread, the calendar call spread. So you don't need to do it through ES and NQ. It's not a perfect match. But thinking about if you're on my view where the market's going to go a little bit higher in the short term and then come back down a little bit more as we make our way through August, something like the short calendar spread with calls or long calendar spread with puts is a way to express that particular point of view. I'm not using that methodology, but that is a way people could do it if they were interested. You know, Ilya, with this tariff talk, treasuries are looking a little yippy.
They are looking a little yippy.
Yippy being the specific terminology that one President Donald Trump used.
It's a technical term.
Made sense, but that was back when the market was down at 111 and we're only at 113 right now. Gosh, what a change.
Also, the momentum with which we got to 111 was, let us say, much more impressive than what we're seeing here. In fact, if you look back at those April moves, first of all, for the bond market, those levels of swings day in, day out are insanity. The bond market is slow. And secondly, it was all happening at the same time that stocks were falling and the dollar was falling. So that kind of window of sell America, that was that. This isn't it.
Doesn't seem to be right now because the dollar is not behaving in that fashion. In fact, the dollar is doing what people who would be following this show in overtime might think what it would do, which is bounce a little bit more.
Yep.
It's behaving actually quite typical today where higher yields are filtering through into a stronger greenback. But we talk about a structure here. If this is a bullish falling wedge, it shouldn't be behaving like this. If this is a bearish rising wedge, where you see a Morningstar candlestick cluster immediately eradicated by a new evening star one, we get that close back above the 1 week, the 1 month, the 50-day, and there's no follow through and it's all evaporated the next session. That feels ominous. It doesn't feel comfortable being long, which again, long and out of the money call spread here, define risk. Worse things have happened to better people. I'll say that this looks like it wants to try again to the downside. And
it seems to want to try that low again.
Yeah, I mean, like maybe not even 111.
Not that low. The low from 4 days ago.
Yeah, so I think
3 days
we
ago.
we just got to be mindful right now that if you're looking at bonds, something clicked. If it's the passage of the bill, which happens to coincide with when the bond market turns, if it's with the with the non-farm payrolls report, better than expected. Because we beat on the headline and the unemployment rate fell, so it has to be good.
Yeah, and again, in over 3 months, we lost 50-odd thousand jobs on net. Hey, good times.
What continues to work, the long deltas in ZB have been tough sailing. And quite frankly, when you look at that technical setup, it's hard to justify being anything other than short. But for notes, this is still the middle of the range. We're between the 618 and the 38.2 of the year high low. Notes has been all about that directional neutrality. Just chop, 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 chop. We do that. We're slinking. We're zigzagging. We go a little bit up. We go a little bit down. We're bouncing between 109 and a half and 112. So I'm going to continue. I know it's really, really low volatility right now. So a 2.2 IVR, that's not the most tantalizing thing to look at. But in terms of it actually being a trade that works, kind of like oil, absent the geopolitical risks, slap on a short iron condor, something that's calling for directional neutrality, and then go fishing, you're probably going to be in pretty good shape if history is any guide.
I mean, I'm outright long. I'm not outright.
Still chop around.
I'm not outright long ZN. I'm further downwind. I'm looking at ZB. But in my mind, what this isn't an upside reversal that's been turned. It's an upside reversal that's being tested. And we have to find if the low holds. Now, if the low doesn't hold, so be it. Then I got to get out. But if you look at ZB here and you say the logic we're operating on as of 2 days ago is that what we have is a swing low. Well, we haven't undone that idea. Let's see. The fundamental logic behind the move, in my mind, has not been uncoiled.
You know, I hope the Fed coming out and saying that they can't do much on rates. Maybe that's it. Inflation next week, for what it's worth.
Yeah.
Expected to tick higher. Now, I take issue with that because we already have tracking data for July, and so the market will look past a short-term bump in inflation if it sees another decline coming around the corner. The Cleveland Fed's inflation dashboard right now, still as of today, is tracking inflation month over month at 0.16%, which, as we've shared in recent session, that works out to about 1.93% annualized year over year. That's obviously below the Fed's target. You go to core PCE or core CPI, you're going to get an annualized reading closer to 2.9%. So it's not a perfect, but we're getting into that zone where if you annualize just over the month over months, you could see that we're okay. Inflation's in a place where we should be more comfortable. But June is not going to be that data set. And that's really the story here. The June data set has data where you look across the board, the month over months, 0.2 up to 0.25. And so that's giving you a range where once you get north of 0.25, you're talking about annualized CPI north of 3%. And that's not an environment the Fed is going to cut in. So the July data does not cater to providing the Fed what it needs to pull forward those rate cut expectations. And I think consistent with one of our theses here, if the Fed is not going to cut, they're not going to reinflate. And then you have a 2-month window where the Fed is going to be gone. They have Jackson Hole, but that doesn't mean anything. And so realistically, if recession fears kick in, bond, gold's 2 best bets historically, ZB is going to be pretty well suited in that scenario. But we have to get to the hurdle of clearing the inflation data and then the Fed meeting first. And we're dealing with this tariff stuff. So if you saw what happened in April, Ilya, and you think Trump's not bluffing this time around, do you really want to hold U.S. Treasury bonds? We saw what happened. Why take the risk?
Yes, actually. Yes. And again, you go back to the scoreboard. Forget the headlines. And what the scoreboard says is that in the first 6 months of this year, yields fell across the curve. They didn't fall very far, but they fell more than the average 6 months over the past 25 years. And that tells you, number one, the market has no problem buying U.S. debt. There is no fiscal concern. Nobody is thinking about a U.S. sovereign default. It's just noise. Because when you look at what is actually occurring, you see that the yield on the 10-year in the first 6 months of the year down 7.5%, whereas the average 6-month performance for the past 25 years on any given 6-month time frame is a 3.7% gain. Now, forget direction for a second and just look at the magnitude of swing. 3.7% is the average move for the 10-year yield in a given 6-month period. We've had a sell-off that is larger than twice that. That's telling you the market has no problem betting on the long-term faith and credit of the U.S. and giving it the benefit of the doubt as a qualified borrower. We're over it, I think. I think that Sell America thing, I think everybody got all hot and bothered because they thought that the U.S. was going to cut off their nose to spite their face. And at the end of the day, no, it didn't happen. So I'm not concerned about that part of it. I think you get a story like you saw last year, and you don't need a Fed meeting and you don't need data. You don't need any of these things. In fact, you're better off without them occurring, because the more you leave the markets to their own devices at a time when they're afraid of a recession, a downturn, you just look at what Fed funds futures are telling you and how much that departs from the Fed's own calculus, how much more dovish the markets are. And you see it. You leave the markets to their own devices thinking these things, they'll front run them. And certainly what we're seeing in gold, what we're seeing in silver, feels to me like a part of that story. So I don't really think we need to wait for a catalyst. In fact, I think in the absence of a catalyst, the markets can do the most damage.
I think silver, Bitcoin, and yields are telling us all the same story today, which is
they
that
are.
If we're gonna debase the currency with ridiculous fiscal policy that undercuts Americans' spending power, we're gonna need anti-fiat hedges.
Except the dollar is up today. So again, I don't think it's that. I think it's just recession.
Given what Besson said earlier this week about reducing treasury issuance at the long end of the curve, he's going to put fewer dollars out into the system. So this round of tariffs may not come with dollar liquidity as readily available to force people to play ball a little bit more.
Yeah.
So you got to get your hands on things like silver, which is up a very healthy. When I say very healthy, Ilya, let me tell you how healthy that is for those $38 calls. It's a very healthy development today for those $38 calls.
No, it's good. I mean, the breakout that we've been looking for in silver, we've agreed on this completely. Once we took out that range resistance, our conversation has been simple. We're consolidating after a break. Unless you break back down, this structure is bullish. There we have it. But I just cannot wrap my mind around the idea that this is somehow about the debasement of the dollar, because the dollar isn't down, it's up as all of this is happening. Look at the yen, look at the euro, look at the pound. So you're looking at a situation here.
If we pull back in global trade, does the U.S. economy suffer more, or does the British economy, which is already contracting?
Well, this is the economy. Well, this is the whole thing. The dollar fell precipitously around all of this trade stuff in the first 6 months of the year. In fact, the performance of stock markets has been lavishly flattered by the weakness in the US dollar. You've made the point extensively, I would say, at this point, that if you were holding U.S. stocks and you had to repatriate your winnings into any currency other than the dollar, you lost money in the first half of the year. That's how badly the dollar did. So
dollars kind of sucked the first half. Well, kind of.
I mean, worst off the charts.
Worst first half of the year ever since free floating exchange rates.
Yeah, I mean, off the charts bad. I mean, in the first half of the year, gold up 25%, euro up 14%, yen up 9%. A typical 6-month period for yen, it moves 0.3% on net. A typical one for euro, 0.7% on net. These are major G10 currencies. They're the most liquid thing under the sun. They don't move double-digit percentages in a 6-month period. That's bananas.
That's emerging market.
So bananas. So the dollar got absolutely shellacked in the first 6 months of the year, and against this backdrop now,
gold and silver
not selling off.
Yeah, but hold on. Today, dollars up across the board. Yields are higher. Silver's up 4.4%. Bitcoin's up 3.42%. This is a precious metals alternative. We'll call this alternatives to the dollar part of the show. We're going to throw Bitcoin futures into here.
The anti-dollar section. Yes.
This feels good.
I mean,
those $75 IBIT calls feel really good today as well.
I mean, this is working too. This is
but
working too.
It's this whole, if we're going to pump deficits and debts, we're going to go crazy, folks, right? If we're going crazy, folks, the anti-dollar trade, just can't believe how much money we're putting out into the system. But think about the structure of the deficits and the debts. Where is it going? 80%, the bottom 80% of income earners in America are about to get a tax hike. The top 20% of income earners in America are about to get a tax cut. What do people who have excess income do? You can only consume a finite amount of things. And I really should pull up the charts of this so you could see, like, if you give the different income deciles $1,000, how would they spend it? And when you go up the chain, less of it gets recirculated back into the economy because trickle-down economics is nonsense. And it just goes back into the stock market and into real estate and into getting out of cash, but putting it into something invested so it earns a rate of return and just doesn't sit around and collect dust. So if we're going to pump the markets full of money and the money is going to the wealthiest people whose marginal propensity to consume is diminished and their likelihood to save and invest is higher, then the silly stuff should be fine. The gold and the silver, that stuff should be fine. And I got to say, this turn here in gold today, it's not up as much as silver, but 1.24%. We're getting ready to clear out the swing highs that we had from last week up at 33.76. We're breaking the downtrend here. An old reassertion back above the 1 week, 1 month, 50-day. Yeah, I think gold 34.75, 3,500. That feels like it's in the cards again.
I mean, in my mind, it just has nothing to do with the debasing of the dollar, because the dollar isn't behaving like it's being debased against the backdrop of all of
Not
this.
in today's session, but this year.
No, I mean, the reaction function matters. The dollar has been up for not just today. I mean, if you look at what the dollar has been doing for the past several weeks, I mean, it's been up since the beginning of the month, and we're heading into the middle of it.
Could I pose
the dollar's low was July 1st.
Could I pose a thought experiment here? And I don't know what the answer is, right? What if?
And by the way, I'm long gold.
Oh no, I know you are.
And I was short dollar the entire first half of the year. So I am by no means disagreeing with the architecture of the idea. I just think this feels different now.
So this is why maybe like this is an explanation for why it's different. If you're an investor right now, and as we approach the event horizon of August 1st, August 12th, these tariff deadlines that are coming around the corner, is it prudent to maybe get some powder dry beforehand? And I would think the answer could be yes.
Yeah.
And so if you're an investor who's had trades on all year long and you want to get powder dry, that probably means you have to take off existing positions.
Yeah, and one of the most crowded ones was short dollar. Absolutely.
Maybe what we're seeing here, this is just like a tactical, things are actually bad, but because this trade is so saturated, investors are like, you know what, get rid of my treasury holdings. I want to just bring down risk levels overall. And so the dollar is getting a bounce because people are actually raising cash, which means they're getting out of their long euro dollar position.
It could be.
Right. So there's something in there that's in the back of my head today too about all this. We stick to the metals for a quick second though. Copper is edging up a little bit more. It's still very difficult to trade. Liquidity is not fantastic. When you look to various strikes, it's usually better than this right now, but in the wake of the tariff announcement, you go out to some of these round number strikes, open interest at the 575 or even up at the 6. But look at the trading volume today. There's not really anything doing here.
It's as though these tariffs have confounded the market with their idiocy. I know. Let's promote the building of tariff mines in the United States with tariffs now. Oh, wait, it takes 18 to 20 years to build a single mine. Oh, wait, the United States does not have significant copper deposits. What? I can absolutely see the market in this space, sort of the specialists in this space going, you know what, I'm going to go have a coffee. I don't know what to make of this thing.
Yeah. So Silver, Westwater yesterday was talking about how he rolled into 47 days out of the, he had a shorter dated contract that was 18 DTE. So he rolled into 47. I did too. Jamal made a comment earlier because he was likewise in this long silver trade. If December silver touches 40 today, he's going to close the call spread and buy upside calls in SLV. That's going to reduce his capital allocation while still allowing him to be in the game. I think that's a really good point here.
Yes.
Because if we think about what happened with copper the other day, it quickly became an illiquid market. And you could say even here today, like in the call spread I'm in, 440 open interest in the 39. I hope someone's willing to give me some liquidity when I get out of this. If
Somebody please let me out of this position.
If I was
just want to go home.
If I was in SLV, something similar like 49 days, let's go to the 70, the round one. Look at all this open interest across the strikes and the high trading volumes.
Yeah.
So one of the points I think that Jamal's getting at here, and he can speak for himself, of course, but having talked with him a little bit about copper, what happened earlier this week, where he was in a copper position and was more or less stuck. I think the idea here is, and always applying lessons, if there's a way to express the same point of view in a more liquid product right now than what's available, maybe in some of these futures, it might be a bit better decision to go there. Because in a thin market where there's not a lot of trading volume, even if you're in the correct position, where there were a number of people tweeting at me, emailing me, I'm long copper. Now what? Some of them couldn't get out because there was just no liquidity, even though they were long, so they can't realize the gain.
Well, yeah, nobody's trying to take the other side of this. I mean, just consider what you're asking people to do. Copper,
so product fit matters is really the point.
I mean, the thing just jumped because there's going to be a mindless tariff attached to it for no discernibly good reason. For you to get out of your long position, you have to sell it. That means somebody has to look at this situation and go, oh yeah, I'm going to buy copper here at the highs.
I just don't know why you buy New York copper here. You'd buy London copper and you'd sell it in New York and
or something. Yeah, I mean, who in their right mind is gonna come and say, oh yeah, now that it's surged this much, I'm gonna give you exit liquidity by buying it. Okay.
Ilya, oil's up a little bit more today. Here's the interesting view. It's trading right around 68.25, it's a little bit north of there right now. On the 2nd of July, on the 7th of July, we had a 68.32 print as the high. So we haven't made much progress this week. We're 10 cents above the Monday high. We are edging up though, and you're seeing momentum start to rebuild itself with this pullback into the 1 month. And, we held it yesterday, today. I'm still very much of the mindset that it's worth being directionally neutral here.
Yeah.
Volatility is not fantastic. I've seen some people suggest that OPEC headlines, how come they're not sinking oil prices?
Spoiler alert, everybody. Ilya doesn't think that OPEC Plus matters.
So don't trade around OPEC Plus headlines, please. We're macro people.
These guys.
Everyone else at the company will tell you the same thing. Like Tom will say, like, why would you trade around OPEC? I could see him incredulously even suggest, like, why would you even mention that to me?
Yeah, I mean,
but not us. It's not worth it. So we have a little bit of a bounce here. Natural gas was up earlier. It's down again. I'm glad it's down today because it made me feel like a real jerk yesterday for abandoning my net longs. But the structure here, the swing lows in April, we fall through them. We try to climb back into them this week. No good. And you could see here the 1 week moving average, we can't clear it yesterday. So there's something about the structure right now in the market that still looks bearish. And not that natural gas follows anyone's rules, it being the honey badger of honey badgers.
Oh yeah, it doesn't.
This does call for a potential extension down to 2.371, which from my own viewpoint of the world, Ilya, natural gas is one of those commodities where we produce so much of it. Tariffs on was a bad thing for natural gas. Tariffs getting lifted was a good thing.
Because we're net sellers.
Because we're right? We're drowning in the stuff.
Yeah.
So I'm using this right now. I'm more just this as like a gauge. But if you look at the 48.7 IVR, that is a heck of a lot better than anything you're seeing in basically any other market right now. And so if we were to put something on, that's basically a 1 standard deviation trade wrapped around the 46 DTE, you can still get something in that 60 to 70% probability of profit with a fairly decent risk to reward, 2.5 to 1, and more profit than buying power put down.
Well, and 66 probability of profit. Like when people look at these upside down
let's do it.
Risk reward numbers, and like folks like you or I that are from not the world of options, but from the world of trading the assets themselves, or at least the futures that follow the underlying. The mantra that's drilled into you is you can get direction wrong 60% of the time and still make money, as long as your risk reward structure is somewhere around risking 1 to make 2, give or take, or better. You can only be right 30% of the time. You can lose the majority of your positions and be a profitable trader. So when you look at these risk reward numbers and they're inverted and you're risking 2 to make 1, it looks crazy. But when you consider that it's with a 66% probability of profit,
that's what it should be.
It's a different story.
Yeah. I mean, realistically, if you rattle off trades where you're risking 2 to make 1 and you get them right 67% of the time, you will just break even as a trader. But that is informative, because then you start to build a strategy around that. Where can I tinker with this and get a little bit more of an edge? What if I knock my win rate up from 33% of the time to say 40% of the time, and I'm still able to cap my losers at 2 to 1. Now you're starting to build into a profitable.
Now you're starting to do something.
Now you're starting to do something, and that's why the whole concept of figuring out how to get around loss aversion. Let your winners run, cut your losers early. Don't cut your winners early and let your losers run, which is what so many people do.
That's right.
When you look at the data, it's not a right way to go about it. This is starting to get a little bit moving up here. I'm not crazy about it because I'm directionally neutral, but until we break the pre-liberation day high of 70.43, I'm really not concerned about oil doing much of anything at all. And where were we prior to all of this? September, October, December, February, March, into April, right around these levels. This is the real.
If you put a
midpoint.
horizontal line at the June 15th low, June 15th close, like that, like right there, I think you start to really see exactly what's going on here. I mean, you're basically at the underside of the initial war spike. So go to that war spike right there. So that initial surge higher, you come off of that and you get some initial support. Boom, right there. All you're doing is you're testing the underside of that range again. And you're stuck.
We only have a few minutes here, so we're going to speed through and go to the currency part. And, like some might say, I love it when a plan comes together.
Yeah.
6J here has taken a bath in the past week.
I'm with you, by the way. I started to sell yen earlier this week. Starting to work.
It's a very crowded trade still. And we're going to get an update to how crowded this trade is today at 3:30 p.m. Eastern, 2:30 Central, when the CFTC releases their updated commitment of traders report, which details where traders in the futures market stand with respect to being long or being short. This is a market that, as of the end of last week, the Z-score was 2.66. Yen net long positioning was 2.66 standard deviations above its 20-year mean, 20-year average. So the basis of being short 6J, short deltas in 6J, is the fact that this thing, everyone and their mothers long the yen still, to a degree that we really don't see by any stretch of the imagination in significant history. Treasury yields up, oil up.
Makes me very comfortable to be short at this point.
Well, I'll tell you, the 0068 puts have been working out here well. There's still a good amount of time on the board. So if you're in the puts or the put spreads like I am, I was layering in even more a few days ago because I think I really felt good about the positioning. So with the 28 days to expiration, that's going to stick around until next week. when I do, I'm going to roll it down to 67, 66. I still think we have more to go here. I think Japan's in a really bad spot with their rice problem and the long end yields.
Yeah.
So keep the trade going. For the euro, we haven't done anything here recently, but I'd point people, Ilya, uptrend from the February, May, June lows, 1 month, moving average, and swing highs right around 117. You have 30 seconds. Give me your DXY elevator pitch. Is this the bottom here as we try to make our first close to the 1 month since May 23rd?
Near term, yes. Or at least that's what I'm positioned for. I'm very much of the mind that the dollar is going to have a terrible year this year, but markets don't move in straight lines. And so I think the dollar has gotten overcooked here. And it's time. If you look across the major currencies, it's time. I'm pretty long at this point.
Before we pop off and you say across the major currencies, to round out the top big three of the dollar index.
The pound is the one I started with. I've been short it for almost 2 weeks now. It's working slowly. Long may it continue.
April bounce, June bounce. Here's the July test of the 50-day. You lose that, you're losing the highs that you have at the end of April, and it's a different game.
And
what's next on the calendar? It's all about China, Sunday and Monday. We have their import-export trade data, then we have their GDP figures. Outside of that, though, we are done here on Futures Power Hour for today and for this week. We're going to take a quick break here on Tasty Live. Dr. Jim Schultz is coming up next with From Theory to Practice. Ilya and I will see you, everyone, on Monday for Futures Power Hour and Overtime. So good luck trading. See you soon.
See you then, everybody.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Understand I got a plan, but that's not Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do, man. Welcome to, man, we got lots of things to talk about this morning. Welcome to the day before Boston edition of what we're trying to do. And for those of you that aren't going to make it to Boston, it's very, very sad. I know you're sad. I'm sad. We're all sad. But you can still be with Dr. Jim in spirit on Sunday night, because on Sunday night, right after first call, the new crash course that I've been talking about for the last, I don't know, a couple of months, I guess, that guy is going to premiere on the network. I think it's going to premiere on the network and also premiere on YouTube. And so that's going to be right after first call this Sunday on July 13th. So if I don't see you in Boston, we can still kind of share a little bit of time together there in cyberspace. If you check out the brand new crash course, this one is going to have a very, very different look and feel to it relative to what you guys have, come to expect from me. I mean, you still get the same B- quality content from me, but the way they've kind of dressed it up and the way they've kind of jazzed it up, it's going to be a lot different in terms of the user experience. So I really, really hope you guys enjoy it. I'm very, very excited to see how this goes. And Ryan and Matt and Rachel and everybody, Jessica and Dean, they all did amazing. Cassie, and people I'm forgetting, of course, they all did amazing work on the production of this crash course. And so that's going to be Sunday night right after first call. But of course, for those of you guys that are going to be in the Boston greater area, so that's going to be like Boston, New York, like Maine, Rhode Island, maybe Pennsylvania, maybe Eastern Ohio, maybe even Eastern to Central, North Dakota, South Dakota. If you're in that region, then I hope to see you on Sunday night at the Boston event. It's totally free. You can still sign up. I think there's still spots available. tastylive.com/events. Go sign up. Bring your friends, bring your family members, bring your foes. Again, I just need bodies in the seats. We need heartbeats in the room. So it's going to be amazing. I can't wait to see so many of you all at the event. But Paul, bring us into the market, man. What a little something we got going on, man. It's been a crazy day. 18 hours. Whatever it is. Even the S&P is down 16 on the day. Risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, down 13 on the day. You've got the boomers down 290. You've got the Russell 2000 Futures Index down 25 on the day. You've got bonds down a point. You've got notes down a little bit. You've got oil up a couple bucks. You got UB40 getting smacked around. Look at gold, man. Gold up $44, right? So the shifties are excited. You're excited. I'm excited. But of course, unless you've been living under a rock, gold is not the story today. The story today is little old silver. So take a look at silver. $39. $39. This thing's up $1.77. That is a crazy move. And so, one of the things with the metals, I don't talk about this too often, but I think it's worthwhile to mention this. One of the things about the metals, and I guess you could even put oil in this category too, but specifically with the metals, gold, silver, maybe some platinum for my platinum bros that might be trading some platinum out there. When you think about equities and you think about the markets, right, like S&P 500, NASDAQ, etc., the extreme risk, the high velocity move risk, is usually baked into the downside, right? That's usually going to be baked into, your black swans, or given the current state of the environment, your orange swans, if you will. That's all going to be, although that could be to the upside, right? That tariff announcement, when he came out with the policy, the NASDAQ ripped 10% to the upside, in 25 minutes. So I guess it could be either way. But with whatever color swan you like to choose for this, analogy, it's usually baked into the downside. That's where the negative skew comes in. That's why the volatility on out of the money puts is so high and all the things we talk about all the time. When it comes to the metals, though, gold, silver, usually it's the opposite story. So usually, the huge moves are kind of baked into the upside. And so that is what you're seeing here in silver. You're seeing a massive outlier move to the upside. Gold is, of course, having a really strong day too, but nothing like silver. Gold's up 1%. It's why did you even get me out of bed this morning when you got the Hunt brothers over here up almost 5%? I think they can now officially shut down the pizza shops. I think they can now just officially just say, all right, look, we did the cheese and pepperoni for a little bit. We did the margarita thing for a little bit. We did the Supreme for a little bit. We were stuffing the crust. We were trying different things, but it just didn't really kind of move the needle. But, man, you get, SI futures up $1.80 on the day. that's gonna do some things to some people out there. And so I hope that you are on the right side of this move. Yeah, pretty crazy stuff. I mean, I've been verbally bearish on the metals for a while now, and I've been dead wrong, which is pretty par for the course. Again, it doesn't matter, guys. You need to bypass all the confidence, all the conviction, forget all that stuff. You need to do the exact opposite of everything I do, and you will be able to trim months, maybe years off of your path to financial independence. We've talked about this many times before, and it's no different today. It's the same today as it was yesterday. And so anyway, silver up to 39.12. Wow, is it going to hit up $2 today? That would be really, really wild stuff. And so, all right, so you've got, market, market was really strong yesterday, of course. And then last night there was, I don't know what happened last night. Was there some tariff news? Like, I'm not even sure. I can't even keep track anymore. But the market it was just a normal evening. Everybody was just watching the Red Sox come back from behind against not your Tampa, maybe your Tampa Bay Rays, but not my Tampa Bay Rays, against the Tampa Bay Rays to secure a 4-3 victory for the 7th win in a row, which is pretty awesome. And so everybody was watching that, just enjoying themselves. And then the next thing you know, the market starts dropping like a rock. Like the next thing you know, I mean, EMA S&Ps are down 30 handles. And then this morning, they looked super weak too. And so I don't know, did something come out? Like, is it Taco Friday? Again, it's in the Constitution, guys. Taco Friday cannot be a thing. I'll give you a Taco Tuesday. Obviously, I'm even willing to accept a Taco Thursday, but you can't have a Taco Friday, right? It's just not, it's unconstitutional. And so let me know, guys, like why, I mean, what happened today? I mean, this feels like, I mean, y'all tell me, man, I don't know, but this feels like an up day. Like this feels like a green day. And so, the EMA S&P is only down 16, doesn't feel like a down day at all when they were down, they were down to what, 70 something at one point? Let me look at a chart here really quick. So the low, I think it was like 78 or 77. 76. So 76 3/4 was your low print on E-mini S&Ps. And the NASDAQ was obviously significantly lower too. You can see right there, the NASDAQ was all the way down to 831 at one point, and it is now comfortably back up into the 23,000 range. And so crazy stuff. Wild times. Man, it's almost like markets move and things change. It's almost like, man, this stuff has a mind of its own. Some crazy stuff indeed. So, all right, there's your market commentary. Which is it going to help you? No. Is it on par with anything you would find anywhere else? Of course. It's pretty much in the same category in terms of value provided. And so if you look at the portfolio, though, it's looking pretty sparse these days. I mean, we don't have too many things going on anymore. We've got, obviously, Best Buy. We've had that for a while. IWM, Starbucks, and TLT. There isn't really too much to talk about, so I kind of want to focus on some other things here for a couple of minutes. And then I want to see where you guys are at. Man, look at you guys. I see you guys in the chat. I appreciate you guys. I actually forgot to sneak in the chat to kind of demarcate clearly the start of my show and the end of the previous shows. And so, but I think I got it. But I see you guys, man. I see Sam L's in the house. I see Grumpy Mike's in the house. Man, Brian Dowdy's in the house. David Gallamore's in the house. iPod Touch in the house. Just conjuring up your inner, maybe what, 2007? 2005? Is that like 1996? iPod Touch? Man, that's some crazy stuff. Talk about the Wayback Machine. I got Brandon R in the house, man. I appreciate you. Emmett Morrison. Man, look at Stanza Live. Appreciate you guys. All right, so let's talk about a couple of things that I want to talk about. Okay, so we did. Let me think here. Yeah, the only thing I really wanted to talk about today was the fact that we can't really do very much. The only thing I wanted to kind of lament today was the simple fact that, we've got earnings coming on down the chutes. If you look at, like, if I bring up my Tasty Default, in fact, hold on, let me bring up Tom's watch list. Because remember, guys, every time you click on this, Tom gets a 35-cent royalty. And so, again, guys, the second Range Rover, it ain't going to buy itself, right? And so we got to do our part. Like, we all got to pitch in. And so Tom's watch list, if I sort by earnings, which it's already sorted by earnings, so that's kind of nice. It's kind of worth that 35% royalty, or 35-cent royalty, I should say. If you look, you see July 15th. So we've got some earnings coming on down the chutes. For me, I know you've got your JP Morgan, which didn't he come out recently? Oh, wait, what is that? Is that lime green? We're going lime green? No, I don't want to do lime green. Hold on. Let's go. We'll go Diet Strawberry. JP Morgan, didn't he come out recently and say we should raise rates? Somebody came out recently and said like we should hike rates, which I mean maybe we should. I don't know. I mean it's hard to justify a cut right now just because things are going so well. And so obviously I know the administration is all, they're all hullabaloo about, a cut. And I mean, there is going to come a time for cuts, of course, but it does feel like it might be a bit too early. But then again, I mean, I guess the devil's advocate to that is oftentimes the Fed is historically late. And so maybe if you cut now, just a quick little 25 bips, like nothing crazy, just a little something off the top. And so we're still going to keep the bro flow in the back. Like, don't worry about it. But it's like, man, we'll just do a little something. And maybe that's a good time to do it because maybe you're not as late as the Fed has historically been. I don't know. I mean, that's why I'm here with you all and they're doing meaningful work. Like we're all just hanging out together on a Friday afternoon. I forgot my ghost, by the way. I was going to go with, guys, so we have a contender. I should have brought it in here. I can't go get it because it's too far away. We have a contender, guys. So I'll bring one of these in next week or whatever. But so the sour green apple ghost, right? Again, I'm working on my sponsorships. I mean, Tom Lee's got BitMines. These other guys got whatever else. You got Bill Ackman's playing tennis with, pros or whatever, or semi-pros or whatever. We're going to lock down this ghost sponsorship before this thing's all said and done. The sour green, we're not going to lock anything down, but I'm going to try. The sour green apple is the best tasting energy drink I've ever tasted in my entire life. There is a close second now, and I think you all brought this to my attention in the chat. It's the sour pink lemonade. I don't know what it is about the sour deal, but man, it is so good. It is so good because it's very, very sweet, like on the front end. And then right when you're finishing up the sip and you're kind of getting into the aftertaste zone, it just kind of hits you in the side with a little sour punch. Just a little kidney deal right at the very end. And it's just, man, the mixture, the balance is pretty amazing. But anyway, I digress. I mean, hey, it's a Friday show. It's a Friday show before a live event. I mean, we're completely off the rails today. Before the Crash Course release, I mean, what would you guys expect? But anyway, you've got JP Morgan on July 15th. You've got Wells Fargo on July 15th. I mean, to me, all of those aren't really when earnings season begins. Netflix is when earnings season kind of officially begins in my book. Now, some people may disagree, and that's totally fine, of course. But, it's going to be the tech names. I mean, obviously the banks are important. Like, I'm not saying they're not important, but from a trading standpoint, I feel like the tech names are going to give you a lot more opportunity. They're going to give you a lot more movement in the market, especially as they move the major indexes, especially the NASDAQ index. You've got your Netflixes, and then, you just look on down the list a little bit. There's Google right there, right? There's Tesla right at the bottom of the screen. Right. And then if we actually scroll down on the list a little bit more, you can see you can have all the other tech bros. And so if you look here, let me actually give ourselves a bit more room even. We left off. You got Tesla is going to be on July 23rd. You've got Meta and Microsoft both and Qualcomm, all three of these guys on July 30th. And so that's going to be some crazy stuff. And then, of course, you've got Apple, which is on July 31st, kind of a standalone deal there. On July 31st. And then, going on down the list, you got McDonald's and Disney and, Caterpillar and all these other guys. But AMD actually is going to be August 5th. That could be a big mover too. Because, NVIDIA, man, look at NVIDIA. Man, NVDA, pronounced NVIDIA. Oh, hold on. I forgot the N. Put VDA in there. That's not right. So NVDA. Look at NVIDIA, 165. That's, man, wow. That is a move. It's not quite like a Silver Hunt Brothers move, but man, it's a little. This is crazy, man. And so let's look at this. So NVIDIA, wow, and it's not even on the highs today. It was up to 167 on the highs today. Man, that's really wild. And the NASDAQ hasn't been green. I don't think the NASDAQ has been green at all today. And so the fact that NVIDIA has been so strong and was even stronger earlier, man, that's really something. That's crazy stuff. And I think Tom got short at like 80 or like 70. I mean, even I'm not crazy enough to get short in a video. Like, it's like, man, I mean, I'll light a stack of cash on fire with the best of them, but that's going a little too far. Like, you got to draw the line somewhere, and it's right before getting short in a video. And so, but that's NVIDIA. But anyway, there's not much we can do. Like, there's just, my hands are a bit tied. I mean, we could do some things in the indexes, I guess. And, but the market's so weak today, volatility's even down. Like, this market is so weak, you've got volatility futures down 12 cents. I mean, I think the VIX is up a little bit, but the VIX is broken. The VIX is irrelevant. You've got volatility. It's irrelevant, but of course, we're going to bring it up again in about 5 minutes. And volatility futures are actually down today. So it's like, this is not exactly the best day to sell new premium, in my opinion. I mean, let's wait for, Liberation Day 2.0, which could be Monday, could be Tuesday, could be never. But it's like, man, if we can get a little spike in volatility, that's going to be the time to sell premium. And so, this is a question I get all the time. So I'll go ahead and kind of answer this in a bit of a blanket statement. A lot of people say, what do I do when volatility is so low? And what do I do when, volatility is muted and the market just keeps printing all-time highs and the market just keeps, grinding higher? I mean, the first thing is we have to recognize this is what the market does. Like structurally, this is what the market does when it comes to like risk premium, when it comes to like, demand for equity assets and all those kinds of things. You start getting into the positive drift. You can even start to, unpack a Brownian motion model, which we've done before on this show. And well, maybe not this specific show, but definitely on the skinny on options, abstract applications with Tom and Tony. I've unpacked that several different times. And so you could easily Google, skinny abstract, Brownian motion or geometric Brownian motion, and you'll run right into a few different segments that we've done there. And so that's just structurally how things are set up. But of course, then you get the big moves lower where the volatility kind of kicks in. It can be really, really, really difficult to trade in an environment like this one. And so you just have to understand your surroundings and understand contextually where you are. Now is not the time to be deploying a bunch of capital. Now is not the time to be on the upper end of your capital allocation range, whatever that might be. I think most traders land between 20 to 25% allocated on the low end to maybe 50 to 60, 65% on the high end. Some traders are below the low end and some traders are above the high end. But I would say on average, most traders are going to land somewhere in the middle there, between that range. Now is not the time to be. If your upper limit is 60%, I would not be at 50, 55%. I would be much closer to the lower end of that range. But I respect the fact that you want to have something working. You want to have something kind of moving for you. And so this is where earnings can be helpful. This is where earnings can give us some higher volatility, opportunities. This is where going into like some non-equity instruments like bonds or like gold and silver and like whatever to kind of give you a little something to do that isn't necessarily related to the indexes. And so anyway, I digress. And so let's see. Let's go to you guys though, man. I see you guys in the chat. And so I'm going to surprise and delight somebody in the middle. And it's actually not even going to be a surprise or a delight. It's going to be a correction. So I see Cordova Dave near the end is trying to say this is what's tricky about the internet, guys. It's misinformation everywhere. There's fake news just being spouted off, and there's no gatekeeper. Like, where is the ministry of truth? Like, where is the ministry of truth for my very show? Because Cordova Dave said actually NVIDIA issued a clarification that it is pronounced NVIDIA. That's not correct. That is false. And we all know that's false. If you've been watching this show for any length of time, you know that that is misinformation. And so Cordova Dave, I would appreciate you to come with actual facts next time, because that is just not right. So let's go to the beginning now. Let's see where you guys are at. Man, I see you guys in the house. Dr. Jim is in the house. Sam L's in the house, man. I appreciate you, Sam L. What's going on, my friend? Thank you so much for being here. Just appreciate you, man. You're part of the core position. And so, Sam L, you're kind of oh, excuse me. Sam L, you're like the part of the core position that you never really wanted. Right? You're like, I was having a discussion with a buddy of mine that just started trading like a couple weeks ago. And he we were talking about, he was asking me what you do. Like, he's like, well, what do you do when you have a trade that goes wrong that you don't really want to get out of? I'm like, well, it's just part of your core position now. Like, you just inventory that position, you just call it a day. And he's like, that doesn't seem right to me. I'm like, I know. But listen, I don't make the rules, man. This is just what you have to do. And so, Sam L, you're kind of like that. Like, you're kind of around. Like, you're just here, right? You're part of the core position. And we didn't necessarily, want you from the outset. But now that we've had you for so long, I can't imagine a show without you. Like, now I can't imagine life without you, Samuel. So I appreciate you, my friend. And hopefully that was a sufficient compliment your way, which that's what this network's all about. And so I appreciate you, though, my friend, very, very much. So Grumpy Mike's in the house. Brad Glazier's in the house. Greetings, Professor. Safe travels this weekend. Yes, thank you, my friend. I'm excited. I'm super excited. I can't wait. I fly to Boston tomorrow, and it's going to be awesome. I'm going to miss my wife and miss my kids and all that kind of stuff. And so that's going to be a little bit sad. But it's going to be amazing. And so I really, really can't wait. And so Brian Dowdy says, hey, Dr. J, let's put some more trades on today. The portfolio is looking a little bit light. I agree, man. Again, the indexes – we can look. SPY, Yeah, 9.6. That's brutal. I mean, we could do something directional, I guess. QQQ, 9.5. Excuse me, IWM, 14.3, but we already have an IWM position on. DIA, the boomers, yeah, 11.8. That's kind of brutal too. And so, yeah, I don't know. I don't think I want to do anything right now. I mean, because again, we have a lot of earnings coming up, and then starting next week, we may do some JP Morgan, we may do some Wells Fargo, we may do some Netflix. We'll definitely do some Netflix. But it's like having some capital ready to go for the earnings season makes a lot of sense to me. And so, yeah, I think we're just gonna sit tight. And so let's see. Edward Lon's in the house. Daniel Rooney's in the house. What's going on there, Daniel? Morning, Jim. What profit roll target should I look for on an investment style zebra? Ooh, investment style zebra. Interesting. Still 21 days to go, 50% of profit, or is that just for short premium? Thanks. Have a great show. Thank you, my friend. So that's interesting. So we talk about investment style covered calls a lot on this show. I mean, that's what my Starbucks position is. You're talking about an investment style zebra. Interesting. I've never really thought of zebras that way, but you certainly can. There's no reason why you couldn't do that. Again, when I use the term investment style, which I think you're using it the same way, Daniel Rooney, because I know that you watch the show on a regular basis. And so thank you so much, my friend. You're referring to something that doesn't have like I don't want to say predetermined, but it doesn't have the same feel as like an active trade. Like with an active trade, you're in at 45, you're out at 21. Like you're trying to kind of turn over the capital quickly, find opportunities, and manage winners and things like that. When you have an quote unquote investment style, really anything, it could be you could do investment style straddles. You could do and that probably wouldn't make any sense, but you could do an investment style zebra, investment style covered call, etc. Right? Investment style diagonal spread, poor man's covered call. You could certainly do that. That kind of evokes this longer term time horizon. And so in my opinion, now I'm not as comfortable with the zebra. We've done a few on the show, and I think it was a worthwhile endeavor. Maybe we should start doing some more. Again, I think that would be another worthwhile endeavor. I'm not as comfortable with those as I am with other strategies, like a covered call, like a short put, like a ratio spread, whatever. But I would say you're not looking at 21 days to go. You're also not looking at 50% of max profit, because it's intended to be a longer term deal. Now, when it comes to like the ins and the outs, like logistically, the stock run, like you have a call zebra, let's say the stock runs up and you have a nice profit on your hands. Is there anything that you could or should do with the strikes? That's where my lack of mastery of the strategy is going to kind of, be a bit of a hiccup for us, because I don't know. I'm not sure. I'd have to actually look at the strikes and really think about it in terms of, gimmies and gotchas and what to do. But I can say this, just kind of zooming out and giving you a bit of the bigger picture. You're not really looking at 21 days to go. You're not really looking at 50% of max profit. Whenever you kind of invoke the investment style label, those things go out the window, in my opinion, because now it's intended to look and feel a lot more like, that McDonald's stock that you had for 75 years, right? Or that IBM stock that you've had for 118 years. Like it's intended to kind of look and feel more like that. And so hopefully that still helps a little bit. Brian Dowdy says TLT is going against us today. Yes, it is a little bit, but we're doing okay. Like we're hanging in there. I mean, we're in the money slightly. You've got 35 days to go. I mean, we're barely tested, my friend. And so we're just going to pretend like we didn't even see this. We're just going to pretend like this moment never happened. We can edit this out later. We can have the robots edit it out and kind of deep fake everybody that's in the archives. And so don't even worry about it, Brian. Like it's going to be fine. So Sam L's back. So Sam L, and I know you're good support, my friend. I love you, Sam L. So Sam L says, Doc, how about a new trade? Tempest AI, TEM. Let's see here. AI-driven healthcare. Man, what could possibly – you said what could possibly go wrong? That's exactly what I was thinking, right? That's exactly what I was thinking. What did AI mess up recently? Oh, there was a not a meme, or maybe it was a meme, I don't know, but there was a picture floating around the internet where somebody typed in to one of the – I don't know if it was Grok or ChatGPT or OpenAI, whatever it is, typed in like, show me a picture of Jesse from Full House. And I don't know if it was photoshopped or whatever, but coming back was a picture of Joey, like Dave Coulier. I'm like, man, everybody knows that ain't Jesse from Full House. I'm like, if that's AI's answer, yeah, let's get AI in some healthcare. Like, let's get AI doing some diagnoses. Like, this is a real good idea. And so, yeah, TEM, man, let's go. Sam L says we're deep in the AI hype cycle. We might as well ride it, man. Let's go. I mean, TEM. I'm ready. Down 250 today. They probably saw the same, Jesse from Full House debacle that I saw. And so now there are some questions being, raised about, AI in healthcare, as there should be. But if I go into TEM, you've got earnings on August 5th. You've got, let's see here, liquidity. Okay, you got 3 stars on the liquidity meter. I'm looking at that right here. And so there you go. They don't pay a dividend yet, but look at that. They're slated to pay one on January 1st of 2070. Man, that is some unbelievable planning by TEM. Look at that. Can you guys see what I see on the screen? January 1st, 2070. Here, I'll even fill in the blank here. You're going to get your 2-cent dividend. Like, it's coming, baby. You can plan around it. You can budget for it. Like, it is on its way. And so there you go, right? That's what the robots can give us. They can give us, a Jesse Joey debacle on Full House. They can give us a planned dividend in 45 years. And, I mean, what more can you ask for, right? Again, what could possibly go wrong? So TEM, I can't believe that. That's really funny. Obviously, that's got to be some kind of mistake. But I'm going to laugh because obviously this show's still going to be going. I mean, it's still going to be the same show. It's going to be the same humor. It's going to be the same stuff. Let's roll up this untested side. Let's do it all together. It's going to be amazing, right? And I'm going to laugh when we start collecting some TEM dividends on January 1st, 2070. Man, it's going to be amazing. But if I go in here, earnings on August 5th, that's a bit of a problem because you guys know I don't like to do trades with earnings coming up. But, man, look at this. Okay, so this is interesting. So you've got a $57 stock, right? Obviously, the implied volatility is fairly high, 84%. I actually thought it might be higher than that, but that's still nothing to shake a stick at. But take a look at the at-the-money options, right? So basically, you're looking here. Man, those are some pretty decent-looking premiums for a $57 stock. Now, I'm not going to trade this, ML, just because they have earnings on August 5th. So try to remind me on August 5th, and maybe we'll do something for earnings there in a little old TEM. But if I go in here, is the margin going to be crazy? I fear that the margin is going to be crazy. Like if I sell this 55 put, which is basically at the money strike. Wow, the margin is nothing. Look at that. The margin is only $1,000. So it's basically being treated like any other $50 stock. That's about what I would expect to pay for the margin of the position. This looks like a pretty good trading candidate in my opinion. Like, I don't think you need to go hog wild. I don't think you need to go crazy. Again, we're all banking on that dividend on January 1st, 2070. So keep that in the back of your mind, of course. But yeah, 948. I like it a lot. But just remind me, Samuel. And we'll do it on August 5th. And so Grumpy Mike figured Jim will be traveling. No, I'm going tomorrow. And so we're not leaving today. But again, yes, there is an event this weekend. It's Boston on Sunday night. So again, if you're in the area, which is basically going to be the Midwest and over, then I hope that I see you on Sunday night. I won't be, I have to check my flight. I don't know when my flight is. I think it's Monday morning. And so, again, I'm not sure if I'll be back in time for From Theory to Practice. If I'm back in time, I will absolutely 100% do the show. But if I'm still in the air, if I'm on the tarmac or something, I don't know that I'll be able to do the show. But I can't do the Monday morning show with Tom and Tony, so there'll be no Skinny on Monday morning. But my hope is there'll still be a From Theory to Practice like normal. Emmett Morrison's in the house. What's going on there, Emmett Morrison? Says, it's Dr. Jim time. Let's deploy some capital. The portfolio looks like it could use a few more positions. I know. Again, same old story, Emmett. We just got to be a little bit patient. We'll do some more things next week. Samuel, Doc, sorry, your boy. So your boy Clark tapped out. Yes, he did. He tapped out. He was feeling a little bit too much pressure with the reporting, which was interesting because it wasn't even the red days, because the last couple of weeks he's actually green now, kind of significantly green. And when I say significantly, I don't mean like he's doubled or anything like that, but I think he's plus. Last we checked, maybe 10% or 11%, which is kind of great. That's kind of amazing. But he was just like, man, I'm feeling a lot of pressure, like having to report. And the pressure started to mount on the green days more than the red days. I think because, everybody expects it to blow up. And so it's kind of like if it's not going to blow up, it's like that almost brings in some more pressure. And so, hey, I can respect it, man. I mean, again, this is another great case of things are a little bit different in theory than they are in practice. Like when everybody's on the ground and everybody's just having a good time, eating cotton candy and doing, funnel cakes and whatever, everybody's all laughs and giggles. But, man, once you get in the roller coaster and you're in the seat, it's a little bit different. It's like, all right, maybe I don't want to do this. Maybe I don't want to do that. So I can respect it. And so Joe's in the house, says, hey, Dr. Jim, what's going on there, Joe? I appreciate you, my friend. Thank you for being here so much. Edward Lon says it's a good day to be alive. It is a good day to be alive. It is 100% a good day to be alive. iPod Touch says, Dr. Jim, what is your go-to steroid for working out? Yeah, man, Natty for life, baby. Natty for life. And so I can't help you with that. Which the fact that your iPod Touch, you may not be as familiar with the internet as some of our other brethren that might be watching the show. But you should check it out. It's an amazing product. You can find whatever you want, man. Like, you can find whatever you want. So I'm not your guy, unfortunately. You know, I'm kind of a creatine and fish oil type of guy. And obviously a Florida tan, you know, that hides the fatness extremely well. And so that's pretty much my go-to trifecta. And so David Gallimore is in the house. Dr. Jim, I bought it. What's going on there, David? I bought an SPX spread for 20 cents 3 days ago. It's up 1,150% to $2.65. Man, look at that. It still have about $3 more of profit to get to max profit. Close, roll, or stay for the $3 of more profit. So when you say $3, I think you mean, I have to assume you mean the 265 could be 565. So I'm going to answer it assuming that. So that's an amazing trade. That's an amazing trade. I can't figure out if you played it to the upside or the downside. I guess both could work, just given the move. I mean, yeah, I don't know. I mean, if you did it to the downside, it's being withered away as we speak. But it doesn't really matter necessarily. That is an amazing, amazing trade. So, I mean, just kind of doing the math, right? You bought it for 20 cents. It's what, a $6 spread maybe? You bought it for 20 cents. You can close it now for, $2.65. Obviously, you're way over 50% of max profit because you only paid 20 cents for it. But you're actually right at about, from what I can gather based on the question, you're right at about the 50% mark of the overall spread value. And so, man, this is like an amazing trade. I would probably close it and move on. I wouldn't want to get super greedy here. I wouldn't want to go for more juice in the orange than what is already readily available. It looks to me like you've already squeezed a good bit of juice out of that orange. And so, I would take the profits and I would just enjoy your weekend. Like, I would take the profits. I would get you a Roman Anthony jersey and just call it a day. And so let's see. Oh, Emmett says, Brian, you beat me to it. Yeah, more positions. I know. We got to do it. And so, Emmett says to close it for David. That's 100% right. Brandon R says, Dr. J just collecting dividends in his safe havens for this impending crash. Well, I'm not collecting any dividends. The only dividend I'm interested in is TEM. January 1st, 2070. Right there. Boom. Again, it's a TBD on the amount, but I'm thinking, 2 to 4 cents is probably what we can expect. And so that's the only dividend that I'm interested in these days. Wow, look at the NASDAQ is now green. Nobody knows, man. Man, I don't give a rip. I don't give a rip what anybody says. I don't give a rip about any of it. Nobody has a single clue what's going to happen. Not a single clue. Like, it looked like, is this Liberation Day again? Like, it's going to be whatever it's going to be. And boom, here you go. Unched on the day. Unched on the day. Silver up $1 million. Gold up $500,000. Unched on the equity markets. Nobody has a clue what's going to happen. So Edward Lond, ride the widow. The Widowmaker? Like a little natural gas for you there, Edward Lond? Not exactly sure what you meant there. Brian Dowdy, you got to give yourself some more credit, Dr. J. You realize P&L is green for there. Yeah, it is. I mean, we've done pretty well here on the show. And so you guys don't ask me, but I mean, I'll take a quick little victory lap. I mean, boom, there you go. I mean, check me out, man. That's not too bad, right? That's okay. Again, we like to keep it under wraps. I like to kind of be a bit more sneaky and surreptitious about it, but that's not too bad. On a $30,000 account, that's okay. It's a little something. And so yeah, and that's with Oracle. Guys, that's with Oracle. Were you guys around for Oracle? Man, it was bad. It was bad. Oracle took all my money. I mean, apparently not all of it, but yeah, Oracle was super, super, super bad. So yeah, no, it's been okay. It's been okay. It's basically just, the couple times we got lucky on the expecting move butterflies, and then there you go. And so that means, of course, we're going to be lighting more stacks of cash on fire next week and for the coming week. So if you're brand new to the show, please come back, because again, I'm serious when I say this. I couldn't be more serious when I say this. I'm not being sarcastic. I am being serious. If you do the opposite of my directional plays, now when I sell a strangle, don't buy it, like nothing like that. But if you do the opposite of my directional plays, like, you are going to be able to retire early. It might be 3 months. It might be 12 months. It could be 4.5 years. It's going to be some, truncated portion of what you thought it was going to take for you to reach your financial goals. And so check out the show. And whenever I'm really all, lathered up about a given directional position, just do the opposite and you're going to be in a real, real good spot. And so let's see. Stanislav says, "Hey Doc, will there be a recording from the crash course? Thanks." Well, no, not from the live one in Boston. But again, we do have a brand new crash course that is hitting the network on Sunday night right after first call. And so that's going to be stocks to options. Like that's going to be taking, making the journey, like going across the bridge from kind of all stocks to like including some options. And so that was actually something we've never covered before when it comes to the different crash courses. We've done like the beginner crash course. I've done option pricing. We've done the Greeks. We've done strategy management. We've done rolling. We've done a bunch. We've done like 8. We've done portfolio management. I think this might be number 9 now. So we've done quite a few, but we've never actually done stocks to options, which this is actually something that I think is going to appeal to a lot of people. Right. And I hope that I did the topic and did the content justice. I mean, you guys will be the ultimate judge of that. But yeah, I think it'll be worth your while there, Stanislav. And so, yeah, give it a look. But no, the Boston event will not be recorded. And so Brian Dowdy says, even after that Oracle debacle. Yeah, it's crazy, man. It's absolutely crazy. And so I give all credit to Tom Sosnoff. I give all credit to Tom Sosnoff for taking me under his wing. And it's all because of him. It's all because of his instruction and his tutelage that I'm able to do all the things that I can do here on the show. And of course, I am contractually obligated to say that at least once per quarter. So Jeffrey Jones says, with portfolio margin, one can buy a number of 5-cent puts, 10 to 20x quantity against their long delta next expiration. This supercharges their buying power leverage. Is this a discussed strategy? No, it's not something I don't have a ton of experience with portfolio margin. And so that's not really I'm not going to be the best person to ask about that. So as far as like supercharged buying power and things like that, I'm not going to be a great resource for you. And so no, that's not really something that I'm necessarily going to be able to help with, but that could be a good email for Tom. Tom@tastylive.com. Ask him and he'll probably be able to give you a little bit of insight, there. Edward Lon's in the house. iPod Touch back in the house. Let's see. Rick CR says, too bad us lurkers don't get props, man. You're getting props now because you came out of the shadows, man. Look at you. So I appreciate you there, Rick CR. Let's see. Chris DIY, Hollywood, Florida in the house, man. Is that east side or west side? Like, are we doing Biggie or are we doing Tupac? Hollywood, I think, is on the east side, isn't it? I don't know. And I don't want to pull up a map, but, obviously I'm on the west side. And so, I appreciate you, Chris. Thank you for being here, my friend. But I think I'm trying to figure out where Hollywood is. It's not in the middle. Nobody's in the middle. Yeah, I don't know if it's east side or west side. Let me know in the chat. I'll scan it when the show's over. Trev J is in the house. Agreed on those 2 flavors. Let's go. You may also like Sour Patch Blue Raspberry Ghost. Is it Sour Patch? So I've had the blue, is there 2 blue raspberries? I've had a blue raspberry, but I thought it was like a blue raspberry Riz or something like that. I didn't know. Is there like a whole, I guess they're all kind of Sour Patch, because I'm trying to think about this now. I've done the Sour Patch Green Apple, which again, it's still number 1. The Sour Patch Pink Lemonade is an honorable mention second. It's still behind Sour Green Apple, but it's in the conversation. Like we can include it in the same category. I also have a sour watermelon out there, which it's good, but it's not great. Like it's not going to change your life like the sour green apple or even the sour pink lemonade. The blue raspberry, I didn't realize, maybe it is sour. I didn't think that it was. I thought it was something else, but I could be getting my pre-workouts mixed up because I have so many in the rotation. Sometimes it's hard to keep track. And so let's see. David says the spread expires the day after I get to the Philippines. I have a GTC order in to roll. I need SPX to increase about 10 points or decay to come in before the end of the day. Well, when you wrote that in, which was a long time ago, I feel like, SPX is kind of on the highs today. Yeah, I don't know where SPX is specifically, but ES is kind of on the highs today, up to 63.12. And so, man, I have a feeling you've gotten half of your points that you wanted. And so, man, you've got a nice little winner there. I would probably take that guy off, my friend. Chris DIY says Prime was a joke. Lots of items I had saved, and the new price either the same price, even though Amazon site said it was normally higher. So please raise the rates. That's just good business model from Amazon, and by good I mean it is shady as all get out. but that is how they're going to do it. Let's see. There's Cordova Dave. We made it to the surprise and delight comment. That is always my personal goal for the show, and we're just about to be done, so that's pretty good. Real Investor says the NVIDIA CEO is unloading shares, 28 million straight on top, and the retailers are buying. So avoiding all equity and derivative market, there's no volume. So all world indices falling slow and steady. Not today, man. I don't know. Again, you've got quite a recovery today. I'm going to be very interested to see how the last hour turns out. Like, are they going to stomp on them and send the EMEA S&Ps to close, down 30, down 35? I could definitely see that. I could see them closing plus 10. Like, that would be crazy, man. That would be so crazy. And so I don't even know what's crazier. Is the silver move crazier or is that crazier? Like, that's pretty crazy stuff. And so let's see. Trev J says it will eventually become Prime Week and then Prime Month to make people think they're getting deals longer. Yes, I mean, they got to do something. They got to do something to appease the shareholders. And then Cordova Dave says, I love you, Jim. I love you, Dr. Jim. Man, I love you too, my friend. I appreciate you. I appreciate you so much. And, man, I am like just about out of time. But I see Neri T in the house. Brian Dowdy's in the house, man. Emmett Morrison, Oscar Martinez. Man, Donna's in the house, man. Jackie W's in the house. Caleb's in the house, man. I appreciate you guys so much, so very much. So I hope to see you guys on Sunday night in Boston. For those of you that will be able to make it out to the event, it's going to be great. I cannot wait. It's going to be so much fun. And we might even learn a couple things. Like, that would obviously be a bonus, I think, kind of on top of all the fun that we're going to have. And then Monday, I will be back. I'll be back in St. Petersburg, but whether or not I can do from theory to practice is still kind of up in the air because I will be up in the air. And so I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz_F3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. I started off as a chemist and engineer, and I love those fields, but sometimes when you're doing an experiment, you can go months without anything changing, and materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
What's one stock or trade idea that everybody's hyped on right now that you think is all smoke and mirrors?
It's got to be either the HIMS or the quantum computing stocks. I think those both volatilities are just so high that you can play into the up move a little bit. It's got a lot of call skew, so you can do call ratio spreads, diagonal spreads, all that stuff. But you can have some short delta there as well too. So those are the two stocks that I think are kind of a little bit overhyped right now.
So I think that the AI thing is a little bit overplayed, especially in the last 6 to 12 months. There's just been this running joke here of oh, just drop the words AI into your earnings call and you'll see a big green candle the next day. So I think there's a little bit of smoke and mirrors in that. Strategy-wise, I am still on the fence about the zero-day options. I haven't had much success doing them, so maybe that's just a bitterness thing. But I would like to kind of either get better at them or encourage people to see both, short-term plays as well as some that maybe have a little bit more days to expiration.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and my special Friday guest is none other than the man, the myth. Well, he used to be the legend, but now he's just, I don't know what you call him. It's Josh Fabian, everybody.
No legend, has been, never was. Once a dreamer, now just a realist.
Dude, this was really a quiet week. I mean, we thought it was going to be quiet, but holy cow. The stat I laid out this morning on This Week in Stocks, 89.25 points for the week up until today. And look, if we end up finishing lunch, that's going to hold up. That would be the lightest move we've had since the second week of December, 6 months ago, 7 months ago, whatever. Wild.
Yeah, nothing much happened. It's been hard to trade it. I've been trying to scalp it and do some zero DTs. I actually did a zero DT today. We did a research piece that said not to do them on Thursdays.
Why?
And a lot of our research is theoretical. I don't know, Thursdays is a tough day. Well, I can tell you from practical experience, Thursdays do not work out well. Thursday did not go well at all. But
so opening its zero DTE on Thursday, like that.
Yeah, something about Thursday that they didn't work out as well. It was the worst. I don't know. I don't remember the exact. It was just the worst performing day. And I replicated that yesterday. But it's just been, it's been quiet. It's been
how often do you see a research piece that you like and I'm going to try that? Because I feel like you do that a decent amount.
Yeah, I do actually.
If we have 5 pieces, we got more than 5 pieces. I don't know. What do we have?
We have at least 5 a week.
At least 5 a week, right? So out of 5 pieces in every week, would you say you?
Now I know everything. I don't know everything. Now it's you know so much, and then you find a style that works for you. And I would say when I first started with the network, I was probably changing things up a lot more frequently as I learned things. But then you kind of find what works for you. And I might see something and go, that's kind of interesting. Like the 0DT stuff, like I put the trade on yesterday, and I knew in the back of my mind that Thursdays could be more challenging, but I'm going to do it anyhow.
We can pull up the platform, actually, as he's talking about this.
But yeah, so it turned out just turned out to be right.
Yeah, I mean, I asked the question because I think it's interesting. Sometimes I feel, like you said in the beginning, we all are trying to figure things out, and so yeah, it's like I mean, I say this like unabashedly. Like when I first started trading, I was watching Kramer every day, like for real. I was watching it, and I think a lot of people are like that, right? Like especially that's a big network. People obviously, this was 20 years ago, and it was the one person that I found was talking about some of the stocks that I was watching. And then after, I think maybe 2 years in trading, I was like, this guy's crazy. This guy doesn't know what the hell he's talking about. For real.
Doesn't know what he's talking about. What is happening here?
Yeah, it was like, oh my God, right? Like it was a trip. And again, he does know what he's talking about. He did trade at some point in time for a long. He worked on trading floors and all that.
Sure. It worked for him, right?
Exactly. Exactly.
Yeah, I was the same way. Yeah. I mean, first book I remember reading was by Peter Lynch, like back in the mid 80s. It's like you try and replicate things that people have had success with, or Market Wizards, right? I don't know if you read any of those books. No. But sorry, I didn't mean to interrupt you, but I know where you're going with this. You just realize like, okay, this is what worked for these people. But then you start to realize as you get a little bit older, each one of those people had their own system that worked. And it's because they had to figure out what worked for them. And that's what we all do ultimately is, what works. I scalp. I'm pretty comfortable with it. Some people buy and hold. Some people do covered calls or just short puts. It's like, okay, well, what works?
What works for me a lot of times is buying momentum names further upside, further out, and just letting it cook. And this is cooking. It's cooking. Hell yeah, dude. Silver, let's go. You know what I'm saying? Now, why it's working? I think mostly because I believe it or not, look, this was not an easy trade. I bought this trade on a breakout. This is what it looks like when you buy something on a breakout off of momentum. I bought it on this day. But dude, this was 6-8. I mean, this is a month ago. I had to sit through all of this chop, and I actually even rolled it further out just earlier this week. So I had to sit through all of this. So that's not fun. But finally, this has been the payoff these last 2 days. This has been great. And I part of this trade definitely probably belongs to Chris Vecchio. And I mean, we talked about it a lot on Futures Power Hour, but and most days, look, Chris has been bullish silver forever. I mean, Chris likes silver here. Like he liked it everywhere. I didn't really fully like it until I saw this huge breakout, and I said, ooh, this could really have legs, because the other thing reason I liked it is once it really made the huge move. I'll tell you what really did it for me. 20 years. Once it made that big breakout day, I started thinking, oh, okay, now it's eclipsing old levels, and it could retrace somewhere up here and maybe get to 40. And so that was my whole thought process. Now, I had to wait a month for it to happen, but now it happened. So now that it happened, I got a position notionally. And this is just real talk, so people can understand how you like work with the trade. I got a position it's worth like what is it? It's $3,200. This is a $2,500 portfolio. That's more than 10% of the account. Now I got to start thinking about some stuff. And I think again, I got the 4042. This is the Z expiration, so it's not trading 39.15. It's actually trading 39.60. So my thought process is if it gets to 40 honestly, it would be nice if it did it on the close. I haven't decided yet whether I'm going to wait to see if it gets to 40 between today or Monday, or just go ahead and close, but I still want to participate. And at that point, I might just, and you see I already got it queued up, I might just buy like a few silver calls in SLV for a total of $400, right? That way, it's like I already made the move. The hardest part about something like this is like you still think it's going to keep going, right? And you want to stay in it, but you also don't want to lose. But this is a way to keep participating with $400 as opposed to $3,000 on the table. And if I lose that, you know what I mean? Like I'm cool.
You're still ahead. Yeah.
Still ahead.
Yeah. That's always where it gets tough. Is I don't want to be done yet. I think there's more to it, but at the same time, I don't want to risk everything. So. I don't have a silver position at the moment, but
now as much as I can talk about the winners, I can talk about losers too. This damn copper, this got me this week. So these were supposed to be part of a pairs trade, such that if initially I put them on and I was long the silver for like 1,600, I was collecting like 700 in copper total. I would have lost 900 if they both just fell. Well, one of them went up first, and it wasn't the one I wanted to go up first. And copper took this big move. I mean, it kicked me in the ass the other day, and that sucked. But I'm really glad that silver's at least making the move now. So now I'm like made more than whole, and I have long gold too. So that's kind of working a little bit today. So overall, I'm up on these metals, and now I got to figure out what I'm going to do. I don't know, man. I still feel like what'd you think about the silver thing the other day when that happened, when that went down?
Honestly, I had traded silver earlier this year, and I don't even remember how I did it. So it wasn't anything great. I hadn't looked at it, and when I saw the move that it was making, I took it off my screen. just like I don't even want to know. It was one of those things where it's like, you know what, you just don't want to know at that point. You missed it, and I don't want to. That's when I make bad decisions, is when I've gotten out of something and then it finally does. Like, I'll give you a great example. It was yesterday, that 0DTE trade that I did, it didn't work out. And it broke through the upside. And then right after the close, we got the Canada tariff thing. The market, it turned and fell, and like the revenge factor kicks in, right? I'm like, all right, I'm going to make back. And like, you know what? No, just don't. Just stay away from it. And so same thing with silver. When I saw it finally make that move, I was like, you know what? Just stay away from it, because you'll do something. I won't trust myself. I'll do something stupid.
Yeah, I normally wouldn't have gotten in this trade. Again, I only got in it because, prior to recently, I was like, okay, gold and silver and copper have been trading together. Usually when one is up, the other is up, and vice versa. So I'm just going to be short this 10-cent wide. But again, silver is a big contract. I mean, they're both big contracts, actually. And so, yeah, I mean, this thing right here, like just this penny difference is max loss ends up being like 1,800, which ends up being like 1,100 for me because I collected 7 in the beginning. So that sucks. But my whole thought process, I always thought initially, it didn't go the way I thought. But I thought if this would have been trading here, I thought silver would have been trading much higher. And it eventually happened. It just didn't happen in the order I thought. But yeah, you're right. Revenge factor kicks in. And so initially, after that move, I'm looking at this chart. And, what does that look like? Well, that looks like this chart, right? Crude. Yep. Couple of days. It looks like that. It looks like ZB. All of these things where we've heard, something pushes it up, and then all of a sudden, eventually, a cooler heads prevail and it fades. And so initially, I was like, you know what? Copper's probably going to do the same thing. Let me add on another contract. And then I was like, you know what? I don't know if I should do that. I don't know. This commodities, you just never know. And I'm glad I didn't. I'm still not really interested. First of all, we all know this for many of us who watch this thing. The initial day of, and even the day after, you really couldn't put anything on. These markets are way too wide. This thing always trades thin. I mean, it always trades thin.
It was criminal the day.
It was criminal that day. Yeah, market makers did not step up at all. It's seemingly fine now, but again, and yeah, I mean, I'm not interested. I got the contract I got. I'm still just gonna play it and keep it for the mean reversion if that ever happens. But I mean, you do get losses, but sometimes the wins come too. I'm lucky on that one for sure. I'll take it.
Yeah. I also tend to stay with the things that I know and that I'm comfortable with. I didn't try and trade copper at all. I don't ever trade copper. And when
this is my first time.
Is it? Is it really?
It really is. Yeah. Most other times I didn't want to trade it because I could, look at the volume. There's never volume.
Yeah, it's thin.
Even though you can get a trade off, it's no volume. But I was like, I have no one to blame myself. And again, I only did it as a result of doing those two together. I do consider myself pretty fortunate because the manner in which this happened, again, the whole mention of 50% tariffs, that was a one-off for copper. And so I'm just glad that silver decided to follow a couple of days later. For real.
Yeah. Well, it worked out. It's all that matters. I'm getting like whiplash. I'm looking. Can you see my head moving around? Like I'm on this new monitor that I'm not kidding you. It's this wide. It's so big that it's like watching a tennis match and sit in front row and you're just doing this.
So I should move around. Is that what you're trying to tell me?
I don't even know where you are. I'll be honest. I don't even know where you are on the screen right now. I hear you, but I have no idea where you are.
I'm just like, hear Jimmy. You can't hear Jimmy. Man, as I'm looking, I thought you were going to say whiplash because a lot of things are moving. Because this is
things are moving.
True. Things are moving. Look, obviously copper and silver, but look at crude. Crude's up 3% today. Yeah. Bitcoin obviously is still making moves. Surprised it didn't go to 120. Do you think that was the top? They didn't actually go through 120. You think that's it?
Probably short term, yeah, short term. But
have you noticed how high some of these futures have gotten again? Like this one, this is MBT. It didn't used to be $4,000. It used to be like maybe little under $3,000. Now it's $4,000. You looked at a micro in a while, MES?
I haven't traded the
me neither, but they're like 2200. It's 2200. It was 29 the other day, I thought. Maybe it's calmed down some. Micro Nasdaq 3200. This used to be like $2,000. Those margins have been up there and they've stayed up.
You need intraday futures margin, dude. You gotta get intraday futures margins.
Yeah, but that doesn't help me unless we're actually moving around quite a bit. On a week like this week, I don't think intraday futures helps you a whole lot. You know what I'm saying? Because it's not like we moved a bunch intraday and you were able to take it off at the end of the day.
That's true. Although I'm looking at,
I know.
I'm looking at
I've had it. I've used it before plenty of times.
I'm looking at SPX right now, and the zero DT that I put on was, I put on the 6255. Whoa, hey there, lights flashing in my place. That was a straddle, and then I bought wings that were like 30 points out, and I closed it earlier for a couple of points. I'm like, whatever, I'm done. It's noon. It's Friday. I don't want to be in this thing, because we got up to like 62, 67, and like whatever. Yeah, now we're right back at 62.55. That thing would probably be almost a full winner at this point. It's like these are the things that just make me nuts. Like I can actually handle the loss. Like the loss on the SPX trade yesterday, whatever. I was past it. I was at the gym, and I'm like,
you sound like you're past it. Yeah, sure.
I was like, shit happens, whatever. But these are the ones where it's like, okay, I know exactly what the position I had on was. I know what I got. You see that? Do you see that light flashing?
No, you're losing it. You're losing it. I don't know what you're talking about.
No, I got a new lamp, and it's like fading in and out, and it's. Dad, are you here?
Yeah, you might be. We got CPI next week. I think Tuesday.
Yeah,
let's see. 52. It is. Next week is a big week. With macro and earnings, and then the week after is
a bigger week.
What?
A bigger week.
A bigger week with earnings. Not as much macro.
No, but I think the 2 weeks from that. So next week you got banks, and then I know you have Netflix.
Yep.
And then 2 weeks from now.
I don't assume you're trading earnings with any of like banks. Yeah.
No.
Neither am I.
I don't. First of all, I don't trade banks. Period. Not for earnings,
I would trade this with my calendar call earnings play. If it were down here, I would play it. But up here, I don't really have much interest.
No, I have very little interest with markets at all-time highs and volatility relatively low. I might do like something with the futures, just how they might react overall. But I individual names, I don't like that risk.
I have Netflix calendars, but they're like crazy. Like they're like
that thing's gonna split like 12 for 1.
They're like 1,500 and 1,600 calendars, so like way upside. I'm long.
Only thing I would do with Netflix would be like a long play on it, because I do think that the like that 12 for 1 split, it's got to be coming, right? It's got to be.
I mean, actually, that's a good point. I might try to do at least one more of those. Because and that's the best thing about it. Like if you can have calendar calls like way upside, and if they start talking split, people are just going to start buying. It's not going to start. I would love it if that news starts coming out, but as of yet, I haven't heard it. You're just creating speculation. You're creating. Here's
speculation. The thing, and people say this all the time, that you split the stock and the value should theoretically be the same, but that's just not true, because you make it accessible to more people. You create a supply at a level that generates demand, and certain prices for stocks, a $1,200 stock, that's just not affordable for a retail trader if you want to trade round lots for most people. So you start looking at 12 for 1 splits, and it's a way to unlock shareholder value in a certain way. So, Amazon was around that level.
But that's why we've always touted the efficiency and ability of using options, right? For like names like this, honestly.
Yeah, actually, 100%. So you look back at Amazon, Google. Trying to think of a couple others off the top of my head. Tesla. You get around $1,000 and splits become common.
Okay, this is becoming ridiculous in bonds. Look at this. Why the hell bonds down this big today? I gotta adjust this position, bro.
I can't find bonds on the screen. Hang on.
CB, I know you got your huge monitor. I gotta adjust this, man. This is ridiculous.
I'm gonna have to get long bonds here pretty soon.
It's crazy.
What's crazy about it is, so in addition to this massive monitor, I've got my TV set on in the background here, and all they're talking about all day is the pressure that is being put on Powell to cut rates. Meantime, it's like every time they put pressure on him to cut rates, bonds fall. It's like
that's what
the bond market's FU. It's like the bond market's FU to this whole thing, right? It's like, hey, we got to cut rates. Bonds just drop a point.
It's crazy, dude. It's crazy.
It really,
and it does
really
keep
is. But it makes you wonder, like, what is the bond market seeing? You got to ask, like, is it seeing something, or?
No, you're right. It's one of the harder things to ever do is to fade the bond market in either direction, because bond traders always really know kind of some. But at the same time, you just try, and again, I'm not trying to. When I try to fade it, I try to wait when it gets to kind of these really somewhat depressed levels. And again, I give myself time. Like, this is not the normal tasty trade. I'm not going 45-day window, because again, we know things decay in that window fairly well, and I'm trying to play upside. So I just go further out and try to use that extrinsic to my advantage. In the event that things do turn around, which there's times where it turns around. We've seen that throughout this year. I mean, look at how many times we've seen a reversal in bonds in either direction. Like just this year alone, I mean, we saw this move it was down. Then we saw this big move up in February. And then we saw, I mean, obviously this was a crazy move. I almost discount this because it was Liberation Day. It's hard to discount it. But again, big move heading up into it and then boom down. So bonds have been like an interesting trade if you've done it at times this year. I mean, really, you usually don't see bonds move like this.
As you're saying this, I'm buying. I'm going to buy a bond future. I'm buying futures.
You are. Look at you. What are you doing? Micro or something?
They don't have micros. I wish they did. I bought the big boy.
What?
That's right. I stepped up.
What? Ladies and gentlemen, he's buying the big boy.
Listen, I said to myself the other day, if they get in the 112 handle, I'm going to buy him. And I missed it.
I heard you say it. I was there.
And then they touched what, 114?
Yeah.
Yeah. And I was kicking myself. So, I stepped up. Which means we're probably going to the 111 handle.
Dollar did bounce back throughout this week. Oh, not dollar. Where's my dollar? Dollar did bounce back. Is it still positive right now? I'm trying to see.
It is. Yeah. I'm short the euro.
Yeah, I'm short the euro too, but it does seem like the yen was the one to really get short. And Chris said that. I should have listened to him on that one. You should always listen to the FX guy. It was just hard to ignore this. It's hard
Chris
to ignore.
Does silver trade and the yen and
yeah, but he did silver trade like a fundamental dude. Like he's been long silver for the last like year and a half at times. Me, I just waited until the right time and then got in. That's how it's done. You know what I'm saying?
Christine, I'm not smart enough for bonds either, but I'm taking a shot.
You gotta wait. You gotta wait until the right times, right? I mean, you do. Yeah. I mean, this right here is the right time, I think, to be short the euro. Again, it hasn't. I just say this because it hasn't moved the way that the yen has. So he's right. I mean, when I first started talking about getting long the dollar, it was right here. It was right before the break, and it was the first and the second, and we talked about it here. And it had quite a move this yen to the downside. I decided to put on euro just this week. I just did it on Monday. And but I do like it. I mean, again, you can see it's starting to turn down, so I'm gonna stick with it. I'm cool.
Yeah,
with it.
I am as well. Yeah.
You got anything interesting going on this weekend? I think I'm gonna go see Superman.
I'm gonna see that probably next weekend when I've got my sons with me. This weekend, no. I had an intense training session yesterday, and I'm dead. I'm so tired. It's ridiculous. I'm gonna go lay down as soon as we hang up.
Well, if they have Cooper Flag on TV in Summer League again, you got to watch him. I watched him last night.
I saw him. Oh, him and Bronny going at it.
Yeah, they were going at it. You saw that?
Yeah, I saw some highlights. Yeah.
Yeah, it's good stuff. All right, man. Thanks for coming on, dude. It's our time. Yeah. Folks, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Well, welcome to the end of the week. My name is Tim Knight. I'm here to show some charts to you. It's a pretty good day. Most of the stuff I'd like to see red is red. Most of the stuff I want to see green is green. And we'll be highlighting some of those. A lot of big movers today, so let's dive in. The spider has been hanging out for 6 trading days, going nowhere fast. It was kind of an unabashed blast-off mode, and that kind of ended on the 3rd of July. And since then, if you look at it here, we are actually a little below where we were back on July 3, just kind of ambling around, going nowhere fast. There's a lot of events under the surface, but in the broadest sense, there's been a week of nothing. The diamonds are off a little. They're below their lifetime highs, as you can see. Some items like semiconductors continue to be just white hot. The diamonds, not so much. Here's the small caps. They're down especially hard, about 1.12%. The RTY is down, about 27 points right now. And, the analog is dead and buried. We all had a lovely wake for it. But this is still, the fact there's so much overhead supply is meaningful, because unlike, say, the SMH, which can just merely blast higher, especially led by the $4 trillion NVIDIA, the IWM doesn't have that blessing and benefit. It's struggling with the overhead supply, which is why it's down about 10 times as much as the NQ is right now. Much, much weaker. Just in passing, Mexico EWW, don't look at this very often, but it's kind of stalled out as well. It peaked right here. Let's zoom in on that. It peaked right here. Also on the 3rd, has been kind of slip sliding away ever since. There have been, as I said, plenty of action under the otherwise boring surface. I was just noting CNC, which had its own explosion last week, complete collapse. It just keeps falling. Sometimes you get one of these dead cat balances, people will jump in because it's very, very cheap compared to how it used to be. Doesn't seem to be happening here. This is Centene, and I first talked about this as a short idea when it was up in this pink zone here, and it took its sweet time, but eventually gave up the ghost. But since then, it's just extraordinary because here was the huge day. This was back on July 3, which otherwise was a record for the market, but it was a terrible day for CNC. And since then, it's just slipping. So we're at a new multi-year low here, to say the least. We're at the same price level now. Well, let's just see, $31. We're at the same price level now that we were over a decade ago. Not many stocks you can say that about. Over 10 years, net, no change. March 2015, that is something. Costco continues to slowly slip lower, and we are beginning to cut below the support here. Let's change that to suggest what's going on here. We are having a bit of a failure here, which is good if you're short this particular stock. So that's making very subtle progress lower. I talked about it yesterday because they had on Wednesday afternoon a big pop based on their sales report, but it just rolled right over yesterday and it's slipping lower now. Another short position from a good day. Hims, talked about this yesterday as well, off about 4%. So I've tightened up my stop on that one. And another one doing all right. Nike, NKE. This one is slipping about 2.75% right now. So all in all, positions doing pretty well. There's a couple that are up today, but like 0.2% or something like that. Nothing too nasty. There seems to be a big theme lately that anything that's not the dollar, anything that's kind of antithetical to the dollar is doing great. It could be crypto, it could be precious metals. And to combat my reputation as a perma bear, I have been trying to mention items which I'm bullish on. Months ago, I was pretty adamant about silver. About 3 or 4 weeks ago, kind of discovered palladium. I haven't shut up about that. And then even Bitcoin, for those of you watching all week, on Wednesday, I made mention that even though Bitcoin was stuck at the same price it was way back in December, I'd said that it was at the cusp of what could be a breakout. And if it did break out above that level, it was off to the races. And that's exactly what happened because we've blasted about $10,000 on that just in the past 48 hours. Let's look at some of those odds and ends. Driving all of this, of course, to a large degree, is the dollar itself. This is the USD over the JPY, cross rate against the yen. And it's not doing hardly anything right now. But as you can see, it's been quite weak for the year. I believe I read that this is the weakest first half of a year since 1973 for the dollar. And it doesn't exactly look poised for greatness now either. So this is just a Forex rate, a cross rate, but this is a nice illustration of how vulnerable I think the dollar is to further weakness because we had a big top here and a big top here and a giant one here, much bigger than the other two. But with all that going on, here's Bitcoin. And when you and I met on Wednesday, Bitcoin was hanging out round about here at this bar. So we peaked on this on Inauguration Day, appropriately enough. And we matched it and matched it and matched it, but couldn't seem to burst past that. But about 48 hours ago, when we were looking at this chart, I was just noting that even though it'd been kind of a dud for 7 months, from a classical charting perspective, it looked ready to just rock and roll. I mean, if nothing else, we got this cup with handle pattern here. And so whoosh, up it went, particularly yesterday. So that's been a big winner. And I think what a lot of people are thinking is, are we here again? Is this the beginning of another big run? Well, could be. That's the tricky thing about lifetime highs is that, except for doing a classic measure move, there's not much to go on. There's no overhead supply. There's no gap or resistance or anything. It's just like, who knows? But it's done very well last couple of days. But as I said, about $10,000. Ethereum also is doing quite well. However, I do want to point out this trend line on this one. Unlike Bitcoin, which is at prices never seen before, Ethereum is way below its own peak and is mushed against this trend line. So that might be it for now for Ethereum. It's had a very good couple of days, but that is a very meaningful resistance point in sharp contrast to Bitcoin, which doesn't have anything like that. And MicroStrategy is up, although not as much as you would think, because as you know, there's a big Michael Saylor premium on this stock. So, yes, it's up about 1.5%, but that's pretty tepid performance considering what Bitcoin's doing. IBIT, which is the big ETF for this, lifetime high and up 3.71%, so more than twice as much as Strategy. Oddly, Circle Internet Group, which is really focused on stablecoins, is just stinking up the joint. This had peaked as a very new issue at about $300 a share. It's around 183 now. So it's approaching a 50% loss just in the past couple of weeks. So that's interesting considering how positive crypto is right now. So just kind of a quick stroll through crypto there, because it's obviously over the past 48 hours been finally kind of coming to life in a big way. As I said earlier, semiconductors seem to be able to do no wrong. There's article after article about the first $4 trillion company in history, NVIDIA. And it's up at the moment a little bit, so about $1. It was at a higher level earlier today, but it's been, so some profit taking going on there. SMH, which is the semiconductor sector ETF, is also up, although just a little bit, like 0.1%. And it looks like a lifetime high close on that. But we cut above a few days ago, former lifetime high on SMH. And as I say, NVIDIA continue to push higher, lifetime high intraday, probably a lifetime high close. Well, diamond hands out there have won the day. If were I one of the lucky folks holding this stuff, it's a little nerve-wracking at these nosebleed levels, but doesn't seem to have had to catch his breath so far. And in other semiconductor stocks, these are continuing to push higher. I went ahead and threw my arms up with AMD and Micron. AMD is up about 1.5%. It's just the gap's long since closed, but it's just too close to pushing past this peak here. So I got other fish to fry besides that. I am still with ON though on semiconductor, which is down a little bit, and that's kind of amazing for any semiconductor company to be down on a day like this. But it's a really nice pattern. This huge top, gobs of overhead supply. The gap is sealed. So sticking with that trade. That's actually I think that's my only semiconductor position at all, because this is a very hot group right now. Kind of dangerous to play with that fire. One group that was also very hot until about a week ago is quantum computing of all sorts. We've talked about this before. This is a very, very speculative technology. Revenues and certainly profits are years and years, if not infinity away. But it has been surging for most of the year. For the moment, it's kind of stalled out, even with tech so strong. Here's QUBT, which hit a peak here on the 7th and basically has spent the week going red, 5 red bars in a row. In a market like this, pretty extraordinary. QBTS, this one too, has been slipping. And RGTI, pretty well known, this also has been slipping lower like so. This one had peaked right near the beginning of the year. This was just an explosive move. This, I think, when everyone kind of turned their heads in attention to look at quantum, because from October, this went from penny stock up to in the 20s. So about a 2,400% gain or something like that in the span of just 2 or 3 months. So obviously got a lot of people's attention. Oh, and nothing to do with quantum, but still tech related. One long idea I offered a few days ago is doing nicely. Unusual Machines, UMAC. This was that drone maker. Forgot the exact day we talked about this, but I pointed to the fact that it had found good stability at the support level, and we had growing volume. And I guess some news came out today from the Defense Department, which is very positive for it, but we've got a 43% gain on UMAC. So again, trying to beat the Permabay reputation with these long ideas. So that one's a good one, 43% up in a single day. Getting to, speaking of long stuff, Palladium, sensational week for Palladium. Even at this distance, you can see we have broken out of the base. We've been watching for this. So that's big news. Just a tremendous run up in this this week, and today just exploding out of that base. Here's PALL, which is the ETF for it. It's getting close to its own breakout, not quite there, but getting, as I said, very, very close as we've been successively gapping up higher and higher. So terrific week for precious metals, basket bladers in particular, and silver, our old friend, which I've talked about a long time longer than palladium, gapping up to a new multi-year high. So people really turning a cold shoulder to the dollar, instead preferring Bitcoin. And if you're like me and like to actually hold this stuff, silver, palladium, gold, that kind of thing. Just to close out, my bond short, still doing okay. We're down about 1.5% on TLT. Not to keep making the same point, but that pink pattern, keep an eye on it. If the day comes that we're a cup below it, I think that's a pretty big deal. So, so far, so good. Anyway, that's the end of quite a week, and earnings kick in big time next week. And we'll have a few weeks of excitement there, so that'll be fun. Talk about something besides the Fed and tariffs. So have a good weekend. I'll see you here on Monday. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
But last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
$50,000. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like, ah.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live on this Friday, the end of the week. Sosnoff, even the S&P is down. Hold on one second.
1450.
My clicker's not. Yes, I got that. I don't think my clicker's working right, guys. Check out my clicker there.
Go call hymns, 1-800-HYMNS. Get your clicker working. You're going to need your clicker by tomorrow, like.
I'm going to need my clicker big time. I can't show I can't show my screens, boys.
You don't get a lot of chances to use your clicker anymore.
I can't do my presentation. I mean, if I can't present, what am I supposed to do here?
Yeah, just keep the lights off. It looks better black. You're dark like that. You're okay. Everybody wins. Everybody wins.
Look, just the Batman sign comes up. I don't know what happened. My platform's there. Help me, guys. Help me. Anyway, even the S&P down 1575. NASDAQ down 39 or 40. Russell is down 27. The Dow is down 266. The Russell, the weakest of the group, has been the weakest all day long. No, 6308. I said 6,300 when we started the week. I get a
absolutely
carrot?
Nothing this week. We joked about how this week was going to be an inside week with like an 83, I think, dollar move for the week. I think it's more like 30 at the end of the week.
Yeah. We've had an intraday further, but yes, you're 100% correct. Not too much movement net.
Not much.
Volatility down 5 cents, 1910. After trying to catch a small bid, got up to 1960. That certainly didn't help. Oil, big mover, up $2. That's a 3% move. Ethereum and Bitcoin's been big movers. Bitcoin's up $4,400.
Yeah, I mean, but the thing that didn't make any sense to me today, I mean, the weird thing was coin was down with Bitcoin having its biggest move. That's kind of like got ahead of itself. That's kind of weird. Yeah, it's kind of a mix. There's some stocks that are, Nvidia, Tesla, Amazon, all higher, and then you got and Google and Microsoft, and then, other stocks like Coinbase, Netflix, Meta, PLTR, Apple, all lower. It's kind of weird little, I guess, two-sided. I don't know.
Circle down 17. That's a big one. App down 12. Another big one. You mentioned.
Yeah, we
Meta
started the week off short Circle, and guess I should have held it. It's funny. You would think with Bitcoin up, Circle would be good, and then it's the exact opposite. It's it's like anybody that says, "Oh yeah, this is so easy." It's not.
No, it's never easy. And I mean, listen, we were down 30 handles, 40 handles from here. At one point in the overall market, Bitcoin,
pre-market, but the whole rest of the day we've spent, really in a
stair-stepping small higher with a non-event. Look at the amount of volume, 908,000. I mean,
which the futures aren't nearly as bad as I think. I feel like the stocks were. I mean, the biggest disappointment today was probably, the bonds down 112. I mean, what I don't understand is. Of course, I don't understand why, but I mean, you can take all your rate cuts off the table. I mean, off the table.
Oh man, bonds. I thought were going to lead the market a little bit weaker here. I mean, there's been a couple of times Nasdaq earlier in the week. Now bonds under 113 again.
Well, and notes are about to break 110, which is, I mean, they're just a scotch over 110, so that's kind of like a critical area for them. So yeah, they don't. None of that stuff looks good. I bought them a couple times today, the bonds, and the simple answer is I bought some at 18, some at 08, and some at 28. That is not a good job out of me. In the
well, you didn't know they were going to have such a wide range.
Well, of course I didn't know. I would have just waited.
You didn't get the. Oh, you would have waited, right? I mean, wouldn't you have waited if you knew?
Yeah, I didn't get the memo. I stayed away from crude oil, which is good, and the biggest loser for us today was bonds, but also gold. Gold up $46.
Gold up $46 is a big story, but look at silver. Let me say it one more time. Look at silver up almost 5% here, Sadnoff, $1.86, 39.17. What?
Yeah, I mean, it doesn't. Well, we sold some premium in there this morning, and it actually, if I remember correctly, it kind of worked. They took some. Yeah, it did. They took some juice out of the silver strangle today, so maybe it's getting near the end of its little goose here. But the problem in gold and silver is not the size of the move, because $46 when the IV is really high is something. Sure. But the problem in there is that the IV has crashed. And so now you get a $46 move, and you feel the pain delta-wise. Sure. You get the pain when the IV is low. You don't feel the pain when the IV is high. A lot less to lose. But just truly a mixed day. Another good day for premium sellers across the board, and another when things like Bitcoin are up, it doesn't hurt you because nobody's short it, so it's not something, you're not short premium there. That's not a bad thing. Today it's just, for me, just bonds and gold, and everything else is pretty good. Just the regular market move, man, that's a tough one today.
That's a doozy.
There's nothing there. All the indices are, S&Ps, Nasdaq. Nasdaq was the strongest relative. Russell was probably the weakest relative, but still, you can't really. None of it counts. I mean, I'm sorry.
None of it counts. Basically, a skosh off of all-time highs. I mean,
yeah. One nice reversal today was in United Airlines. I mean, that stock was insane.
It was up $10 or $11 yesterday, wasn't it? Down almost $4 today.
It was up 12. And it got ahead of itself.
Sorry. You have a position in it. I apologize.
Yeah. And Delta, the same. Well, Delta's only down 20 cents. It was down more earlier. You have a position in both of those. So we made a little bit of money back.
More importantly, Love's only down 19 cents.
Praise the Lord. Praise the Lord for a little love here. Before I forget, what time is it? Before I forget, it's 2:42. There's 18 minutes left before the cash markets close, and then the futures close at 3:15, and they kind of trade the post market till 4 o'clock. But before we forget, this is the last chance to our team's heading out to Boston today. So if you want to go to Cambridge on Sunday night and see Dr. Jim and the group, it's a packed house, sold out show. So you can still, there'll be a few cancellations last minute. So if you sign up, I'm sure they will let you in. But it's packed house. Dr.
Standing room only. Some are arguing with Sadnoff. They're there. They're ready.
They're not there now, but it is. There won't be standing room. There's plenty. We'll get some more seats, but it is full. And so if you're going to go see Dr. Jim, we're really that's a good thing for us. Keep the crowds coming, and it gives us it allows us to keep pushing out these live shows all over. Dr. Jim, Katie, Mike, and Nick, Tony, and myself will be in 2 weeks from today. We'll be in Denver, so you can sign up for that too. tastylive.com/events, and then a month after Denver, we'll be in Chicago, and that's going to be a fun one at home. And I just found out today we are going to give away a special treat at that show. We have the show's on Friday, and we have some Cubs seats, the best seats in the house, the owner's box, one of the owner's boxes. Tom Ricketts seats. We're going to be giving away a couple of the owner's seats for, I think, a couple of sets of 2 for the next day on raffle. If you're coming to the Chicago event, so you can sign up for that, but you have to be in person at the Chicago event. Anyway, I just found out today. It looks like we're going to have at least 2 sets, maybe more.
Very nice.
Yeah, and if you're by yourself, you take Tony. Oh, look at that!
I'm gonna require a hot dog. I'm just telling you that right now.
Look at that! You got your clicker working. I was gonna let you borrow my clicker, but you know,
I got my clicker working.
I feel a little uncomfortable with you and my clicker.
Yeah. Hey, we used to do the show on my birthday week. My wife wants to know how come, like, what does she do wrong that she has to spend the weekend with me? Usually, you know, it was my weekend was when you did the, you know.
What? Yeah, I know. This is a bad situation for her.
Yeah, she wants to know what the hell she ever do to you.
I know. She's in a lose-lose situation.
She's always been kind to you. Always had a nice thing to say.
No, she has been, and I feel really bad for her because this is when she has to pay it forward, and it's just horrible. Even my wife said to me today, she goes, "Oh my God, poor Chris."
I feel her pain.
That's exactly what she said. She goes, "I feel her pain." Oh God, poor girl.
I mean, she had to pay for a week in Sardinia. I mean, that's got to be more than just a birthday, for crying out loud. She's a captive audience. I mean,
it's pretty bad.
At least my wife can get in the car.
So, yeah, poor girl. I mean, what can we say? So let's see, what else do we got going on here? So as we
respectfully stumble into the close, down 17
I mean, not really. It was pretty much a nothing week. I think we're closing we opened the week right around 6,300. We opened the week above 6,300, I think, and we opened lower on Monday, so we were below the number.
We opened 6,307, starting off with 6,306.
So we're basically unchanged for the week.
Basically unchanged for the week. It seemed like it was a lot more than that, but yeah, basically unchanged for the week. Kind of crazy, right?
Yeah. Next week we get into what we've talked about before. The expiration in July happens to be extremely well. The last 11 years, 9 up and 2 down.
Thursday into Friday's print.
Yeah, but that's a lot how you position yourself. But the last 25 years, it's a little bit more mixed than that. I can remember some Julys going way back where it got a little ugly, but not the last 9 years, not the last 11 years.
Here's a trivia for you. What do you think the expected move is for expiration July 18th from now?
You mean from today until expiration or just
what
for
the freak does the computer say on the right-hand side in the
I'm not looking at
parentheses? Yes.
Well, I'm not looking at it, but I'm going to say,
you don't look with your hands. You touch with your hands. So close your eyes.
Numbers? Are there numbers next week?
What difference does it make?
All right, I'm going to say 93 points.
It's not bad. It's not bad. And there are some jobless claims coming in on Thursday, but it's not going to help you.
Let me revise. Expiration, dead, this is 87. 87.
Good revision. 74.
74 is really low.
Really low.
Yeah, 74. I thought it would be a little higher. Yeah, 74. That's low.
73.32, Thomas. Summer is here.
That is super low. Yeah, not crazy about that number for next week. It does not. I mean, it bodes well for my positions. We are going home today slightly with a few short deltas, not a lot, and a very low theta and very low capital usage. and very low extrinsic. We need some. I thought today, man, this morning early on, I was like, man, we're gonna get a little pop here and Vol. We could get some positions on, but it did not work out that way. I mean, we did get on 10 new positions today between fast market and a few other. No, I'm sorry. 12 new positions. I forgot about silver and bonds. So 12 new positions today we did get on, but it didn't really move the dial.
No, it didn't really move the dial. What do you think about silver with a 44 Ivy rank? You know, volatility is hard to find around here, and you've got good volatility in silver the last couple of days. What do you think?
I mean,
anything to do?
Silver, well, I had to give up 2 ticks to get in and 1 tick to adjust. So, you know, and we still made a little bit of money in there today. So I guess it was okay. You know, if you don't set your expectations too high in there, I think you're okay.
I mean, one tick is $5, right? 0.001 is $5.
1 tick in silver.
0.001.
Yeah, 0.000, whatever it is. Yes, but yeah, 1 penny is 500.
That would be 1.00.
Yeah. It's a big contract. You sell
it's a big contract. I was just trying to quantify. You said how much you had to give in, how much you had to get out. You're talking about 10 to 15 bucks.
The strangle I sold is the strangle I sold. Let's just see. Hang on 1 second.
Well, here, if you go to
let's just say it was about 75 cents or something. So that's about $3,500 or something, whatever it was. You know, $3,800. So yeah, it's a pretty big premium.
Yeah, it's a pretty big premium, right?
Yeah. Yeah. So you can, you know, if you can take, I don't know, 10 to 15% out of that in a couple of days without taking any heat, that's kind of the game plan.
Understood. Now, 1 point is $5,000.
Yes, 1 full point is 5,000, but 1 penny is 500.
That is correct. That's correct.
Yes.
0.1. Yes.
Yeah.
Right.
$1 is 5,000. So if silver goes from
39 to 40, it's $5,000.
Yes. Yeah, it's a big.
Then I got to come for a loan.
Then you got to come for a loan. You got to sell your car. You got to do, you know, all the things you got to do all the time.
Hey, Nicky told me a story. He said you told him he was the only one that ever paid you back.
Nicky Batista?
No, Tooch.
Oh, yeah, probably. All my friends are deadbeats. I don't have a single friend.
I paid you back.
Yeah, it's like pulling teeth with you too. I mean, all my friends are deadbeats. Yeah, I don't have any. I stopped thinking of the world in those terms. If I did, I wouldn't have any friends left.
You really have a skewed view of the world, my friend.
Don't worry, my friends, my kids, everybody, you know, it's okay.
Everything's a one-way street.
Everything's a one-way street. It's all right. It's all right. I'm getting, you know, I'm
getting used to getting numb to it.
I've been numb to it for 40 years. Yeah, I've been numb to it. Yeah, some people they spend their whole life. They're like, this guy owes me, you know, this person owes me $500 or $5,000, and they'll think about it like they can't sleep. And I'm like, you know what? I don't give a crap. It is what it is.
You're good.
Yeah, can't think about that stuff. Yeah, let's mark them down, boys. Let's take them a little lower on the close. You'll help out the good kids here. I could really use maybe a little markdown.
You've had a good week. Your theta, your delta theta is minuscule. I mean, your buying power EXT is low.
No, I can't. I don't like. I want to have a bigger position on. I just don't feel like I have the. I don't have the conviction right here to get long or short the market in any kind of serious way, and I don't have. I don't feel strong enough. I mean, the only stock I felt strong about getting short today was Coinbase, and I missed it. I just wasn't aggressive enough. And earlier in the week, I wanted to get short Circle, and I did, but I didn't make enough on it. I wasn't aggressive enough. I'm looking at these levels here. There's a lot of stocks that I think are, let's put it this way. I'm having a hard time finding stocks that I would buy here.
Right. Okay.
I looked at potentially buying some BABA today, but it's the options there trade by appointment. And so it's not an easy stock to like sell puts in or something like that. So I don't love that. And I mean, what else on your screen looks even remotely?
Not a lot.
I mean, BABA and Baidu are the only stocks that I have on my screen that look even remotely cheap to me. Every single stock I watch looks crazy. I mean, Nike back to 72. I mean, that stock was barely 59, like 2 weeks ago.
Yeah, we were hanging out hat in
I know.
Nike. We were hanging our hat in Apple for a while too, trying to get a little bit. Then the stock rallied. I mean, so
yeah. I mean, there's if you want to look at anything that's a little bit weird today. I mean, and I don't even count this as being weird because I just don't even understand it. But the VIX one day was up a lot today, which all I can think of is maybe somebody was nervous about the weekend or something. I don't know. Or maybe everything just got too cheap.
What about Costco? Sadnov, would you be a buyer of Costco here?
No, what are you going to do? No. I mean, I'd rather buy Costco.
It's got a low IV rank. It's actually increased a little bit to 12.
I mean, I'd rather buy Costco than sell it at 970.
Me too, but a little diagonal spread in there. Come on, join the party. I put one on the other day. It's not working. I would love to have you in there.
Markets are wide.
It's hard to get. Drowning man reaching for a straw. I was trying to do something.
Yeah, I did a couple of trades today. All of them are kind of mixed. I mean, we made a little bit of money on some stuff, but nothing. Nothing crazy. Yeah, I know. I looked through everything. Nothing crazy. I'm just seeing if anything we did this morning is, they're all up small. Like we're up a couple of ticks. We sold some premium early on. That's about it, but not enough to take anything off the table. Let's see, what else do we got here? Because we are kind of like, this is a limp into the close.
Yeah, it looks like it. Even the S&P down 19, NASDAQ down 38, Russell down 31. That's your big leader to the downside in the clubhouse. I mean, even the yen didn't do anything. The euro didn't do anything. Yeah.
No, they did absolutely nothing. The euro was basically unchanged. The Canadian dollar was basically unchanged, and the yen was down small. But no, pretty much nothing. I need.
How about Lilly? My Taiwanese sources want to know why you're not buying Lilly. That's the one you got to buy. That's the one.
How would I buy Lilly?
Well, that's the argument I was having them via email, so I figured you could say it verbally.
Well, it's one of our biggest winners today because.
So there you go. See that?
Because we're short strangles in there, and the strangles in Lilly came in almost 80 or 90 cents today, which is pretty good for a Lilly strangle. So it was a good stock.
Volatility has crept up there. Earnings are August 7th.
Yeah. I'm not going to, listen, anybody when you're down to Lilly as what the stock you want to trade, you might as well go play.
You might as well, you want to hope the bell rings.
You might as well go play golf.
Yeah. You got 60-cent wide markets. Yeah. I get you.
Yeah. You might as well go play golf.
What are you doing here with your bonds? You trying to give a little bit something back to the
No, I just bought some. I bought some at 28. I'm just scratching them, or 29, whatever. I forgot. Whatever. I just scratched them.
Yeah, you bought them at 29, sold them at 29. Yes, you are correct.
It was a scratch it was like a 4-hour. It was going to be a scalp, and I waited.
It was going to be what, a 6-point scalp? What did you expect? 5, 8? What did you expect?
Well, I wanted a full point, but I didn't get it.
Oh, you wanted a full point, but you're settled for a scratch.
Well, I held them for about 4 hours and ended up scratching them. So I don't know what else I can do. I thought I bought the bottom at the time. I could have sold them for about 4 or 5 ticks, but that's about the most. So no, I still lost money in the bonds trying to scalp them today. We'll get them back next week. I own those things.
I know you do. I know you do.
They are a tightly wound instrument. But again, I talked about it earlier in the week. The outlier stuff is what's holding those bonds down. And we'll see. Let's see. S&P's here. We got 2 minutes to go. And down 23. I mean, talk about closing a mid-range, right?
This is it. Yeah, this is it. We started the day down around 35 or so and got down to around 45-ish or so and got up to around 15-ish or so. And, yeah, right here at down 23, you're mid-range for the day.
Yeah. I mean, bonds closing on their lows, notes closing on their lows, the rest of the indices closing kind of mid-range a little bit for the whole rest of the day. Silver and gold closing close to the highs.
Volatility completely unchanged.
And most of these stocks, they're trading within a few pennies of where they've been trading for the last couple of hours. Mm-hmm. So this is one of these days where the traders, you know what? You put your hands into your pockets and you don't try to force anything. This is like trading in Christmas.
Yeah.
Hey, you don't force anything and wait for next week, and hopefully, the market doesn't take too many breaks. So if it gets dull for a couple of days, that's okay. Don't worry, it'll be back, and there'll be plenty to do.
Well, let's hope, Sadnov. We got less than a minute here. Even S&P down 24. Say something profound for us for this weekend, Sadnov. How about this? Give me some advice. I know you've been 63 before with the challenges of being 63. What words of wisdom do you have for me?
Oh man, last time I was 63, I was in a lot better condition than you. I mean, it's a sad, what's happened to you. It's just
you had more FU money to bribe her with. You're 100% correct. We're gonna take a quick 90-second break to make her do those nasty things you want. We're gonna take a quick 90-second break and come back. We got more Tasty Live Sadnov well for the weekend, and then we'll come back on Sunday. Stay tuned. Sound good to you?
Sounds good to me.
Peace, everybody. Hope you enjoyed the week.